Alright, guys, stream is live. If somebody can check, test that, that would be a great. Okay, screen.
There we go now, man.
Good.
Hope everybody had a good night's sleep and you're ready for this, ready for today.
Alright, everybody can see on YouTube and everywhere. Everything is fine, look like, right? Okay, welcome guys, everybody, welcome to Top Trading Edge, and wish you a great trading day. And start with a disclaimer: this video is for education purpose only, not recommending it to buy or sell any sort of stocks or investment. For your financial advice, please consult with your professional financial advisor. If somebody can test,
Yeah, YouTube is good.
YouTube is good. Just give a little opportunity to other people to join. So if somebody who is not using, does anybody has a question morning, just give a little room to others to join in.
Do you want to make me co-host? I want to pin some things.
Yeah, that will be great help. So I'll make a co-host. Okay, sounds good. Let me set up. We have another 8 minutes to go. Okay. Meantime, I need to set up all these first before I jump in. So let me do this. Control tab. There will be trading. Okay. Guys, Bitcoin is going down. Okay, so maybe watch out the coin today. I'm gonna coin today also.
Hi, Dave. Hi, Gopi.
Good morning, Josh.
Good morning.
Sigma.
Good morning.
Everybody.
Good morning, Josh. Good morning, Sigma. Good morning, everyone.
Yep, good morning guys. Good morning.
Josh, if you want to go over futures.
Yeah, I'm gonna do real quick before I want to set up. We have another 7 minutes to go, I guess. So I'm gonna let me set up this, at least our wicks here. This is our SPY would be here, and then I need to add a couple of more our load multiple charts. Then I need to also add one more load, this one. So I'm gonna add it up. We're gonna keep eyes on all these. Market, Microsoft was here. Okay, futures. Okay, let's keep up futures on. Finviz. Okay, Finviz future is right here. Okay, so right now futures are not moving anywhere. We are just right there. It's pretty much right there. So slightly slide down. But what I wanted to guys talk to you about PPI data. Did you guys notice the PPI data today?
Massive, man. 12%. 12%.
Josh, for some reason, I'm actually trying to pin that right now in the live chat. It's not letting me. If you look at what I just tweeted.
Oh, okay. Please do that.
Pin it.
Yo, what happened to that? What
It won't
happened?
let me pin.
Yeah, right here. Alright, so guys, if you can help before we start, if you can retweet the first, if you click on my profile, tap Trading Edge profile, and if you can retweet and like before we start the market, so Twitter can crawl to the audience and we can invite more people. That would be a great help. And you can also click on, instead of retweet, you can quote tweet. You can do quote tweet also, and you can do that way also. That would be a great help, guys. Okay. Yeah, appreciate. And let me get rid of. Okay, somebody can check on YouTube because yesterday, you guys, YouTube, we had a blunder. I think yesterday did not record on YouTube. Somehow, YouTube is like causing us a little issues. We were not live on, it did not record it on YouTube yesterday's stream somehow. So, well, right now is live, so it's good.
Hey Josh, can you try to pin something now before market open? I want to see if you can do it. It's not letting me.
What did you do? Did you send? I cannot because I'm a computer unless you. Okay, let me see.
No, I'm on my phone. I'm saying pin something in the live chat so that everyone can see it.
Did you send me something?
It's not letting me. No, I just tried to retweet it. You know, when you find a tweet and you go and pin it in the live group.
Mm-hmm.
It won't let me do that for some reason.
Oh, okay. So you're talking about the which tweet you do? I need a tweet. Which tweet to pin?
Josh, just tweet anything. Tweet anything to make sure it works.
Oh, okay. I see what you mean. So we have the right here. Let's just.
I tweeted the CPI data.
Yeah. So that pin that you have that one also, and let me.
Yeah, I'm trying to. It's not letting me.
For example, this one retweet right here. Okay, check that. I just tweet that.
Yeah, try to pin it in the live.
Pin it in a live. Okay. How would I do that, man? I gotta go to my profile. No, somebody said I need to. Man, we are wasting too much time on this one actually every time. Got to open tweet.
Yeah.
Yeah, and then.
It's just nice to post things as we go on.
Man, I'm sorry, man. I don't want to waste time, your time, everybody's time. Just whomsoever wants to join.
No, it's fine. Not big deal.
Yes, let's get out of that and just. Okay, so one more important thing, guys. Yeah, I think I wanted to discuss about it. Do you know why semiconductor will have a big trouble? Why all these factories are shutting down and halting their production? Anybody knows real reason?
I think one of them is Neon from Ukraine.
Yeah.
So there's that's completely going to stop.
So right now the highest neon provider, 45% to 50% neon, Ukraine was the provider, right? Now when it's semiconductor, whenever you want to build the chips, you need the neon laser for the laser processing. You need that, and they are right now completely devastating. So there is no neon coming completely. Now imagine what would happen this war, how long gonna go, and plus how long will take to re-establish the country back, right? So that, keeping that thing in mind, I think all these semiconductors and all these auto industries and all, they will be struggling for this year 2022 until this whole thing get over, then re-establish. Remember, re-establish. Nothing is right now there which is constructive from Ukraine. So there's a lot of months, lot of quarters, I would say. All this auto industry will be suffering. So somebody was asking me about auto. I just keep that thing is in, because all the company, GM, Ford, Tesla, NIO, they are shutting down their factory, closing down, I mean halting their production, because of that is the main reason. And that reason is very, very important. We have to understand why they are doing that. So being long or any auto industry for a time being, for a couple of quarters, 2-3 quarters, be a little vigilant, because earning will be horrible. So that's why even Tesla was not able to provide the all the cars which they supposed to promise with regular car. I'm not talking about like a Cybertruck. Market already open. Wow. Okay, sorry, I did not focus on that. Yep. So market is going trading.
Man, yeah. Did you hear what Kathy Wood said? So she's going to make 50% compounded, year over year in ARKK if you invest.
Wow. Okay.
So let's see.
We'll see.
I think the printers should start before that.
Printer should start. Dude, this today's data is not great. So let's see right now. Keep eyes on the tick right here. Tick is positive at this point. We got to keep eyes on it. How far it tick is positive, and then see market maker which direction they are heading taking into, and
Oxy cranking up. Oxy.
cranking up. Okay, good. Mm. Oh wow. PPP. Look, QQQ guys. Pressure on a tech stock. Pressure on a tech stock. VIX is still okay. SPY is still okay.
See, yesterday VIX was negative, man.
Uh-huh. 1 second here. VIX is just of. Hold on, I got to. Let me see the pressure. Trying to analyze. Hold on. Oh, UVXY is flying right now. Hi. I will see. Okay. SPY wants to go. Tick is down here. UVXY. Let me see here what exactly happening. Wow, pressure is down on Tesla, guys. Tesla is super down pressure. Keep eyes on it. I'm not. Okay, then AMD still there. Shopify has a super pressure, guys. Shopify has a pressure down. That and ARK has the highest pressure right now. ARKK and PFE wants to go up. Nvidia has a pressure down at this point. Twitter is still holding the ground. Okay, so nothing crazy movement happening at this point. It's just okay. And let me look at other side. Neo wants to still holding. Neo wants to pressure down, but let's see. Crowd is holding. SPY wants to go up. Nvidia now bouncing, but still direction is not decided yet. Microsoft is going okay. Let's keep eye on the tick wants to go. Tick is little positive, still wants to go, and but the QQQ is vulnerable. Something is cooking on.
VIX going down.
Yeah, VIX is going down. Ticks is still 380. Keep eyes on ticks because that's the total your buy and sell.
Yeah.
Okay, so let's see the pressure, how far this pressure builds. Okay. Let's see. So market is right now positive so far since morning. Yeah, Dow is positive. Nasdaq is now turning negative. Slight negative. Ticks are holding. SPY is still holding. Pressure on QQQ right here. I don't. The ticks are ticking higher now. Yeah, the VIX is going down, and
I mean QQQ calls at 340 strike.
Okay.
13th expiry.
Okay. Good. PFE. Okay. ARK is going down.
Yeah, I bought a chunk of TQQQs.
Neo going down. Okay. Very good. QQQ calls. QQQ is right here. Wants to shoot. Alert on CCL bullish. CCL is looking good. CCL is looking good.
Oh, CCL has a 100-day right there. 100-day right there, man.
Going into Apple calls.
Yeah, VIX is going down. Let's see.
Stocks is up about 1%.
Yeah, VIX is going down. TIX is going down. Okay, still keeping eyes on it. Good morning, everybody. Good morning. Welcome, welcome. We have a limited space as a speaker right now at this moment, guys. So if somebody does not speak in, if anybody has the questions, we can still wait a little bit. And the QQQ wants to go. Sigma, your QQQ is flying. Yeah, it's flying. QQQ. SPY wants to go. Market is going up.
And then Apple calls 167 strike. 167.5 strike, 14th expiry.
Okay, so keep eyes on.
30% on QQQ right now. If you're in it, don't be afraid to take some profit.
Yes, absolutely. Ticks are positive still. Ticks are positive, and the VIX is down. VIX is down.
Josh, feel free to keep like live updates. As soon as you see a downtick turn, let us know.
On QQQ, right?
On SPY, QQQ, VIX,
Okay. Yeah, keeping eyes on it. I'm putting it on, but looking good right now. The ticks are going positive, means the bulls are lining up, so it's looking good.
And just a reminder to everybody, Fed talks at 11:30 a.m. EST.
Oh, okay.
BTU, 5% up, 4% up, sorry.
Yep.
ARKK green for the day. Tesla about to turn green.
Nice. Keeping an eye on all the indexes here. Yep, everything looking positive. QQQ looks okay.
Occidental turning down.
Oxy.
By the way, just so you know, there was a space earlier this morning from Bloomberg in regards to natural gas and Russia. And so that could be influencing some of the natural gas things. I know oil is up about 5% too now.
Yeah, gas is up 7%, natural gas.
Oh, okay.
Like half profit on QQQ.
Nice. QQQ looking good. VIX is going down. Ticks are taking higher. Looking good so far. Ticks are positive. QQQ wants to go. Great. VIX is rebounding. SPY is still looking bullish. BR right now above the oscillator is almost like 70%. So that's bullish at least. So looking great. QQQ is great. Everything is looking great. QQQ has a gap to fill probably. No gap. No gap. Whenever you exit Sigma on QQQ, let me know, so I'll keep up that.
50% profit here. I took 50% profit.
Okay.
And I'm letting like 60% profit, and I'm up 50% on the other remaining.
Okay.
I'm letting it ride.
Okay. Okay. So right now, I'm gonna keep eyes on the ticks. Let's see. Looks like VIX is settling here at this, but we are looking like trying to diverge and come in. Let's see if the this is a bearish diversion. Let's see how far. Ticks are still holding, so it's fine. QQQ have a little pressure, but still need to keep eyes on it. Still is good. It's not bad. SPY still has it has good, looking good still. Yep, the VIX is going down, so still is good. So far so good. on the bull side.
And Nail is up 5%. That's all the home building stuff.
So let's keep our eyes on futures. I mean, let's take a look at the sector, and if I keep a sector, right here, exchange.
China Internet also up.
So basically, yeah, tech is up. Everything is up today, pretty much, except all the inverse. Yeah, all sector area is right now looking good.
Finance down though.
Finance. Oh yeah, JPM man, earning had a horrible. Keep eyes on that. Actually, that would be our indicator. We're gonna keep eyes on that too. But QQQ wants to fly. SPY wants to go. QQQ wants to go. Yeah, VIX wants to go down. Yeah.
Tesla green for the day.
Tesla turned bullish right now. Yep. Okay.
Travel's also up today.
Travel is up. Nvidia going up. Twitter is flying high, so looking bullish. QQQ bullish. Everything look great. Snap is great. Microsoft is great. Nvidia is looking great. We're gonna give a little time to the market.
I'm trimming Apple 30%.
You taking a profit on Apple?
Profit on Apple, yeah.
Nice. Market looking good. SPY wants to go high. High would be 441. Another dollar to go.
Take a look at Tesla, Josh.
Tesla is Tesla 998. Oh, calls for flow. Flow. Be careful on Tesla. That's what I tell you. I mean, I know you like Tesla, but whatever you make money, you got to be careful on Tesla. Okay. Tesla wants to go, but there's a lot of puts on Tesla coming in right now. A lot of put. Last 4 puts are Tesla, so Tesla going up, but the put is coming in. But recently came $1 million call on a 975 call in the money actually. But other than that, everything is small. But the big one is this call.
Tread lightly,
Yeah, big one is call. So bull flow, right here. The TSM is bullish. Tesla is second bullish, and bearish is Amazon is bearish, guys. Look at the Amazon then. Why Amazon has a bearish flow and Microsoft has a bearish flow since morning. So Amazon, look, keep eyes on it, Sigma. Keep eyes on Amazon, man. Amazon. No. It says bearish. No, but I would not go anything right now. Look, hold on. Let me give you a little bit. Keep eyes on Amazon. Amazon is right now a little bullish, and how far it can go. And then because I see a bearish flow here, so we got to keep a little eyes on it. See what happens. Just keep eyes. I don't trust too much. I know it's bullish, bearish, but there are people putting money here. So. Let me see Amazon here. Amazon is somebody bought a call, just a small call, 22,000 is nothing. 23,000 nothing. Let's look at all the calls. I mean everything. Let's look at it and where market is going. So if I keep eyes on it, TFC, any big entry recently? Let me look. Big entry. These are all Nvidia calls. Big entry on that. Apple has big entry. Nvidia and Apple. People are bullish on Nvidia and Apple. Yeah.
Apple up 40%.
Nice. Tesla got a put right now. Two different puts, but small puts. Okay, people are putting small puts. They all can be washed out. Okay, BCTX. All right. Apple looking good so far. Nvidia is looking good. Okay, Twitter looking good. Okay, Tesla looking good so far. Shopify looking good so far. Okay, nice. Okay. Great, I sold my most of the SQQ. The market is still rebounding. So all the bear will be trapped, right? You think by today or tomorrow, or maybe not, and maybe not. What do you think? Market?
I think the bears will be trapped.
Yeah. Going into when's bank earnings tonight?
Bank earnings tomorrow morning.
Yeah. Don't hold. I wouldn't be holding bullish going into that.
Yep, exactly, because market is right now turning the table, and I think look at that. Look at the Twitter still is holding. It's going good. It's parabolic move. Twitter.
I'm up 80% on QQQ.
Nice. Look at the QQQ, guys. It's looking good. Okay, QQQ looking good.
Sigma, I'm on calls with you.
But remember, guys, one more thing. I give you advice. Keep eyes on ticks. Ticks are still 200, 300 positive, right here, 200, 300. It's not like 1,000, 800 here, right? So we are still right in the center area. So whenever you want to take the profit, try to take the profit as you get. Don't be super greedy.
I'm scaling at a QQQ.
Mm-hmm. Exactly. The moment we become like other, I'm not telling to you Sigma, but anybody who is watching or doing anything, they have to be very careful. Even though it fly, don't think what left on the table. Just think what you got, and be happy with it. So yeah, nice QQQ. Yeah. QQQ. Look at the QQQ. Took the roof off. QQQ took the roof off. Today's. So now be careful here.
I only have 10% of my position left. I'm just gonna let it run.
Nice, man. Great, Sigma. Great job, man. Really loved it.
Sigma.
Good
I'm
job.
up, doesn't matter. But the thing is, I'm liking doing the smaller positions, and it's just I'm able to control it better and not be greedy, and this is a lot better.
Yeah. So the perfect time to take the profit right now here, because we are hitting the high. The gap is filled, and I'm gonna go back to the control line and check over price of control here. Let me see 5 minutes, 30 minutes. So I got to turn on my indicators. Right here. Okay, yeah. So
Can you take a look at Tesla?
Are you in Tesla?
Yeah, I'm in Tesla too.
Okay, so Tesla right here.
105.
Okay, so what I see right now, Tesla has a resistance, guys. Be just a little bit careful, okay? Why? Look at this. Okay, this is the resistance I draw. If this resistance breaks, right here is a major resistance, guys. So just little bit watchful right now here. If this resistance is a major, is coming out all the way from the top 5 days ago. So that is resistance right here at around 995. 995 resistance. Okay. And ticks are ticking down. No, I'm not powerful like positive. We need more ticks, like 400-500 positive. So okay.
mRNA up, man, today. I don't know what's up.
mRNA.
Yeah.
Oh yeah.
Not big.
You may look.
No.
Okay.
Yeah.
Okay. PFE has a weakness. Twitter got a little weakness. Shopify got a weakness. ARKK got a weakness. AMD got weakness. Whichever symbol you want to look. Snap has a weakness. Snap has a weakness. I'm not gonna right now enter anything, and we're gonna find the weaknesses and see what it is.
I just scalped Tesla a little bit because it's playing the ATR.
Tesla has a room to around 1000 if you look at yesterday's high. I mean, pre-market high was 1000, but again, remember that's is this line coming in is this area. So right here around $1,000. That's it. Tesla.
How about Nvidia, Josh? Where do you see it going? I'm in a trade.
You in the trade Nvidia? Hold on, let me see where Nvidia go. Nvidia right here. Nvidia has a weakness, guys. So if you look at it right now, SPY, if compare with the SPY, this is SPY right here, right? SPY has a 2-3 candle and this is going down. So Nvidia has, I would little bit right now, I see weakness, slight weakness based on last 10 minutes, okay? So Nvidia has a weakness, I would not go in along. Intraday next, has a weaknesses. Divergent coming on S&P 500. We're gonna keep eyes on it. How far this divergent right here. So we're gonna see this is a bear cycle. Bear cycle. We're gonna watch, see how the ticks are ticking. If the ticks are going negative, then little alert sign on a being long. So still okay, good. Look, the bear cycle ticks are ticking positive. So that means we are still holding. Bull is still holding. Yeah, so it's bullish, looking bullish, because why? The negative divergence still holding, the SPY is holding. SPY is holding. Otherwise, normally SPY would give up in this divergence, these bear cycles. SPY is not going down, it's holding. I mean, ticks are holding, it's holding, so looking bullish. QQQ forming a bull flag. QQQ forming a bull flag right here. Bull flag. Maybe little early, but keep eyes on it. That's the game probably right here. Yeah, QQQ holding up.
I got out of the QQQ, took my profit, and I'm going back in, waiting for the entry.
Just be a little careful right now, too early, low. Okay. We have divergence, so guys wait, okay? Just little go easy, look for the divergence, but QQQ has this divergence is holding, so it's looking to me a bullish, and the QQQ price of control line is 440. This divergence, man, that scares me right here. You see this divergence and pointing down, that means boy, bear are trying to fight here. Okay, you see these ticks, be careful going long right now, because we have divergence. If the pressure, if this candles over here leaves, and we got to build a resistance right here, the price of control line is now resistance. We did fight for around 7-8 minutes right here, and look like divergence is the MACD is pointing down, signal line is up, so MACD is going down. Be careful, just a little bit careful. Yeah, watch out guys, getting long. Okay, right now just wait. We need to have the price of control line cross, this blue line cross, then I would go more longer side. We need to, and then you can be, though there's a divergence right here. We'll wait and watch. Situation like this, gotta be very careful. That's it, because it can go either direction. That's why. Yeah, so if people are requesting for being a speaker, we don't have space here to add more people unless somebody wants to get off. So just to let you know guys, if anybody wants to help each others, please So what happens is if you're not talking, you just what you do is you become a listener on the right corner, on top right corner.
For now, if I need to talk, I'll request it back.
Yeah, no problem. So I appreciate, man. So if anybody is not speaking and you want to help others, then you can write on corner. There's a 3 dots. You can go click on that and you become a listener. Alright guys, price of control line diversion was correction here. You see this diversion? Look at that. So pressure is downward now. Look at that ticks. Now they turn in negative. So watch out guys, be careful. This is something scary. I someone added SQQQ.
I took Tesla for I made a profit, then I went in again for small loss, but I'm up 10,000 so far in the first 25 minutes, and this is probably the best trading I've done.
Great. Confidence is important. It brings you the confidence.
What's that?
Confidence. So whatever you right now doing is great.
It's about position sizing, not having stop losses. I'm only trading 3 names, so I can watch each one, and you know, I'm not oversizing.
Gotcha.
Just look at crowd.
Crowd, let me look. Yes, crowd looking great, guys. Crowd, Shift, cybersecurity looking good. Yep, and NVIDIA has a weakness. You can see that right here. Snap has still holding. Neo still holding. Yep.
I'm still holding a bit of QQQ and Apple.
QQQ. Yeah, okay. You have 10% QQQ, right? You said?
Yeah.
Okay.
Good morning, Josh. Good morning, everybody.
Hey, good morning, John. What's up, man?
Just put printed, baby.
Put printed, baby. Yep. Today morning you bought a put?
No, last night I bought it and morning sold.
Oh, okay, nice. You like Tesla, huh? You always go with Tesla.
With you, man. You're the man.
Nice. Okay, nice. Okay. Twitter looks strong today. Looks like, huh? I mean, the way the things looking. Shopify now. Look at that Shopify, man. Okay. So SPY has a little movement going. Tesla has a bouncing now. PFE is okay. ARK is bouncing. Okay, let's take a look at what else is going on. Neo bouncing, holding. Yeah, crowd is looking great. It ran up from all the way to, wow, man, 222 to 230, $14 run up on crowd going today, huh? Crazy run up. $14. Watch out, be careful on now run up. It's whenever something runs up, be careful. Oh, Zim is turning the table, guys. Zim, keep eyes on Zim. Zim turning the table. Those who wants to be along Zim. So let me go and take a look at the Zim, man.
Is this for intraday or long?
Long. This is a swing, okay? So people can be swing. It can be like a month. So let me find option for that. This is month situation. Zim May.
I closed on all positions.
You closed in all position? Nice, great. Good to hear that you closed all your position. Okay. I bought some SQQQ 10 minutes ago. I think weakness is there. So let me see. I don't want to go right now Zim much, but I feel like Zim 56. Let me go and take a look at the Zim here. Zim is really bouncing or no? Yeah, Zim is trying to bounce. Look at the daily chart. Yep, bouncing from the support line. So I'm gonna start loading slowly. Look, but
Okay, I've got it.
but I'm not gonna buy right now, Zim. Okay, guys, because market. If something happens in the market, I'm gonna watch. I don't wanna go.
Yeah, QQQ and Apple, Tesla, all pulling back.
Mm-hmm.
I have a question, okay? Josh, Dave, Gopi, everyone that's speaking. What's your take? You think we're just going to continue to move sideways chop until we get those earnings from the banks? So maybe tomorrow would kind of be, we expect the same thing.
Look at JPM gap down and now it's going up.
What do you think, Josh?
Hold on, I could not get your questions.
I didn't get his
Do you think we're going to continue to move in this sideways chop until we get some, until we get those bank earnings, and then we'll get a direction more so?
Yeah. So, but again, Sigma, you should not be worried. Market is the way market trading. You doing the day trade, right? And you just continue with the ways you are continuing, and that would benefit you. Market can go up and down because market right now we have 2 days left, and I mentioned yesterday also. So let me go back to here and show you what I mean, right? So we have
but a day like today and yesterday, the day before, like it's just been it's been all right in the morning, and then during the day it's just chop, right? There's no real direction.
Gotcha. Yeah, so market maker, we have no control over how the direction they're gonna play. We have to come here and always navigate, go behind the market makers, and just scalp it. That that is the way I would think for next 2 days, today and tomorrow, because we have option expiry. This is month end option expiry month end option expiry, guys. Okay, so there will be a dirty game will be played today. So just be prepared for that dirty game. It could be any direction they will go. So that's why just watch out. Whenever the market gives the opportunity, take your money. Don't try to go long. Don't try to be on a particularly indexes. I'm talking about indexes. But if you want to buy a Zim or a Snap or Neo, we understand that part. That could be your puts or calls. That's fine. Long term, swing term, like 4 weeks, 3 weeks, that's fine. But something expiring there next week and all, no. Be careful on those next week expiry. I would try to close it today. Don't want to go anything next week, because market will they will play dirty games and you wouldn't even know, because they can swing. The whole swing is wipe out the whole thing, just like yesterday, right? Remember yesterday market was 300 point up NASDAQ, and the whole thing, the table was turned. So we do not want to be part of that, and it can happen, and in this market. So do not go by sentiment that hey, market is going to dump because of PPI data or because of this data. I would not go like that.
Josh, could you please check Costco? You had mentioned that it was on a downtrend.
Today everything is cost. Yeah, support is right here. Costco support is right here. Is bouncing from it right now. So let me tell you what Costco is a long term, but I don't know what your positions would be or not. But if you look at it right here, it has a support also. And if the market goes weak, if market finds the weakness, then Costco can go down. But today, so are you day trading on the Costco?
No, I have a 429 put.
429 puts. Okay. 429 puts.
Yeah, 580.
How much is the premium you must be paying on that? Wow.
Hey, Joseph. Yeah.
Okay, so trend line is here. Just market. We need to find the market weakness.
Sigma, I'm back in the calls and QQQ.
Market weakness.
I just closed down my Thinkorswim for the day, but what I was gonna do is if I continue to trade, it would just be like I would just practice with paper.
Okay. That's good, man. Good. So we
I'm
have,
done. I'm
yeah.
done.
Okay.
Yeah.
Ground sounds good. Costco has a resistance at 200-day moving average, which is right here, 587, and market rebound in the morning. But then right now the pressure is downward, so we give a little time on the Costco. Um, and big ticket item, you got to look at the theta would be how much would be on Costco. I would always short Costco in terms of stock wise. Buying options, it would be very dangerous on Costco because it's the premium, man. Okay. Um, you said next week, right? Costco short?
9.
429. Oh, so then as long as you have the time, looking at the everyday might not even help, but whenever you see some profit, 20%, 30%. So what I see right now here, we have to look at the daily. We need to break this support whenever market has a weakness, because last 3 days it went down and now today is holding. If the market find the weakness, it can break and go to 570. So just keep eyes on that. If you want, we can put a trigger here, and if something happens, I would come to know.
Hey, Josh, if you have a second, I'm in a trade right now.
Mm-hmm.
And I'm not gonna lie,
I cannot hear you.
Can you hear me now?
I'm sorry, what did you say?
Yeah, sorry, I think I was covering the mic. I'm in JPM puts right now. I can't tell if it's reacting towards the upside in regards to the general market or
JPM puts?
Yeah, because I saw further downside. I entered in at 127.77, and then it made that big candle up.
Yeah, you don't want to go into the over bank. Be careful on the bank because they manipulate that. So people think retailer think, oh, bank, I'm gonna short because their earning is weak, and market opens up with the gap down. So then I would not short it because already down. It from 132 to 127, $5. So how much you expect to go down today? So I would not have option opened up on this one because these are banks, and they know that retailer hate bank and they short. So I would not go in short, but now whatever is done. Yeah, wait, if market will give you opportunity to exit, some point of time you will have opportunity to exit.
Yeah, I'm looking at it on my chart, and it kind of has like a bullish setup with a trip. Like, okay. I don't know if I'd be shorting this right now.
Yeah, look, I mean,
on a 1 minute.
The overall daily chart is horrible. Only thing is 5-minute chart is just rebounding here. So give a little time, okay? This is market right now is just playing with the people's sentiment and pressure. So give a little time and give a time, okay? There is nothing is running away. Market.
Just really fast about JPM, Josh. Okay, what's happening tomorrow? Of course, and Sigma and you both know this. You have a lot of the banks reporting. You have like Ally reporting, Citibank, Goldman Sachs, Morgan Stanley, all reporting tomorrow. Wells Fargo reports. Okay, so here's what goes down on your JPMs. If we find ourselves getting bad reporting tomorrow on the banks, you're going to probably get a sympathy on JP Morgan of that going down. In that case, your puts will probably be in the money, or at least have a chance of getting into the money.
Okay, guys, just a little update here, okay? So QQQ look like double top here, right here, look like double top, and the VIX just gapped up all the way up like 70 cents. So just be careful right now going long on any stocks because VIX gapped up. That means the ticks are negative, means the sellers are higher than the buyers, and the QQQ doing the double top, and SPY is now below the price of control line, and we are also, oscillator is telling me that we are below, oscillator is turning into negative. So pretty much cycle is negative. So just be a little vigilant now. And look at the VIX is popping, guys. VIX is popping, ticks is going more negative. So it's confirming. Just be careful now. Whatever your positions are on. I'm just giving the running commentary, not scaring you guys. Okay. So if any positions you have to analyze your position based on what I just give a commentary. That's it. But commentary every time changes. Every 1 minute, 2 minutes, thing changes, right? Okay. So but Keep eyes on the screens.
Hey guys, anyone who's a speaker that's not speaking, we have some other requests. So if you guys have any questions or want to say something, say it.
Hey Josh, can you please quickly check AAL?
Quickly check AAL. He said
Yes.
American Airlines.
Yes.
Okay, you have a position. You have a position.
Yes, because when was coronavirus and lockdown, it was very down, and I think when will be summer and everybody after the lockdown want to go somewhere, it will go up.
Okay, so you have the position right now, or yes or no?
Yes.
Okay, you have the resistance at 200 moving average. Time to take the profit here at $19 era. 1888 is the resistance. 200 moving average, major resistance here. Time to take the profit because this gap up and go. I would take the profit, let the candle close above, and then I will buy back again, or it can get rejected. You might have a better entry point. So this is what I would do normally. Whenever I see the profit, take the profit and run, and wait until the resistance get clear. Okay.
Harshad and Tamer, you're at the speakers.
Okay, you can move me out from speakers.
I don't know which one his ID is.
I'm down only 12% on JDM puts now.
Hi Josh, good morning.
Good morning, man. What's up, man?
Good, how are you? Josh, any flow on CVS? I have a long calls position. I feel it's sort of basing here, not doing much. I just wanted your thoughts.
So CVS has a downward pressure today. Today is a downward pressure. We are below the oscillator. I mean, zero oscillator means it has a little downward pressure today. When are your option expiring?
In June. So I have.
Oh, okay. No, so this CVS will perform well. They are on earning. People, this CVS will perform. It's $2.16. They will have a great. So before earning, this will go. Right now, it might go up and down, and it might test your heartbeats, but at the end, it will perform. CVS.
Josh, morning, Josh.
Good morning.
Yeah, so about the semiconductor sector today is pretty up today. How about the bearish perspective, SOXS? What do you see?
SOXL bearish.
SOXS.
Oh yeah, you want to short it basically.
Yeah.
Okay, yeah, we got rejected yet here, so so I don't think so. Now SOX is gonna go up because 200-day moving average. So we are pretty much right here. I would not go and buy SOXs because we have a 200-day moving average resistance here. So just let this week go on a semiconductor. Let this week go, and because SOXL also finding the support at this area, and if you want to short later on, that would be good. But we have, remember, this is major short. Market maker shorted. They might buy back some point today, tomorrow, because month end coming now. Month end is today and tomorrow. So I would not go and short today and tomorrow. I will not short any semiconductor stock.
Yes. Also, TSM reports tomorrow. Also, Josh.
Mm-hmm.
Oh, and Josh, about like CVS and Walgreens, you're going to have Rite Aid reports tomorrow, and Rite Aid's going to have really shitty numbers. We already know that from basically, we found that out earlier this month. Rite Aid has horrific numbers coming out. So you might get a sympathy on CVS and Walgreens in a positive movement. That's what happened the last time they came out.
Joseph, what was what company did you say was reporting tomorrow as well?
Yeah, of course, Rite Aid. It's RAD. They're going to tank.
You said something.
I'm sorry. Yeah, they came out with some. One of the companies that monitors them came out with some really horrific reporting about their profitability. and they tanked
What's the
out. If you
ticker?
look at their numbers, you're gonna see them like just dropping like a freaking stone. And when that
What's the
happened,
ticker?
in the inverse, Walgreens and CVS went up.
What's the ticker?
R is in Robert, A is in Alfred, D is in dog.
So pretty much,
Josh, sorry.
No, go ahead. That's fine.
Josh, another point I was listening in, you mentioned about Zim. Yeah, probably wait and watch, but news came in that Bank of America is hosting Zim today, and they are looking through contracts, they're looking through customers, asking for extra allocation over the next 12 months. So I think that's the reason we saw a bit of a bounce. So good to keep a watch. Maybe the differentiation between transport trucking versus shipping maybe in the mix over the next week or so. Just wanted to mention that.
Yeah, great information. I just added a little bit Zim today, May 20.
Okay, you did. Okay, I'll keep a watch as well.
Also, Zim is very different when it comes to the marine, the maritimes, because it basically leases almost all of its ships. It actually owns almost none of the ships that it's running.
That's right, and it's very much spot rate. From what I've read and learned about it, it's very much spot rate oriented versus DAC, GSL. They have yearly contracts, right? TRT and all of those. So.
Yeah, exactly. It's just always important when you're looking at Zim. Anyone who looks at maritime is understand it's a very different animal than all the other maritime stocks.
Twitter looking great.
Josh,
Look at that.
If you pull up an X chart,
X.
if you're not, unless you need to look at something right now.
Okay. Well, yeah. X is
If you
right.
pull up an X chart and you, I was thinking last night. So like, where would be its next support if it's going to pull back?
Real quick, I took my profit from QQQ. I'm done.
Man, nice. You've been holding.
Good job, Dave.
Great, man. That's you got a stomach, man. You got a stomach. So the X has a bull flag too, man. It's just similar like bull flag type of thing situation right now. So support would be support. I mean, if it is market maker take it down some point, then it can go to 30, 34, 50, 34, 50, 34, 50, 34, 60.
So last night and this morning, I've been basically studying covered calls, like selling puts, and I just want to use it go over this as an example with your help.
Yeah.
I've only ever sold puts on one stock, and that was NEO during this big pullback after Jerome spoke. I sold a bunch of covered calls on it.
So when you do covered call,
You were selling puts or cover calls?
no, he's
Sorry, I was selling calls.
No, you don't want to. You when you sell the calls, mean you're bearish. When you sell the puts, mean you're bullish.
So I had calls and I had shares, and I was using my shares as collateral. So
Okay. I see what you mean. So
so you were doing cover calls.
cover calls.
Yeah, I was doing covered calls. Yeah.
You got to go.
I did it with the help of a broker. Like I wasn't that in tune with selling it, but I'm just educating myself on selling covered calls now. Like say if I wanted to own shares of X at $34, right? So say that's the next support, and then if it doesn't hit let's say I don't mind paying $34 for it, and if it never reaches $34, fine, I'll collect the premium.
So then you sell puts.
Pardon me? Yeah, then I'm selling puts. Exactly.
Yeah.
So, in the case with NEO is I had shares, and the stock was dropping a lot. So then I had like a $45 strike, selling a bunch of calls on it. So if I look at the $34 strike, even if we look into like say May 6th, $34 strike, it's $1.32. If you had say 1,000 shares of it, I mean you're still not making the whole ton.
But I think with Sigma, Well, I actually did, and mine expired tomorrow. I took all of my Apples, all of my Microsoft, all my Prudential stock, and put cover calls on it. I consider it basically like your bank interest.
Yeah. So if you had 1,000 shares of X, will be valued at 130,000. You basically be collecting a 1% premium between now and May for selling those puts. Right?
Yep. Mm-hmm.
You mean selling the calls?
Selling? No, you're selling puts.
Are you starting insurance, or are you basically
no? So you don't own any shares of X. You want to own X at $34. So you go and sell a bunch of puts. So that if it hits $34, you buy it. You know, you can get in your entry at 34. And if it never hits $34, you collect the premium. But I'm looking here, the premium on a $34 strike at May 6th is $1.30. So you'd only be getting, like, you'd be getting $1,300 on 1,000 shares, basically.
Exactly. You're basically selling insurance
on 100 contracts.
Yeah.
On 10 contracts. Sorry. So the way you look at it is just like an interest payment then?
When I'm thinking of basically, if I'm doing a cover call, I think it's basically just like bank interest. You know, because it's not a lot of money, but I'm realizing I always spend my numbers into what I think it, just where I think it won't necessarily hit, but kind of on that edge. I don't care if it sells or not. Because if it sells, it's hitting where I thought it would hit at a certain point anyway, and I'm collecting basically extra cash regardless. And that's why I don't mind shares as a long position.
So with all your longs, do you just sell covered calls throughout the year just to generate that income then? Because that's something I've never done.
Yeah.
Yeah.
On my longs, you know, I sell longs, I sell covered calls on my longs. You know, I have like 5% of my portfolio in Apple. I like 5% of my portfolio in Microsoft. You know, so why not?
Why not? Go ahead.
Oh, sorry, Sam. I didn't mean to interrupt. I think I'm getting a lag. Sorry.
The way I was looking at it is, if I just want to own a stock, why not own it and get this premium?
No, exactly. Well, that's the flip side of it, though. On the put side, if you're selling puts, you're selling insurance. And so it's basically you're taking the idea that, okay, I'll sell you insurance and I'll buy your shares. But you're buying into something that you believe that even if you got something and you're having to take this share at a price that's higher than the current market price, you believe that you'll recover it anyway in the long run.
Right, and why this came to my mind was okay, I wouldn't mind owning X if it pulled back, so why not just sell puts against it? And so if it does pull back, I'll buy it, and then I'll get the premium as well. But I mean, if you're buying, like I said, on 1,000 shares, you're only getting a $1,300 of premium. It's kind of like, I mean, if you're already planning on owning it, you know, it's almost not worth the opportunity cost with the money, unless that money was specifically just, okay, I'm going to have it for this
AMD rebounding, guys. Today AMD looking good. All the semiconductor looking good because they are covering their probably short. So AMD looking good, and those who are holding CCL, or somebody who has CCL, CCL broke the resistance, and now resistance becomes support on daily. That is a super strong. Sorry, I had an incoming call. That's the resistance, and now it's looking strong. So if somebody wants to take the profit or whatever the position, I think Anil or somebody who was holding on CCL, so it's time to take the profit here. Somewhere around $19.68 area is the profit, because you have major resistance, 50-day and 100-day moving average resistance. Once it crosses those, then it can go to another higher level. But at this point, we are heading to the resistance for CCL. It might go a little bit, give a little time today. It's looking good so far.
Josh, back to SOX. You had pointed out earlier it's on a major support. I have a few shares
kind of back holding, but
Which one?
just waiting as you Soxol shares. So
Yeah.
debating that tomorrow TSM's earnings and then a few earnings coming up next week. It is bouncing off major support, so hold it or exit. Once I break even.
Once you break right now today is the way symptoms are because it's been heavily oversold. So this is heavily shorted, right? So when it is shorted, you been bouncing today, right? So, and looking great. So let it go wherever it goes. It wants to go. Let it go and do not bother right now because look at how much time they short. Now they are trying to buy. So let it go today. And what is your break even is?
28.50.
28.50. Yeah, right.
Shares though, not futures, right?
Yeah,
Yeah, shares. I'm owning shares. Yeah.
Yeah, 28.50.
Hold the freaking things. Just
Yeah.
hold them.
Yeah. So you just hold it right now. No worry. Should be fine.
Okay, good. Yeah,
because you're gonna look at, how do I say this? If you're underwater right now on Soxol, just hold the freaking things. Unfortunately, it's gonna take a little bit of time for the entire semiconductor sector to come around. It might take near the end of the year to early next year, but unless you have to have that cash, just hold your shares.
Yeah, thanks.
Take a look at Facebook setup right now. Take a look at Facebook setup right now, Josh.
Facebook. So guys, SPY is right now doing double top. Okay, just keep eyes on it. SPY is doing double top, probably this one. So that little scary to me. So and then the ticks are ticking down. So again, it's too early right now. Still, we are in a bull trend, but when SPY does double top, just giving you heads up. Double top means may turn bearish. But again, we have to keep our eyes on it, so I will keep eyes on it. So I would draw this trend line. If we break this trend line, then it be super bearish. Then we can definitely go bearish. If this trend line breaks, I just draw. But today QQQ looks great right here. You see this because they are right now buying today. Last 3-4 days, all the bears. So they are short. They are basically buying back. So QQQ looks great today so far. Yeah, let's take a look at it. Sector. Nvidia people are buying. Okay, Nvidia somebody wants to buy the call. AMC puts calls. Microsoft, TSM, Uber.
And that reminds me, American Airlines is up like 8%. So that got a nice sympathy off of the Delta numbers.
Look at today, everything is buying back, market buying back. Everything is pretty much green, right?
Well, the things that are down right now are things like your financials and your health, and also your food stocks.
Yeah, financial is all pretty much Chinese sector financial. So
Josh, I'll join back. Thanks, everyone.
No problem.
We'll see you in a bit. Thank you.
Okay. Yeah, market is just trading little water like.
Yeah, that's what I mean. Like, until we get the bank earnings, do you really expect anything?
Or do I expect
Sigma, I see what you mean. Your question was like if it was the same thing like yesterday, swinging up and down, right? Just putting the premiums.
Yeah.
Yeah, it looks like they're gonna start doing that again. That's why I said I'm done for the day. Take my profit.
Yeah.
Although potentially at 11:30 when the Fed talks, could be a good time to short.
They're talking today?
11:30 EST Fed talks.
Okay.
Yeah, anytime they talk, short. Because they never say nothing good, right?
Exactly.
And is it EST where you guys live right now?
Yeah,
PST.
me too.
So they're talking at 1 hour? Okay. Good point. Imagine we're gonna see a nice wipeout from these bulls.
Market might give a tomorrow great opportunity for to because they must be right now today and tomorrow probably they buy back. We'll have a bull sign. So if somebody want to short anything, not today. Just let the market go whichever direction wants to go and wait for it. So that's what I'll be doing.
Yeah, Sigma. Thomas Barkin talks at 11:30 EST today.
Okay.
Joseph, let's just announce it when it starts, okay? And what on YouTube it is on or wherever it is, so we all could look at it if we want.
I just made a notation of it. I tend to make a notation in my notes of when there's going to be a Fed talk and like the different earnings, so I can kind of keep track of volatility. So I'm not sure where it's going to be broadcast. I just know it's going to happen.
No. We don't want you to broadcast. Just let us know when it starts. We'll look for it.
No, I'll start here too if you want. I will start it.
Well, it's like 1 hour. It's 11:30. I'll start like 1 hour from now.
Yeah, I'll keep eyes on it.
Cool, thanks.
CCL looking great.
Yeah, the entire travel sector is looking pretty right now.
So if anybody has a request, I can take that questions, guys.
Sigma, like to answer your question, right? If you look at the QQQ, you saw they brought it up and it just bring it right back down.
Exactly.
Somebody on YouTube. What's up?
What did you play? What did you play today, Dave? Just QQQ?
Yeah, if you look at the QQQ, how they brought it up just now at 10:30, and then they just drag it right back down. They basically made it look like it was going up.
What minutes? What time frame?
Right now, Dave. I mean, if I'm looking at like the Nasdaq, it's trying to work its way north. But I know that you only have an hour or so before it's gonna like get smacked.
I'm looking at the 1 minute time frame.
I just had somebody who's listening right now message me and ask what they should do with the AMC shares. Their average is $18.16.
AMC?
I've never, I don't touch stock like that. But.
These are, man, he's a pump and pure dumb guys, okay? So, now he's holding the bags or holding the hope, basically, so he's going to come and pump. So now if you really want to be if you want to be a long, then you have to wait for the meme to come out as a what you may call the Iron Man, and then it can go back. But you need a meme to help you out here, because fundamentals are very, very weak on this. So if you look at this fundamental negative earning per share, so based on this based on the revenue, the stock deserve to be $3, $4 stock, right? But stock did go $30, $35. Why? Because memes are pumping. So when meme pumps, this stock goes up. So you need to take the profit at that time. But if you're holding your hope and it's gonna go to moon, then nobody can help you. So stay away from this kind of play, guys, and catch the flight which really you can benefit out of. It really should have a fundamental strong. Buy the company who has a fundamental stock. So if the stock tanks, you will be all right, and then again stock can go back based on their earnings. This company doesn't have the good or balance sheet, so got to stay away from this kind of company. And normally I believe in not holding hopes, and I always believe in taking loss and keep move on to the, why would I stick to the mud with the mud is sticky, because you can't get out of the mud, right? Unless you have a hope and holding whenever the meme comes and give you a nice ride up. Just like here, look at the meme took about a year to come back and then give a little ride. Look at how long people had to wait for meme to come and help, right? Same thing here. We don't know how long they will come back again to help you guys, right? So that's why I like to, what I believe in is taking a loss and pause yourself and stay here if you want to, and understand how we analyze and look for a good opportunity. You will find an opportunity in our group, and then you ride with it. But if you ride with like this, then no. You can buy a Zim. Look, is 40% discount. Long run is gonna print your money because the balance sheet is great. Something like that example. So that's what I normally do. Yeah, man, I feel pain when people AMC going, people don't take profit.
Hey Josh, why did Zim fall down so hard?
Why did? It's a hardcore.
No. I mean, see, I'm not saying that it won't fall, but did
no,
you
it can
see
fall.
any reason why it fell down?
Yes, Biden said that these are all price gouging on the shipping companies are price gouging, and that's why inflation is going high. So they were blaming on this one. So yeah. So but based on the blaming, he also blame on oil also. He blaming on everything. But what can we do? Company is printing money. That's what I care about. It. The company has a good earning, $14, $15, $12. Then this value is ridiculously cheap.
When is the next earning for Zim?
May 18th. May 18th right here.
Okay, thank you.
No problem. Somebody asking about on YouTube. Arun Kumar, very good morning. Good morning. And SPY dipped, but biotech has relatively strength. XBI is bouncing but has a little resistance. So we got to give it time. XBI is good for the long. These are long term. Okay, you got to give us few months, few quarters will pay off if you are going to be long. Yeah, XBI is a good price for a long. Then XBI and LABU, same thing, both long run. Then Snap and Neo for April 2nd. No man, I would not go short term. Neo is long term short. Snap 22nd April. Okay, yeah, you can have a 22nd April, which is next week. No, I don't trust much next closer one. Okay, then whenever the closer dates are and you had a profit, you got to take money and run. Like day before yesterday, Neo was down. You get 10% profit, take and run. But if you have a longer time, you can have more. You can wait for it. So today Neo is now bouncing, but when you open it was 1950. So you need to know that the shorter the period of the time option you have whenever you see small profit, take profit and run. But if you have a time which is May, June, then yeah, you can hold a couple of weeks more and check. So right now Neo is still, remember it's oversold and it's still right there. So not going Neo anywhere right now. Just staying there, give a little time. But today is bounce. Remember yesterday was a good, today bounce. But today it did open at the bottom right here. So you could have had the $19 that you could have had the profit also. But now it's bounced, game is over, you gotta wait. Next week we don't know. We got right now today and tomorrow options getting expiry, so market gonna buy back. Market maker, they're gonna buy back all this shorted share, so it's going up. So I don't have any hope today or tomorrow probably. Nope. I don't think the Snap and Neo will perform today and tomorrow because they are buying back. Look at these 5-7 days, right? They've been selling, so they're buying right now. So little wait. But always buy a longer time option. When you buy 3-4 weeks, little safety, because market maker, they do have a cycles. Boeing chart looks great, bounce from the support right here today, and last 3 days is bouncing. So market maker, they sold, now they're buying, and I would not go super long. Just whenever you guys have some profit, take the profit. Where it is heading is probably it can go to this area right here, 193
what
area.
about stock like Progressive? What would you say it's good time to sell if I've
Whoa,
already hit my
one
my
second,
put on there?
1 second, I'm not done. I'm helping somebody on YouTube.
Oh, for sure.
Okay, so Kevin, it's basically it can go to maximum around 100-day moving average, 193. Okay, and then that's the expectation, but it takes a little time because market cannot keep going straight. It can wiggle around a little bit and then can go as the spring and summer coming, and all the CCL and airline stocks are right now going up. So you have the clear path right now.
Didn't somebody say Boeing they are going to stop giving approval for 787 or 737 until next year?
Oh, I think there was some headline.
Have approval until next year or something. That's what I remember somewhere seeing. I don't remember where.
Yeah, if you find something, let me know. If you find something, just pin it.
But the stock is not acting that way.
No, they shorted.
I mean,
They short here.
Even though if that is the case, then it has to come down a really lot more. But it's not acting.
It doesn't happen ever. Yeah, its stock is down. I mean, if you look at the trend, look at the trend.
No. At the time, from the time it was told, I think it was around 200. They said, but it didn't come down that much. It didn't reach the 170, 160, 170 level.
Yeah. Yep. You're right, because market maker right now buying back because it's a month-end option expiry tomorrow. So that's why they want to buy back. So be careful. That's what I always tweet, guys, right? Always, you guys need to see whenever I tweet and you understand what I tweet. And the chart, for example, right here, this chart I posted here, and I said, what did I say here? Last 11 days, market heading down as month end and weekend option expiry this Thursday. So watch out of bear trap. So when I type this, a constant 11 days, when market goes down, you got to be very careful going short or have a stomach. If you have a little time left on your option, then it's good. But if you don't have much time left, then you got to be watchful, right? So that's called bear trap. So right now market makers are buying back. When they buy back this short, and now they buy back, it goes a little up, right? And that's the cycle.
A perfect example is AMD. Go back 3 days and look at it.
Yeah. No, just to guide you, you got to be a little bit vigilant. So that's why market is holding, or QQQ has been shorting. QQQ has been shorted heavily, and now they are buying back. So it's slowly grinding. So today market is looking good. Everything is looking great.
Are you holding Neo puts, Josh, still?
Neoput, Neoput, I actually bought it small quantity, and now I keep adding. I want to add today also, but I'm just waiting because look like let me tell you what Neo.
Real quick, Josh.
Neo can go to
Go ahead.
Neo can go to 2140 right here, and then if that can happen by tomorrow, then I will short. So I'm thinking they might take it tomorrow. If they can take it here, and then I will short more. So I'm waiting. I want Neo and Snap. I'm focusing on those two because it has a gap. So I'll be shorting that.
Neo and what another one you said?
Snap, SNAP. Yeah. Keep an eye on both.
Tomorrow, if it goes up more tomorrow, then you might think of buying some more puts, right?
Snap doubt might not go because have a resistance, but Neo can go up tomorrow. So I'm still keeping eyes, watching. It doesn't happen, I will keep eyes on it, but I will see if I buy something. I'll say it here. But I want to short. I want to short that. But I would keep a leverage. I want to have at least 2 months like Neo. I saw Neo puts around. I'll tell you what it is. May 6th.
Hey, Josh, on Snap, didn't they say they were able? What is the reason for you to go into shorting the Snap?
A horrible balance sheet.
Thesis? Balance sheet. Okay. So if you heard the last earnings call, they said they cracked how to get advertisement business from Apple, right? That is the reason why it went so high, right?
Mm-hmm.
And don't you think the earnings will be good this time?
Well, who is spending money right now? Based on their EPS is 1 cent, and if I am not.
Right. That is the see they announced that they are going to they cracked the code to get advertisement from Apple phone. That means they are going to make money, right? It's a turnaround from that point of view. I think it's a turnaround company. Probably. I don't know. I'm thinking.
Okay, so let's go and analyze more how much they can crack, how much they can. What percentage you think they could crack and make money?
No, I don't know about that, but see, that's a real bullish sign when the news came.
Right? No, son. I don't go by the headline. I go by the foundation. So So foundation right now they are 100 right now based on this price they are asking 105 time. Tesla is 100 time. Apple is 30 time. And Google is 20 time right now. If you want to buy a stock, you are paying Google 20 times. Snap is asking 105 time. So if you think they can crack that whole thing, you think, what do you think? They're gonna get 5% value more, or 1% more, or 2% value more? I would pay if I had to pay more, right? Based on that, I'm telling you, because I don't just go by on the headline. I go by these because their valuation is too high. You know what they are doing right now? $4 billion their revenue is. They are burning that $4 billion. On top, they are burning their EBITDA is negative. They are losing $582 million. They are losing EBITDA. So when that happens, no institution will jump in this bandwagon to buy the stock for a long term in this market condition when the clouds are getting darker over our head. You know, the economy wise I'm talking about. That's because no institution, you need a buying power to get the strong. Earning, market maker play a little bit here and there earnings. They can play dirty games. That I don't count. I want them. So based on the foundation, I like to short. So maybe, market goes down. At that time, I'll benefit. That's why I always go for a little longer time. So, and I think that this earning will be a weak earning. I mean, but I will see whatever happens. When it is earnings coming in, April 21st.
Do you think they will announce secondary for Snap? Is there a possibility? Do they need cash?
Do they need a cash? I mean, based on their balance sheet, it looks to me that they are in a. No, they have cash. They have the cash in hand. They have the cash, 3.6 billion in hand. So I don't think so. They're gonna dilute the share because they have the money. They have money, so they might use that money to burn. But they are burning crazy money. 582 million every year they are burning. So, but again, they will not run out of the business. That I can see right now. Only thing what I think is they are negative. Their EPS is negative. When it is EPS negative, look, this is what I see. Last quarter their EPS was expected was 9 cent negative, right? And they achieved 1 cent positive. So that is good sign. But over here they said we're going to be expected is negative 17 cent. That means they will not achieve even 1 cent positive. So for me, negative is right now market negative EPS, those trending down. So look what happened. These earning pump, and then what dump, right? So this is what happens is a pump and dump. This was whatever the earning came out. There was the headline you read. That was just a pure pump. So people get trapped, and then they sell it. They dump it. They short it. So all these bulls are trapped here, holding the bags, and then stock goes down. So that's the technique people use because of the foundation was weak. If you look at the foundation is weak, very weak. I would not pay this company based on this. My valuation is way low, man, because of they are burning they are burning a lot of money. It's not like 100,000. They are burning 500 million is a lot on based on this. This is super expensive. They are burning. So they need to increase their revenue. How much they need to increase their revenue? to be at that price level, that price, they have to increase their revenue more than double, more than double. They have to really increase their revenue. And look at the float. Outstanding shares are 1.4 billion shares. So they have a huge pie. If they make four, right now they have to reduce the outstanding share to 500 million, 300 million. So so basically, you know how much you're paying for this stock. Industry standard 300. So you're paying 4 times money right now. So basically, $120 you are paying on this stock at this price. Snap, you are paying $120 in the market standard, based on their outstanding float, based on this. And or if you look at the EBITDA, negative 562 million, negative, not even a zero. So that means very worst. This company has a balance sheet worst, shares outstanding worst. I would not even give $10. I would doesn't based on this analysis would not give $10, just to let you know. Based on this, based on the outflow, they have to burn 3/4 of the share, 3/4, not 1/3, 3/4. 3/4 is a lot. Or they have to increase 3 times value here. So they need to increase the revenue to $16 billion. Why? Because they have to share this $4 billion. They have to share with this many shareholders. I hope you can see what I mean. They have to share this revenue with this, but on top they don't have. There is no positive. There is a negative EBITDA. So they won't even give the dividend or anything like that. They are losing money. So this I believe in this, man. I don't believe in those headlines and this gonna go this and this gonna go. Those are fooling business and people lose money. Bottom line, all the retailers, this is what happens, and then they dump. And you need to find an institution to buy the stock.
Yeah. Hi, Josh. Naveen here.
What's up, Naveen?
Good morning.
Good morning.
Hey, thank you, Josh.
Thank you, man.
Yep. Just like I'm looking to buy some puts on NEO for 29th.
No, I would not go 29. I would go far. I like to go NEO far, because be careful. Always safety is important. There is nothing expensive on NEO. NEO is like cheap stock. So go with the further away. May what we say? Go in a May month. Safety is important.
Yep. Okay.
Yeah, May month, like May 6th or May 6th is at least. But then I would wait, and why I'm waiting here. NEO, look, I'll tell you what. NEO has a room to go up a little bit right here, right now, because it's bounced from the support, so it might go here. So don't rush right now. I'm waiting for my meeting. Maybe it'll go to 21, 28, and then it get rejected. So you'll have a nice glide. So right now, market maker is. I would not short today. I will not short tomorrow. Well, let's see tomorrow at the end of the day. NEO.
Okay.
If you want to, you can buy a one options and get your feet wet, so you would understand the walk to talk how the NEO is walking. You know what I mean? What are you gonna lose? Maybe 10. You might lose 10 cents, $1.
Hey, what is that blue markings? Is that your point of control?
Yeah, the area of the control.
Oh, value area.
Mm-hmm.
Value area for the
session.
Point
That's the session which we are playing right now.
Yeah. Okay. Individual.
Yeah. Thank you, Josh.
No problem. So market is bullish right now, looking great. If you look at it, market Dow Jones is a positive, Nasdaq is super duper positive, S&P 500 is positive, JP Morgan reported. Okay, University, Apple and more are expanding employee benefit to cover abortion care. Okay. Okay.
Hey Josh, check out Plug.
Check out what?
It's breaking up.
On what? Check out what? Plug? You said check out Plug? Dave what? Dan. Dell. You said Plug? Yeah, Plug is bouncing. It was nice. So Plug would be a good too. It bouncing from the it was shorted. Now it's bouncing. So plug is good for a long term. Remember, we sold it right here at the top 32, and now it's 26. Now it could be a good entry because this is EV play. So if you look at this, and this is what I do right here. Okay, so this is your exit zone. This is your then this would be your entry zone if you want to enter. See, so this is what I would do. Entry exit. Keep in mind. This would be your this is upper channel created for the plug. So plug looking good now. Support bouncing from support. So if anybody wants to be a long, if you like the this. Okay. Plug looking good. Plug looking good, guys, for the long term. For a long term, because they were shorted here. Okay. Today right now it's just market is right here in 440 area, and I think market will hold. Look like SPY. So they've been heavily shorted. So market might go up a little bit. Will go up. AMD got weakness. SPY trading water. AMD got weakness. NIO looking good. GM is bouncing. Yeah, I mean, I have a snap put for next week. 18% negative. So market is bullish, guys, today and tomorrow. Okay, looks to me based on this SPY chart. Market maker, these are invisible indicator right here. Last 11 days market heading down as month end and weekend option expires tomorrow, which is this Thursday, right? So watch out of bear trap. So right now all these bear, they are trying to be more bearish, but market is taking opposite direction. So people ask, oh wow, PPI data was coming weak. I mean 11% is too high. Why the market is going up? Because market maker don't care what PPI is right now. They want to close that position. I mean they want to bring this bear trap so they can make money. And they sold a lot of options, right? They want to take it opposite direction. Yeah.
Hey Josh, how's Nvidia looking to you?
Nvidia, I think they're gonna Nvidia looking good today, but we are right at the resistance, you know, daily. But remember the Nvidia has been heavily shorted. So you want it today, you want a price today, right? I think market looks today good, and Nvidia is want to go up. It might go up today because
I do see also positive flow coming in.
I think Nvidia is heavy shorted. What that?
I have a question for you. When someone puts a call, like $1 million call, right, on Nvidia, and it has a strike of 225, but the date is January 20 of 2023.
Right here.
Is that more of a long-term call, or he doesn't want to get burned, or that's a hedge? What is that?
Okay, so people think, some people are super bullish, but they're seeing, I want to, if I burn my $101 million right here call, or somebody put it in, right, and they try to be bullish, but they don't want to go short term, so they are basically buying melting ice cube for longer period of time because they're putting a lot of money. So, and he paid $36 a premium for each call. Each contract cost him $36. So $3,600 each contract cost him. Each contract $3,600. So very expensive. That's why he put this much money. So probably he thinks Nvidia gonna go up and he will benefit. So I think he's right. Maybe he will exit at one point of time. We don't know when he'll exit if he get money. But I think Nvidia, if you ask me, is the perfect support from here and looking bullish. Look at this higher high, higher low, higher high, higher low. So it's going good. Nvidia looking good.
Man, when Josh is bullish on a stock, that's awesome.
I can be bullish. Why cannot be bullish, man? Come on. I look. What did I post yesterday, guys? Right. You know, right? What did I post? I said that on a SPY 2. Say, hey, this is what the market.
How far do you think Nvidia can go?
How far, man? You know, you want to have a crystal ball, man.
No, like as far as technicals, like where do you think is a major resistance?
Major resistance is 1 second. Let me see 1 second. I'm in the middle of something. Okay. Okay. So what did you say? I'm sorry. What you were asking me?
I was asking where do you think there is a major resistance?
Okay. Major resistance. Okay. next resistance, I think, and Nvidia right now looks super bullish to me. Price of control and right here we can go to 230. We can go to 230, so we're gonna keep eyes on it here. Market will grind today, but you have to be very vigilant. Look, this is what I do right here. Nvidia is looking nice right here, right? You enter here and exit here, looking good. Nvidia is good. Microsoft is also slightly holding, but I think let me add a AMD here. AMD is also looking good. So Nvidia and AMD both looking good because they've been oversold. So look here, AMD, right, trying to bounce, so AMD can go to the resistance. AMD was oversold too. So today AMD is 5 minute perfect. AMD is looking great, man. AMD probably they're gonna take the AMD and Nvidia today and tomorrow higher.
How y'all doing? How you guys? How are you, Sigma, doing? And Dave, you guys doing okay today?
They are done for the day.
Damn, look at those pros.
No, he doesn't want to overtrade. He already made money on today morning.
Did you exit your NEO puts? Because I see some
No.
tweet guys say it's going to 28 before it corrects.
No, NEO is a, yeah, you're right. So NEO will be, I just discussed, I think, I don't know you were here or not. So for me, NEO, NEO right now is going to 20, you know, right here. I thought it's gonna break here, but it didn't break yesterday. I did not take my profit yesterday because it's tiny profit, but I think it can go to 20, what is it, 21.45, and maybe tomorrow it might go. So I'm not gonna short today, but I'm gonna short tomorrow most likely. Let it go as much as you can because I will add tomorrow. Today is a SQQQ put. If somebody want to buy SQQQ put buy, because market is going upward. You see that? Tesla is bouncing. Tesla looking good. Tesla just broke this. Good. Today airlines are doing great, man, but they're getting resistance. Be careful to take profit. Jets, LUE, then DAL, man. Gap up and go. Delta Airline. Today tech stocks are good. Just keep eyes on semiconductor stocks are good. Costco still bouncing. Walmart bouncing today. Look at the uranium, man, is flying high. $10.75. It was $6. Then
hey Josh, quick question. The producer production index or what a PPI which came today was higher, right?
yes, it was.
Is that a bearish sign or a bullish?
That's the main indicator of Fed. It's a very, very bearish sign. But remember, do not follow what it. I mean, what we need to use is this. We need to look at the what market maker gonna do. We do not need to think what the news is and what would impact to the market. We have to keep it as an indicator for a longer period of time. And that's why I yesterday said that we have to be very careful as market will turn the table. And as you can see here too, I mentioned here SPY. I tweet yesterday. And I said in the tweet also, say last 11 days market heading down as month end and weekend option expires this Thursday, which is tomorrow. So watch out of bear trap. So people who are bearish, they'll be trapped here. That's what I mean.
Hey Josh, about the uranium, South Korea is not phasing out their reactors, and that's going to probably have a nice bump on uranium prices.
I see. How about Joseph? Do you know the neon? Which stock is Ukraine was basically? Do you know anything we can find in neon ETF?
I'm so sorry. Say it one more time.
Neon they used in semiconductor. In semiconductor they use neon material. Which one is that ETF? We can find any neon.
I don't think that neon. There's no particular company really that you can easily trade that specializes in neon, except for maybe like CF Gas. But I mean, the problem, of course, with the neon is that all of the refinery facilities are located like by Odessa and the other areas where there's all the heavy combat in the southern part of Ukraine. That's all being destroyed and invaded. So all the production facilities there are non-operational. That could refine the neon. But there aren't a lot of major players that are easy to play for refinement, other than some of the major gas players.
I see. Yep. Okay.
But you were on point, Josh, yesterday when you said that they will trap bears tomorrow.
And I said it's an invisible indicator, which nobody can locate.
But why do you think they will still trap them tomorrow as well?
Tomorrow is option expiry. All the gamma will play, and they'll close all the options. They take the money. They are the seller. We are the buyer. Probably market will.
You think it will close bullish tomorrow as well? More likely?
I think like that, but I always believe in taking profit. If you have profit, don't be too super greedy. Open your position tomorrow morning. But
super bullish today, right, Josh? Any chances of reversal?
Why you want reversal?
Yeah, I just I'm trading SOX, just like a commons, by the way.
Yeah. Right now, I mean, looking to me a great. So, market is looking, particularly, tech sector has been weak, right? So that's why they want to buy back and continue with that.
I'm just playing commons, okay, not like a.
Just to remind you, the Fed's gonna start talking in about 10 minutes.
10 minutes, yeah. And then they're gonna market will change the direction.
Well, there's a slight probability of extra volatility.
Yeah.
I was reading an article, and I really do believe that opinion, that the Fed really wants the market to go down. I mean, they want to stop the party for a little bit because of inflation.
Right. Now they realize. Earlier they did not realize when they were printing.
It's like a chicken game.
So guys, be careful when Fed talks. Market will create some volatility. So if you have a profit or something, keep eyes on it. All the heavy shorted stock, they will perform good today. Today, maybe tomorrow also.
Are you longing anything, Josh?
Me, I'm waiting for opportunity to go short tomorrow. Maybe I'll short tomorrow. Today I'm sideline. I already closed my all SQQ position yesterday. I had it little. I bought yesterday. I closed already today, and I had a little small position today. So small position, but I already closed it. Took a little loss and moved on. I'm holding my cash, dry powder ready. My all account dry powder ready. I'm waiting for opportunity. Oh yeah, I bought a Zim today. You were asking me long. I bought small Zim today for a long time. Today all tech stock will be good. SOXL.
Guys, I closed all my QQQ, Tesla, and all,
Oh, you
all the
here?
calls. Yeah, sorry, I just came back when I had a meeting.
Tesla is great right now.
Yeah, I closed all of it. I'll return back again.
Okay. Actually, I'm about to tell you that look, Tesla is going good so far. So if you have position before Fed come out and speak.
Yeah, I this morning I got into QQQ and Tesla. I closed that one too.
Oh, okay, nice. That's good one too.
Yeah.
And
I have crowd. I'm still holding on to crowd.
crowd.
I'm positive on crowd right now.
Crowd is actually since morning man doing great. Look at that. Yeah, it's beautiful.
And my uranium is also amazing, man. I'm up 200% on it.
Apple is good today. Apple. Whenever market try to rebound, Apple rebounds.
I think I'm positive on crowd. I will close crowd right now and then change after the Fed. Let them talk.
Hey Josh, can I ask you a question about the crowd thing?
Yeah, what's up, man?
Hey, and hey Gopi and Joseph and everybody. So like I got a question about the way it's supposed to fill in the gap, right? Because yesterday we were talking about, crowd had gapped up. We were expecting it to fill the gap. I know the other day when Elon took over Twitter or whatever, and Twitter gapped up really good, and then everybody was saying, oh, Twitter's good, it's gonna gap down, and it did like a little bit, but it definitely did not fall back to like 39 or 40. So I'm kind of curious how everybody looks at that gap filling thing, and like what's the kind of percentage about how many times does an underlying actually fall back to the original or close to the original place where it gapped up or down, and then when it doesn't, like Twitter didn't or crowd didn't or the Viru. I don't know if you're still following Viru, but Viru is not gap back down either. In those instances, is it not filling the gap because there was a fundamental, like the floor changed and the fundamental value of the share value increased or decreased, and it's just holding that floor or something? Or can you explain that a little bit to me?
So you expecting the gap to fill whenever your VCs are? No, market maker doesn't. They want to do exactly opposite your VCR. If you wish that it has.
Josh showing the PayPal gap, man.
Yeah, PayPal. Good one.
I think, Landon, I think what you're talking about is when you see, let's say sometimes you see stocks moving that have really, really, really like small floats, okay? And they're working as sympathy. So let's say right now we were having, let's say, in the sector of oil, for example, and oil, let's say, was moving, and you were seeing a sympathy play happening in a lot of small float stocks. Those stocks, because they're working as sympathies, yeah, I expect them to go back to where they started after they jumped. Makes total sense on those. But if you have another fundamental, another aspect of news, something else that's impacting a stock, you may not necessarily go back to its original starting point.
Okay, that makes sense. So if it's like a sympathy company and there was no shift in the fundamental value or something, then it's likely to gap fill. But if there was something, like for example, Elon coming in as a shareholder is something that came in and has fundamentally kind of affected, at the very least, the outlook of Twitter. That's a big deal, and so that's not changing. So then it would be likely for that underlying to hold the new floor. Is kind of what you're saying,
or at least say that, and you have, I think, right, Landon, is the idea is that when a fundamental perception of Twitter changed when it became known that Elon basically owned almost 10% of this company, right? And so he still owns those shares, and there's still something in play in regards to Elon Musk and Twitter. You know, that's still out there in the other, because he still has the shares. He can buy more shares. He can sell shares. He might take a more active role in trying to change the fundamental aspect of the company. So there's still something playing with that. And so that makes sense that you'd see some sort of like retention maybe of its movement. But if you were talking about something that was a pure sympathy in a sector based upon something that was going on in a general sector, but not a particular equity, a particular stock, then it wouldn't be a surprise to see that equity or stock go back to its starting point after whatever was happening as a general movement.
Yes, I mean, I don't know. You have the computer in front of you.
Landon, that was
probably
a question for you.
Going to hold it because the news of that coming out with that.
So, I mean, I can show you something.
Basically 50%.
Okay, now go ahead, finish.
Hour away from the abode of Adiyogi. I'm going to stop in there, and I'm popping into some new world. I'm just feeling happy, really happy today, happy to be here with you guys, and I just appreciate all of you, man. Such a good group of people.
No problem.
And
Thank you, man.
thanks for just taking the question. And Joseph, it makes a lot of sense. I can't look at anything right now, Josh, because I just got you lit up on Spaces here.
Okay.
I don't have my Discord open or anything right now because I'm driving.
All right, no problem. I'll explain you next time. Remind me when you have computer. Now I will show you and explain you in depth.
Okay, brother. Thank you.
No problem. Thank you. We got to have a lot of speakers. So let me add a couple of people here. And yep, go ahead, guys.
Is someone broadcasting the Fed speaking today?
Okay, I'll do that right now.
It started, I believe.
Yeah, right now. Okay. I'll do right now.
It's 10:30 or 11:30.
Anybody can see he's came out or still waiting for.
I'm looking, Josh. Let me see. I've turned on Bloomberg. That's it.
Whenever he comes, tell me. Then I'll bring the YouTube here.
Okay. U.S. extends COVID health emergency declaration as cases rise.
Yep, in China happened now that.
mRNA.
Hold on, let me see. mRNA.
But I think every opportunity.
Yo, mRNA pop guys broke the resistance. mRNA today looking good. Look at that. Look at that.
I think it's a long, Josh, long term. I think I'll short it.
Yeah, right now pop. I'm not gonna.
Let it pop.
Yeah.
Yeah.
They have the great balance sheet though. Okay, so I don't want to go against them.
I don't think anybody will get a booster shot anymore.
Yeah, you're right.
That's the reason why I'm short.
Are they selling anywhere out of America? Are they selling their product or no?
And Africa outrightly rejected. So nobody will take, Josh. I'm telling you. So I think it's a big shot. Let it ride up. We can glide down.
Gotcha.
Josh, hi. Sorry, I'm back. Like you said earlier, so Soxal, I'm breaking even. But I think you said probably tomorrow it may continue, so I'll just keep holding the shares. Yeah.
Yeah, right now looking good. So Excel because it's super duper heavy sold this one. So I think I have a sympathy on these stocks right now. So you might gain a little ground somewhere. So if you want to make something.
I think Josh, like you said, like we discussed in the morning, right? For the short term, may be good. For long term, I think wait for the earnings. All semiconductors will start, cracking. So be careful.
Yeah, I am telling everybody stay away from tech stock because that's where the monies are. All the people who make money, they buy tech stock, and that's what the market makers are thinking that hey, who's basically buying tech stock? The people who have a big pocket. So they are right now taking all the tech stock, most of the tech stock, right? But there's another sector which is suffering. So those are the what right now basically transferring money there. So why not to look into another sectors also? Don't just keep eyes on technology because technology was pumped up in 2020, 2021. Now they are targeting that. So stay away from it right now and let the market play the course, and then we'll go from there. So I would not, even though they are discounted price, don't look at how much cheap it is. Just give the time because market knows where people have money. People have a big pocket. They're going to target that.
Thanks, Josh. And Josh, how does the healthcare sector looking like today? After we spoke, CVS just did a V-shaped recovery upwards. So just curious on your thoughts.
So CVS is a little bit longer time. So for me right now, CVS, their balance sheet is great. So even if CVS pull backs, maybe today, tomorrow, I don't know, it pulls back, will be fine, but it will pay off some point of time, and when you see the profit, you take the profit and run. Right now CVS is holding because is good EPS. That earning per share is great, and their forward P ratio would be a great too. So I'm not worried about the CVS. I don't know your positions are, but yeah, it could be a good CVS would be good. No, I'm not afraid on this CPS. Look at the beautiful support also you have. Yeah, he's holding good support also. Yeah.
Yeah. No, thanks, Josh. Like I said, yeah, I'm looking at. I have June call, so still good.
Okay.
Not worried. Thank you.
Fed has asked for a mask mandate for another 15 days. They've extended for travel.
Wow. Mm-hmm.
So when is the Fed speaks thing? There's nothing.
Yeah, boss. No, that's okay. So I pulled up the event. So Thomas Parkin, he's participating at a conference on economic regulatory outlook at the United Community Bank Spring Leadership Conference. But I can't find anything that's broadcasting it.
Yeah, man, that's bullish.
That's bullish. Yep. Look at AMD going down, my.
I've added to my con position, man.
Nice.
I think if they get the mandate for adding more ethanol to gasoline, so con is the one we should all be there. And this is I got in a leap.
Okay, that's good.
2023.
Corn going to be great because everything you need corn now. Biden announced yesterday, I guess they said you use ethanol in your on a gasoline.
Correct.
What is the ticker, Gopi?
Corn.
CORN.
CORN. Okay, thanks. Is it ETF or it's a what is that?
It's a ETF.
Okay, and you are calls right on that one?
Yes.
So, so what happened is right now it has a breakout setup on that too. So be careful. Breakout can be fake out. So I would wait for. I mean, it can go to another $782 probably, and then be careful. Time to take the profit at that time, and or it can pull back, and then you enter for the things.
Oh, this is the Josh. I'm talking about Tecurium Quant Fund ETF.
Which was the symbol?
CORN.
Oh,
maybe that's CORN. Yeah, the next one.
Sorry, I was looking wrong one. Sorry.
No problem.
Yeah,
I think the con is the same thing.
Yeah, so this is fine. This is parabolic move, but again, if market maker whenever they're gonna dump little bit, and then I would prefer $29 right now.
Yeah. So what you can add, start a small position, and then keep adding.
Yeah, exactly. Yeah, start small position so you would know the foothold.
Hey guys, I'm back. I had to make some calls. How's everybody doing?
All right.
Sigma, pretty good, man. Today, Tesla, QQQ, SPY, all printed, man. I'm out of all.
You doing good? You done for the day, Gopi?
I think I'm done for the day. I just
Done
took
for the
some
day.
phone.
Good job, man. That's awesome. How did you trade this? Let's take a look at the SPY. You got calls on the SPY?
I got calls on SPY, I got calls on QQQ, I got calls on Crowd, I got calls on Tesla.
And you sold just in time.
Yeah, everything, right? Just about like around 109, 1009 or 1008. That's where I sold my Tesla.
What was the strike?
$1,000.
If you would have hold your QQQ Sigma, you could have been right.
I know.
Yeah,
I know. I was literally looking at that.
No, I'm just trying to joking with you. No,
150%. Why did you guys get back in?
No, I just sold now.
No, but you traded QQQs as well, right, Gopi?
Yeah. I was holding it from yesterday.
Josh, did you get back? Did you get back in any longs?
Long, I just little bought the Zim, but today I want to wait. I think I'm gonna buy tomorrow short side. So today I'm just not playing anything. Just waiting for, looking for opportunity whenever I feel. I think market. I want to short, but not today. I want to short tomorrow.
I love it, man. I love it.
Apple is doing good. Look at that. Apple 170 now. Yeah, Google is bouncing too. Look at the Google heavy short, and now today bouncing. AMD bouncing. I think tomorrow will be bullish day too. I feel like that too.
I agree.
Tomorrow will be bullish.
Those bank earnings might be a hit on Dow Jones.
Do they report after hours?
No, morning.
No, everything early.
Early.
Okay, so then.
So tomorrow, you see, before open, it's TSMC. I think that's the Taiwan
Semiconductor,
right?
Yep.
Then you have Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, United Health, Rite Aid, PNC, Ally Bank, Ericsson. Those all report in the morning. After close, there's nothing.
Okay, let's say we open neutral. And then what? We wait for confirmation from earnings.
Oh, you will know pre-market, man.
You would know the impact. So yeah, Wells Fargo, Goldman Sachs were here. But tomorrow is a bullish day. Doesn't matter whatever even their earning would be bad or anything. The market will be most likely 90%. My feelings are they bad because look at this oversold everything. Look at AMD. Look at that. So
absolutely, man.
So they will take it AMD to probably $100. Then Nvidia they will take it to. They will take it to probably this fill the gap probably around 131. I mean 231. Same thing. The Google they will take it to probably 2630. So all these stocks they will pump a little bit so people think it's breather, and then next week again game will begin. They will dump it next week.
Yeah, because if you look at it, right, option flow has been so bearish, man, so bearish. So many puts all over the place. So I'm thinking, it's going to reverse. That's why I took all my position yesterday.
Now SPY has a resistance of 50-day moving average, but I think that might will break.
You mean today?
Yeah, right. I mean, maybe not today, maybe tomorrow, but yeah, it's looking bullish right now. We are right at 550 day. Yeah, it look like it can break today, and then tomorrow it can go to 100-day moving average also, man. That would be a big 8. It can go tomorrow. It can go to 448. If it break today 50-day, it can go to or it can go to around here 445, 446. So
that'd be nice.
Yeah, I mean,
I'm just waiting for a pullback and might get in. I might swing.
Man, this guy.
Yeah, go pay. Let me know when you get in. I'm joining you.
This is, guys, look, it's not 100% accurate, but this is all invisible indicator I'm using, guys. Okay.
No, because I told you, right, I'm bullish from yesterday.
Yeah.
I'm just waiting for it to correct a little bit and then.
Gold P was raised in the Wild West.
Raised in the Wild West.
I'm always the Wild West, man.
Yeah. Man, tomorrow I think at the end of, if tomorrow market goes fly high, man, we'll have a great entry.
Man, it will, because the number of people who are bearish. There's so many of them, man. Wherever you go, it's like, you have Russia-Ukraine issue, Russia has issued that statement, now Finland issue. Wall Street will always climb the wall of worry. It will always climb.
You're right. 100% agree.
So long weekend, right? Just tomorrow. Like tomorrow is the last day for trading. So I don't know. It might be. I don't know. People might take some profit as well tomorrow.
People will take profit on what?
Everybody is in puts, man.
Exactly. You're not getting the point, man. See, what happened is 79% people were bearish on overall ratio. We pull the flow, right? 79% people. That means they are bearish. So that's why I posted in the chart also, right? That on SPY, that looks 75% people are bearish. So what happened is that's called bear trap, because people think it's gonna go down. With the way we think it's gonna go down because market last 2 days, right? It was super bearish. Everybody was feeling the pain, and everybody thought, oh, market is bearish. So they were shorting. So market bearish. Now market reversing because all the bear trap. So. Yeah, so market will take it up and bear trap, and all the option will expire worthless tomorrow, and then the market will again grind back to the south. Yeah. That's why I said I want to wait for a power, good entry point for short. Maybe tomorrow evening or most likely. If market dip today, then I'll go a little long on something, but market is not dipping right now, so I'm not gonna go. And market, I think, look at that, it's still holding good. So SPY is now getting rejected at 50-day moving average right here a little bit, but I think that's little small game market maker playing. Man, I want NIO to go up more, little bit more faster. Can go more up, would be great. Maybe tomorrow they will take it up. So right now Nvidia, everything is just trading water. Nothing, no actions. No action. We can play some music.
I posted I pinned something from Gurgavin, the firm puts.
Hey Josh, I believe a golden just formed on JPM. Can you confirm that for me?
Look at, I'm saying gold or JPM?
On JPM.
JPM looking, okay, so what do you want to confirm? What do you want me to look now?
That a golden cross just formed with the 200 MA and the 50.
On an intraday or on daily? You playing for intraday or you playing for the long term?
It's on the intraday.
Intraday golden cross? You using intraday golden cross? Okay. Yeah, I mean right now Goldman Sachs, WPAT, and when Goldman Sachs is looking a little bullish to me. I'm just telling you. I feel like price of control line is right here. It used to be down here at 126. Now it's 128, and we are still holding there. So your calls expiring next week, right? I mean the puts. You said puts.
Yeah, I have puts expiring next week.
Next week, okay.
9 days out.
Okay. And what is the strike price you have? Let me look something. JPM.
I have the $126 puts, and I've been getting premium bermed all
Yeah,
day.
yeah. Hold on. I'm that's what I want to analyze actually. So I'm analyzing. Let me understand here. Expiring next week. I'm going into options on my other screens. And what's the strike price? I forgot. Sorry. What's the strike price you said? One.
It's the April 22nd with the strike of 126.
126. Okay, so 156 right now. It used to be 253. So you basically, okay, man. Who told you to JPM to go short, man? It's very difficult. Okay, I mean their theta is 12 cents. Nothing crazy theta. I mean you'll be fine. Only thing is remember whenever you trade options are always tend to be like that. It create more fear in your when you have it goes against you, right? So but we did not go like if you look at the if you ask me, the way I think is this: look at the oscillator, it did not go too high yet, so we are not that far. It long run is, look at this resistance. Let me go to this, and it's still bullish little bit.
Did you buy today?
Yeah, I averaged down though, because I bought. I was just gonna scalp it, and then it threw a big candle.
So, are you sign up with any Discords and you got a call or something? I mean, you got to put something somewhere. Then that's how you were, or you just thought to yourself?
No, that was me.
That's what you okay.
Yeah, because bank earnings were negative, but the market trend is
I
up,
think
right? So
you'll be fine, man. You'll be fine because there's a weakness on the stock. If I analyze in a little longer terms, if there's a weakness on it, it's just a purely play right now going on because it was oversold last 3-4 days. So maybe today buying back because people are trying to short the bank. But if you wait for a little, I know premium always going to get burned out today and tomorrow. But Monday we'll have a great opportunity. Next week we'll have opportunity probably on these kind of stocks, and might be tomorrow market will play little dirty games on things too. So whenever you get opportunity, just try to exit if possible. If not, then wait. Still you have one more
So
week.
is it a very big position for you?
It's fairly large, yeah, I'd say so.
Okay, so the thing is, VIX is going up, VIX is ticking up. So at some point you might get an opportunity for this, the overall sector to turn a little red, and see if you can exit out. Or what you can wait is tomorrow morning you have a bunch of earnings. The market might react negatively initially. Maybe that will be an opportunity, but if it's a big position, then you have to weigh your pros and cons.
Stock is weak, man.
Pulling back at the month. If I had bought a expiration date a little farther out, I wouldn't be too worried based off of technicals, but it's just
Just for tomorrow? Is it expiring tomorrow?
No.
Next week, right? I think it should be okay next week.
Yeah, it's just a
all the
little.
results will come. This might turn out good positive for you. But you should have that holding thing if you can.
Man, technical is also horrible right now.
You might make a big win out of this one.
I just wish I had of.
Oh, you're breaking. We can't hear you.
Oh, sorry. Yeah, I'm on my phone right now. I'm trading on my laptop.
Let me.
I think I'll be all right. It's just a little worrying.
I mean, if that is the case, then you can size it down a little bit.
Yeah.
When it falls down, and then then you can carry some for next week.
Yeah, I was hoping to sell at least half the position at around break even, or not break even of the strike, but where I'm not negative, and then leave some runners open.
Yeah, because you see, VIX is ticking up now. It's from 20 to 20. It's gone to 20 to 55. So, this might push the market down a bit.
There might be a cycle today. Market.
Thank you.
There might be a cycle today where market might dump some point. If that happens, then you might have opportunity. But based on what I tell you, when you enter, you always take a look at the chart. When you look at the chart, the major support is right here. At the support, I would never short, even though the fake head can go down. And you feel like it's gonna go down, and then market rebound, right? So without chart, you do not want to go and short anything, because you are testing the major support, and then market rebound because it's oversold. This stock has been oversold, super oversold last 2 months, 3 months, 2 months I would say. So when it is beaten down, and particularly JPM, man, that guy they can manage, man. Even though you short, you think this company is these and they're gonna lose a lot of money and all, but man, they can maneuver things. So we got to be stay away from. We got to look for a weakness in the other stocks where market maker doesn't, they don't control. Over here they control. And particularly you bought it for 1 week. You should have bought 2 weeks at least. So if you would have bought 2 weeks, you would have a less, the delta playing less against you, given the stock goes down, and you'll be safe. So next time if you want to buy anything, ask me to analyze it for you, and then you can deep dive in. Then you can do your own due diligence before you enter. But ask me, I'll analyze it for you before you enter.
Hey, John. Thomas Thornton just replied, and he says he may be free after 2 today.
After 2 today, but
That's awesome.
we won't be able to advertise. But then if you want to, we can go ahead and put some slider, something that tell me more, and we can create.
What we could do at 2 or just before 2 is change the title.
Mm-hmm.
But it would suck. He said maybe after 2 he'll have some time. But that'd be sweet to get a hedge fund manager's perspective on what's happening.
Okay, so then if somebody is good at it, anybody can create a little good at the Photoshop. Anybody here who good at Photoshop, guys? Raise your hands, and I'll raise your hands. if anybody good can help me to create a one little Photoshop, I can send you a picture and you can create a little Photoshop, little something. Anybody can raise their hands, good at it, willing to help for 15-20 minutes. Okay, so this what is name? G Data. Okay, let me put you on a speaker. G Data. Some G Data, you good?
Hey, yeah, if you want to send it to me on Twitter messages.
Okay, I'll send something to you, and if you can make something like you know what do I mean, right? We have to just make a little flyer saying that hey, we have 2 o'clock. You think Sigma, you think he'll be like 2 or 2:30? Can we post a little time, accurate time on it, like so that way. Yeah, I'll post 2 o'clock, and then he can come even 2:30, 3 o'clock is also fine, but probably I'll post it 2 o'clock, right? Okay, alrighty.
Hey Josh, I'll send you something. Just you see it though. Don't share it.
Okay. Thanks. What's his G Data? Thank you, man. I'll send you something, and if you can prepare. Okay.
I also got another guest. His name is Sohab. He specializes and works in the oil industry.
Oh yeah, I know Sohab. That guy's a great guy, man.
Yeah, Sohab.
Oh yeah, that guy, man. He has a tons of followers. If you can bring that guy, Sigma, believe me, great.
I think he'll come right now. 1 second.
Oh, right now? Okay. Let me.
We'll make Sigma the director of marketing for Top Trading Edge.
Top Trading Edge. Okay.
I love talking and communicating with people.
Yeah. He said after 2 o'clock, right? So 2 o'clock. Okay. So
he has like 100K, almost K.
Yeah. So G Data, I think you can what you can do is you can go to this. Let me share the. Let me go to the Twitter here, and I can show you. Thomas, THORNTON, right? That's Thomas. Yeah. So G Data, if you on your computer, I'm sharing the screen. If you can snapshot of this person. He is our speaker. Would be around 2 o'clock. So if you take a snapshot of these, and you can write couple of words such as that, hey, we have a hedge fund, put the name, then we have the hedge fund manager who will be a speaker who will guide us, our community, and he'll take questions and answers. If you want to come join, please join Top Trading Edge. Would be a great opportunity to learn something from something from what Sigma. Can you come up with some more better statement, or anybody good at it making any good statement? How should we compose headline for advertising?
Yeah, what I was thinking is we just change the title to special guest speaker, Top Trading Edge special guest speaker, and then his name. Pretty straightforward. And then I'm sure anyone who's, when he comes in, anyone who wants to hear him speak will come join.
But we will make a special guest, but we need to write something like a hedge fund. We need to write, because he on his Twitter also he mentioned. So you can take a snapshot of his portfolio like this, like a snapshot of this, and then and write something on the top. Or I can probably just Okay.
You were gonna say, what's a hedge fund telemetry? What's the definition of that?
Telemetry. Hold on, let me ask. Hey Siri.
Telemetry.
Okay. I mean, we can ask telemetry.
That's his company name.
Oh, okay.
Telemetry.
Yeah.
Yeah, just
that's his company name.
Yeah, I've got a friend from Canada listening. Hey, Gates, we're going to have a hedge fund manager come talk to us after 2 o'clock.
Okay, yeah, you just tell him that anytime after 2 o'clock will be fine. That's fine. But we need to prepare real quick if something. So G-Data, if listening here, just take a snapshot of this little portfolio. He has it, and on top you can little write down that, hey, we guys say that we have a special guest today at 2 o'clock. Please come and join. And the biodata you can put it in here, so people would be able to see that we have today's special guest.
Hey, Sohab is in the group. Let's make Sohab, if you want to request speaker.
Oh, Sohab. Sohab. Yep, right here. Invite to speak. Yep. I think Sohab is in. Sohab.
Hey Josh. Hey Sigma.
Hey Sohab, how are you?
How are you doing, Sohab?
Not too bad. I received your message and you sent me the link, so I decided to pop in and say hello.
Absolutely, man. Good to have you.
We appreciate you coming. So this is a live space that Josh created. That we meet together every morning just before market open, and we trade. And most of us are done trading live for the day. So what we're trying to do is, at least on a weekly basis or however often we can make it happen, is get in some special guest speakers and cover some topics relating to the market. Right now, we have you in here, and we know you specialize in oil, and then we also have hedge fund manager Tommy Thornton coming in after 2 o'clock as well.
Nice. Nice. That's pretty cool.
Actually, good to have you here, Sahab, and we really appreciate being here. And we heard about you a lot, man. You the king of a space, I guess. And
yeah, try. I just we started off a couple months ago, and there was no content for oil. Just people just wanted to talk about tech, so it just took a little bit of time, effort, and energy to get the ball rolling on it. Now we've finally managed to get a community that it's just a matter of finding people and putting them together, right? So it's just pretty time exhausting in the beginning, but once the right people find each other, then it's like a snowball effect, right? Doesn't even need much sustenance. Yesterday, the boys were able to put up about a 3-hour spaces where everybody was talking about different energy names. And it was an initiative that, members put together, and it was a great space. I encourage individuals to go and listen to it. But me personally, I've slowed down a bit with the spaces just because, you get exhausted, maybe burnt out after a while, and also because you give an opportunity for the others to be able to sort of pick it up and move it along themselves. They've been doing a great job. The story with oil now is just like the writing's on the wall, right? Like last year, lots of uncertainty. You had your guesses, you had your prognostications of where you think the world's headed, but now it's our new reality, right? This is, we're currently in a full-blown energy crisis, and it doesn't take, maybe, I guess what I'm trying to say is, whereas before for me there was a lot of uncertainty, not to come out and get the latest and greatest, like as much data points as possible. I've personally found in my life that I don't as much, because we've become fully entrenched. And the summertime, we're going to see magical numbers. I mean, it's not great. And this is one of the worst things about the oil trade that nobody really talks about. the higher energy goes, the higher the price of energy, the more people suffer around the world. So, unfortunately, it's a trade that runs parallel to human suffering. So, the higher energy goes, the more money you'll make, the more people will suffer, especially South Asian countries, African countries. Those guys are really, and it's just poorer countries that will feel the ramifications of poor decision policy making by wealthier European countries, right? It's sad reality, and that's what's currently taking place right now. You got LNG tankers en route, commitments en route to Pakistan and India that are getting rerouted and getting outbid by higher prices from European counterparties, right? And they can afford, when the going gets rough, they can afford to come into the market and just ripping shipments away from poor, less fortunate individuals. So it's sad. It's a sad humanitarian issue. It's unfortunate, and the people most responsible for it is, decision makers and leadership in North America, and leadership and decision makers in Europe. They've put themselves in an untenable situation, and now they're going to make, poor brown and black people suffer the consequences of their piss poor decision making. So, it's sort of a situation where you make money, but at the same time, you really feel for the individuals that are, feeling the absolute ramifications of this, right? And I'll keep it at that. Gopi, you can ask me more questions, and then, we can just keep it a more interactive room. Go ahead, Gopi.
I have two questions. The first one is, since you mentioned about third world countries getting hit badly, right? So what is stopping them from doing business with Russia and getting the oil cheaper to those countries? Like India has already started, and what about the rest of the countries?
So the issue is, again, the haves impose sanctions and they squeeze on the have-nots. All right, just an example. This is taking place in Kosovo. They applied to get a loan from the IMF so they can start a no coal plant because they need to increase their energy producing capabilities. And the IMF told them, listen, guys, it's a new world, and it's windmills or solar panels, baby. So it's a decision. So, the first world used primitive forms of energy to be able to go from hydrocarbons into, their so-called clean energy. And they used fuels and hydrocarbons as, a transition fuel. But that's not being afforded to less fortunate people. So now in this case, they're like, what's stopping them? Well, they're figuring out ways. The oil trade is predicated in dollars, American dollars, right? So there's complication in regards to that, and they're trying to figure out solutions. In some of the bigger countries, India and China, they've got significantly more leverage. But if you're a significantly smaller country, you got to play by the rules of the big boys. And that's the part where it becomes painful, and they will suffer for it. Because Europeans, North America, they're not given the less fortunate ones any choice. It's just, listen, you play by our rules, or no bueno, right?
All right. So my second question is, they have a mandate from yesterday. I think Biden released that, where like now you can add ethanol. I don't remember the percent, but what is it going to do to oil?
It's confusing for me, and the reason it's confusing for me is because we're running into a food shortage. So why exacerbate that issue, right? And you increase ethanols, you're gonna run issues with your vehicles. You're gonna have problems, stuff. So the mechanics, car part manufacturers, they're gonna have a good time. and also as well, you know, you're going to increase the cost of food, right? The situation is tight as it is. We don't need to add more pressure to that. So what they need to do, what this administration needs to signal, they need to aggressively signal that they want to increase. The only way you alleviate these problems is by increasing production. So this should be the narrative. This should be the narrative. We need to increase production, all right? But you have around the world, as a result of low energy prices, not enough investments were being placed. Countries like Canada is like an exception because we were attacking supplies. Europe, they were attacking supplies. America wasn't under Trump. But America's having issues with their geology of shale. It's just getting played out, the very high declines, and it's getting to a point where, you know, their shale is in terminal decline, right? But people want to blame maybe the new Biden administration. It hasn't been long enough to have an effect. This story is a 8-year story. It's not a 15-month story, right? So it's just the world has been fighting production, and, you know, pulling oil out of the ground isn't easy. It's very, very, very hard, all right? Very difficult. You're dealing with some of the smartest people in the world. They're having to fight with talent because all of a sudden these guys are all going to tech because, listen, everyone's making money in tech. Tech is the future. Why would I want to go and deal with a bunch of these oil wackos, you know, and go home and my kid is, you know, accusing me of poisoning and killing the planet, and I'm getting ostracized and I'm not getting respected by society? Why don't I be like Elon Musk and follow in his footsteps and, you know, do electric vehicles and do marvelous things to humanity, and everything's so aspirational and I'm being accepted. People love that, right? People want to work for more than a pay. People want to work for meaning. So what does that have? What effect has that had on the labor market? Well, it's been dark. Why? People don't want to become petroleum engineers. Like, why? It's a declining industry, declining space. It's been getting, so all of a sudden, you run into so many issues on different parts. You know, you want to grow production. Okay, well, first it takes the government to signal and encourage oil production. Then you have to make sure that the people are ready. And if there's not enough talent, it will take so many years in order to ramp up the talent. And then it will take so many years to be able to build up the projects. 3, 4, 5 years. So this is why the belief is that we're entering into a structurally undersupplied market and a bull cycle that will last for many, many years to come, right? And this is a story that started in 2018. It's just been having many detours and pit stops along the way, right? The guys that are at the forefront of this, they spotted the signs in 2018, and then different things came and they exacerbated it. And then, you know, COVID came along and it just became an accelerant. What's his name? What is it? Jeff Curry talks about the revenge of the old economy. He, from everybody that I've heard speak, he sums it up the best. You know, and it's just normal, to undercapitalize certain sectors, certain spaces at the expense of another space. But the only thing we're dealing with this time that we've never dealt with before is the narrative and dogma and the religion that goes along with it. That is the scary part. Because what you're telling me is normally once you realize that spaces are undercapitalized versus other spaces, then once the market realizes that, capital starts to readjust accordingly. But for the first time, the market realizes that, and there's nothing we can do about it. We'd be like, well, sorry, my fund's got covenants. So I know this place is great. I know there's a lot of money to be made, but yeah, I can't touch it. And this is the scary part, that for the first time, you know, we're going through a cycle where the market is identifying, you know, where capital should flow to, but capital allocators got two hands tied behind their back as a result of narratives and dogma.
So Shoaib, one question on that. Do you have any stats on how many barrels of oil that this ethanol thing is going to replace, and the duration of time?
I don't. It's a relatively newer story. They just recently they're talking about it, and it just happened a couple of days ago where he passed the bill for that. So I haven't looked into it at all.
A couple of more things too. So
one more thing as well. I don't even plan on looking into it at all. Because it doesn't add value to my investment thesis. For some people it can. For me it doesn't. So I haven't looked into it, and I probably don't plan on spending the time to do so as well.
Wow. Then another thing also, Sahib, I came across that it was on MSNBC. They're saying that they pulled out almost, there are 9,000 permit been pulled for drilling, and they all they've been not pumping. So they said 9,000 permit has been opened so far across the U.S., and many of them are not being used. So they said we're gonna find them until they go and start drilling or whatever. They have to repump it to the to the flow probably. So that, do you think that would will increase any productions? Because many private properties or somewhere where they are not drilling because they thought petroleum is died down and we're not gonna have any more, and probably but they have permit. And nowadays, the permit is like a gold. People wants to if you want a permit now, right now it takes about a year just to get the permit out. But there are already have permit, around 9,000 permits are out there, and that was a headline. So is there any number or any calculation would be that, hey, this, because of this now pressure from the government, they probably say they're going to penalize the people who are not going to use it, or so that would also, do you think that would impact the oil or no?
Josh, the shareholders of these companies don't want growth either. So if you look at Devon, EOG, if you look at their investor relations material that they're sharing with stakeholders, they're saying 50% is going to go into investor return, and then 50% is going to go into maintaining their declines. Okay, so they're not interested in growth anymore. 7 years, 8 years has been miserable. And so these energy companies, their management teams, they're partly to blame as well. These energy guys, they became excessive, and there was excessive spending and poor capital allocation. So I mean, they're partly to blame as well, right? So it's not, you got to make sure that the burden of blame is shared collectively. But also the fact that the administration's approach hasn't been so great either. The American energy companies, they haven't been placed under the same pressure and scrutiny as the Canadian energy companies. This is why I believe in the Canadian energy companies significantly more. The Canadian energy companies, they went through a bust in 2015 and 2014. And then right when they were dealing with the depths of it, they had a federal government that came and recognized that these guys were drowning and thought, great, perhaps we could stick a fire hose into their mouth, and just, kill them softly, right? Just quickly put them to death. And as a result of that, they're incredibly more resilient, stronger, innovative, better balance sheets, lower declines, but that's got to do more with the geology. They're better businesses, right? Gotcha. They're better businesses. They're bulletproof. They've gotten to a point where they're very, very efficient. So that's my recommendation. Like, the best energy company in the world, consensus, is Canadian Natural Resources. All right, just have a look. Have a look at that company. It's just a standard in terms of how great they are, how cost efficient they are. They set a standard worldwide.
So one more thing, Sohail, I noticed that Biden tried to reach across India and say, hey, you try to stop buying oil from Russia and help us out to corner the Russia probably. So right now, Biden administrative, they're going around the nations and telling people to, you know, basically they're trying to corner the Russia, right? So if that happens slowly, maybe even though India also responded, so such like that, I'm sure they're gonna go to various countries. And I'm looking at the history, like how the U.S. normally behaves when, when excuse me, when Venezuela was the richest country on earth, and then now it's the poorest country on earth, basically. You know, if you look at it.
Who's the poorest country? Which country?
Venezuela, who was the biggest producer of the oil, also not the biggest, but they were the producer of like top notch, right? And Venezuela was the richest country, right? I remember all this history, and based on that, I'm telling you right now, Venezuela is like, you know, I had one employee who was from Venezuela. You can go there and you can get a petrol pump free. You can go pull the car. A petrol pump is like nothing but free. But if you want to drink milk, it costs you tons of money there. If you want anything, any product, which costs you a lot of money because their currency is diluted a lot. I mean, the currency is not worth it now. So what happened is America basically sanctioned that country like left and right, just like Iran. Then we did that to Venezuela. So that something like that. I think we have to look at the other side of the coin. That how.
So Josh, these sanctions and all this stuff, they were done when America was significantly more powerful.
Mm-hmm.
And the reason that they were significantly more powerful is because shale was like, who would have thought that America would go from 5 million barrels a day? Like it is just absolutely like shale was absolutely revolutionary. And I recommend a book called The Frackers, just to understand the implications of shale.
Mm-hmm.
Like it just changed everything. When a country goes from a net importer to a net exporter, that changes the dynamics of everything. You can impose sanctions. Your power changes, right?
Mm-hmm.
You know, when's the last time America had to invade another country, right?
Mm-hmm.
They don't do that anymore because they got their own oil.
Mm-hmm.
But when they didn't have their own oil, they had to go and send, go into the Middle East and constantly meddle and do all the things that they had to do.
Okay.
But people are like, oh, Trump is a peaceful guy and he's just not a warmonger. But, I mean, really? I think it's got to do with oil.
Mm-hmm.
The oil really ramped up under his tenure, and as a result, and this is the thing, is just politicians will always take credit for things that it's got nothing to do with them, right? It's just even like right now, their premier Kenny is, you know, promise made, promise kept. Just keeps pumping out these I love the guy because he's pumping energy, but like if you want to be like absolutely like pure realistic, you can't keep no promises if your province is not making money. Alberta's making boatloads of money, right? It's just an incredible amount of money. This guy could do anything. For the first time ever, the province decided, you know what? We're too rich to collect. Oil tax, like gasoline tax. They're like, you know what? Don't even worry about it anymore. It's all right. It's all good. And then by the end of the year, they're going to start writing when they start, looking at the books, and they're going to start writing checks to different organizations. They're going to be able to write fat checks, and the narrative is going to be promise made, promise kept, and it's got everything to do with the cycle of oil, the cycle of energy, and that's all it really is.
Interesting.
I have a question. Josh, I can ask?
Yeah, Dave, go ahead. But meantime, also, if anybody has a question, please raise your hand, so I will keep it in the queue.
So my question is, where do you see energy in the next 10 years? If it's going to be green energy, which sector? Like, is it going to be solar? Are they going to use waves as energy, like changing wave into energy? Or what kind of energy are they going to use?
I believe that we're still going to be using hydrocarbons or nuclear. Those are the two viable solutions. Everything else is just aspirational. And it's great to be aspirational too, right? It's when you're rich, you have the luxury to be aspirational. When you're poor, you're not afforded that luxury. You know, poor people in Pakistan, poor people in India that rely on energy for the textile industry and They don't have the luxury of saying, "Oh, let's build a windmill." Let's like poor people in Africa don't have the luxury to be like, "Oh, let's just build a solar panel." No, we need energy. We need it now with the lowest startup cost as possible. All right, and we need reliable energy. We don't need energy that clicks in for 5 hours a day. All right, 7 hours a day. It's just, I ask people in the room, it's just, do you stop using your phone at night? Well, why don't you stop using your phone at night? Because solar doesn't work at night. No, everyone in this room has expectation that everything in their life will work 24 hours a day. So why wouldn't we have the same expectation for these alternatives? Okay, so let's say, oh, well, we could do batteries. Oh, all right. Well, how many batteries are you going to need? How many batteries are you going to need in order to make that possibility? Well, you're going to need a lot of batteries. All right. Well, how tight is the lithium market right now? Incredibly tight. Okay. Well, let's just be realistic. That's all that we're imploring others to do. Let's find ways to reduce emissions per barrel. Let's find ways to make friendlier barrels. Let's focus on doing everything we possibly can relative to where we're currently at. Let's not inspire countries to go into war and promise to send them weapons and tanks if these countries are not currently capable. This country in Europe is not capable to wage this war. So why don't we just relax, de-escalate, mediate, and try to resolve, rather than encouraging this country to get into a war, and then ultimately, end of the day, it's the poor people that suffer, right? The poor people, their quality of life relative to who's running the country is unaffected. It doesn't even matter. It's only the rich people. They are the ones that care. They're the ones that lose. So they run around the world trying to solicit support for their wars because they don't want to lose what they currently have, right? So, and then I look at it from the European perspective. It's like, you guys are in a shitty situation. So why don't you just entertain the bad guy Putin until you guys could finish, like sort out your energy problems, and then get back to it later. Live to fight another day. Why fight now? Just make Mr. Putin happy. Do what he wants. Entertain him. At the same time, find ways for Germany to reduce its reliance on Russian natural gas. You're importing 42% of natural gas from Russia. Create alternative sources. Build up, revamp your nuclear. Lower your reliance. And once you do that, Mr. Putin realizes he just doesn't have the similar type of cars, and he doesn't end up being as aggressive anymore because he doesn't have leverage, right? But the man's got leverage, and you have no cars, and people want to act like they do, and that disturbs me a lot because ultimately the people, again, that are going to suffer the price is poor, disenfranchised, lower middle class Ukrainians. We've seen this movie before. I've had family members that were impacted by the Arab Spring. All of these countries were better off having their dictators. They were better off with every country that overthrew its dictator is in a worse situation than it currently is right now. But back then we were celebrating. We're like, yeah, revolution. And then what about the revolution? Go to every single country. Libya has got slaves, it's just literally they're buying and selling people. The situation is absolutely. Egypt, just torn apart. Yemen, they're getting blown to bits by Saudi Arabia daily. What other country that? Libya, Egypt, Yemen. What other country that revolted?
Wow.
Tunis is having their own, their own situation. But generally, what's in favor and what's in benefit of the masses is an opposite to the messaging that takes place by the more fortunate people within society, right? So that's ultimately I wanted to share and just get it more interactive. So let's get Joseph with his hands up. Go ahead, Joseph.
Hey,
So first of all, thank you for coming to the group. I love hearing you when I've listened to you basically with Canadians. But my thought really is green energy, isn't it disingenuous? I mean, when people will say, oh, look at that solar panel, or look at that windmill, there's no emissions coming off of it. But people never really look at basically what does it take to build that windmill in regards to the amount of ore, in regards to the amount of waste. I really kind of imagine what would happen if you had to show basically people just how much ore has to get mined and how much radioactive waste gets created when they create just the magnets for every single windmill. What are your thoughts about just the fact that when we talk about, rephrase that, when we're talking about how great green energy is, there's no conversation about what it took to make that green energy happen.
Joseph, no one cares. I'm telling you, Joseph. Even when I talk to my peers at my university, I created an oil and gas club. I created two different clubs. Listen, people don't give a shit, all right? People want to go, they want to work, want to come home, want to watch Netflix, want to relax, want to hang out with their girlfriends, boyfriends, spouse, kids. They don't want to spend time understanding, how the world works. And it's part of why I like to tell my peers that I'm married to the barrels. It's because it takes a lot of effort, a lot of focus. You've got to take a lot out of your time and day to be able, and it's not easy, right? It's not easy because it's difficult, it's nuanced, a lot of little pieces. It requires a lot of human psychology because this commodity is the largest commodity in the world, most political commodity in the world. There's a lot of messaging that takes place and, jostling and, gamesmanship. And it gets frustrating for maybe the average individual. The average individual doesn't want to go through that. And mind you, I'm trying to tell people while I'm trying to put money into the pockets. So imagine you just telling people, you're like, listen, guys, we have gold in our backyards, literal gold, all right? Black gold. Forget the Bitcoin, forget this, forget that. Listen to this. 10 minutes into my monologue, they're like, all right. Okay, but what do you think about crypto? Or what do you think about Dogecoin? What do you think about this? And I'm like, all right, I understood. And so I've gone through that process, Joseph, of trying to have these conversations, and that's when it wasn't working, and I migrated to Clubhouse to just why don't you just have that discussion with people that are currently interested, and then finally Convert Dialogue migrated to Twitter Spaces with huge success. But before that, I was in different circles, many different circles prior to arriving here and getting here, right? And I could tell you from those experiences, people don't care unless they have to pay with their wallets, okay? Until they show up to the gas pump, they don't care until they have to care. How do you have to care? Show up at the gas pump, you're in BC, your gas prices were always high, but they're $1.60, $1.65, all right, no worries. Then they jump to $2.10, and you're like, holy shit, what's going on with gas? And now all you want to do is you want to figure out what's the source of your suffering. And we get a super spike this summer to 150 within those ranges, and gas, rockets upwards $2.50, $2.70, and all of a sudden everybody wants to learn about sources of energy and how that comes. So, Joseph, to answer your question, nobody cares until they really have to, until they start. So the question for me is, well, if I care and I'm aware of that, why can't I just participate in the trade and make a nice little chunk of change for myself and for my family along the way, right? If nobody's gonna care, right? So that's where that comes from, Joseph. But let me pass it over to.
Oh, by the way, real fast, I would love those prices. I'm in San Francisco, and we were pushing $6 a gallon.
Yeah, it's scary, it's just scary numbers. And who's going to pay the price? Well, rich politicians are when you make, and this is the article that came out from BNN Bloomberg. It was just bizarre. was saying, listen, if you make 300,000 or more, inflation is not a problem for you. All right. And I mean, they couldn't have said it better. And I think maybe the number should have been, I think it's like 100,000. If you make more than 100,000, this is not, inflation is a problem for the poorest, for people that make less than 100,000 a year. Those are the people that got to deal with it, right? So when politicians that are worth millions and millions of dollars openly trade and do what they want, when they look at these policies, like, who gives a shit? Who cares? It doesn't matter. Kenny, as much as I love him, couldn't even fill up his own gas tank. He went to show up to the gas station and he stuck the petrol inside, and you could tell the guy has never pumped gas a day in his life, right? So it's like you get policy making by people that do not live the lifestyle of the average Joe. And also other issues too. You got people on Twitter, and this is something I realized. A lot of people that are on Twitter and can afford to be on Twitter all day long are either unemployed or they're very wealthy. They create their own schedules, okay? They make their own rules, whatever it may be. They're fortunate, is what I'm trying to say, right? Or maybe you're working from home, right? But the people that really have the ability to go in and do... So typically when you have people talking about energy and guys saying, oh, capital's never going to come back, well, you're not really in tune with the with the silent majority. The silent majority, they will be quiet, they will do their things, and they will follow along until they get triggered, they get squeezed, and then you will get a response, and whatever direction they dictate is the direction we're going to end up going. And because they don't feel that, they don't feel the pain, they will tell you, oh, we don't see capital ever coming. Capital will eventually come back. Okay? It has to come back. There's no choice. Okay? There is no choice. It's just a matter of time for the paying trade to create enough pressure. All of a sudden, you get the new class of politicians that will come in and they will say the exact opposite messaging of the current set of politicians. Just the way it works. Politicians, all they care is getting elected. That's it. So if all of a sudden they're incentivized to solve high energy prices because that's the only thing people care about, then that's what we're going to have, right? How do I know this? Well, you can read Panic at the Pump, right? And get a sense of what was going on in the 1970s. Panic at the Pump by Meg Jacobs, The Energy Crisis and the Transformation of American Politics in the 1970s. So why does it say the transformation of American politics? Because energy is the only thing that can transform any form of political discourse. And I firmly believe it. And it's not a consensus view, because wealthy guys we talk to on Twitter don't have that belief yet. Because for them, they go to, rich parties and we'll talk to other wealthy fund managers, and all of them say, nope, everything's good, no pressure yet. Until one day they show up to the party, and everybody's like, oh shit, our clients are super upset and blah, 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 blah. And then all of a sudden they'll come back to you and they'll say, yeah, looks like capital's coming back in, right? It's a delayed response. Peter Lynch talks about it in his book on One Up on Wall Street, where he says the best information you can possibly get is from people on the boots on the ground, because they get information in real time relative to the 6 months, 8 months delayed response for the people in the ivory towers to get, right? So the best information is talking to regular Joes, seeing what things are, seeing what life is on the street, talking to guys that are closest to the wellhead as possible, getting with the information. That is the highest form, quality of information you can possibly get. There's no other better information than talking to the people that actually produce the items and the product that the world extensively relies on. Let me move over. It's never a full house until we get the oil god himself to join the conversation. And without further ado, I present you folks #oil. Go ahead.
Welcome.
All hail. Thank you, Sohaib. Really nice to see everybody. And Sohaib, you couldn't have said it better. And to all the people new in the room with respect to energy, you know, the only thing I can add, because Sohaib just provided us quite an amazing context in terms of the realities of the situation. A previous person had asked, you know, about the kind of the hypocrisies to energy and sort of the renewable conversion, right? And I know Sohaib was absolutely right to say people don't care. But what you're seeing is that, you know, even people in these spaces are starting to wake up and realizing that, you know, why are we shutting down oil and gas? Well, I mean, it's such a pollutant, you know, oh my god, fossil fuels, fuck me, we're all going to die, right? And then all of a sudden, you need to go and mine nickel, cobalt, zinc in places like Africa where kids are still getting enslaved to do these things, right? And, you know, you don't think of, you know, when I think of war and I think of the atrocities in Ukraine, you see bombs and you see soldiers, you see soldier fighting soldier, and you say, okay, you know, this is war and, you know, this is what's supposed to happen. And then you see these horrific pictures of grandmothers talking about rape and seeing this and seeing that. And then you go, fuck, I didn't sign up for that. That's not what I want to see, right? And the same perspective can be used to the previous person's point as to what these politicians are doing. Because remember, folks, politicians are not using their money. They're using your money, right? They collect tax dollars and they come up with ideas, literally what we call virtue signaling, right? Rex Murphy, which the irony here is that he actually works for the CBC, which is Canada's communist news network. You know, they're actually funded by the government of Canada. Rex Murphy, one of their own, on the payroll, wrote an amazing article. I implore all of you to put on your, you know, what you call the can list when you're dropping gang, as we call it here in Vancouver. And you need to read something that's not a book that Sohaib just recommended. Read this Rex Murphy article, because it literally asks the simple question of why did Canada put its hand up first to be this beacon of hope to the world with respect to getting off of fossil fuels, right? And it's a chain reaction because G7 nations all work together, they trade together. Look at what happens when Russia doesn't play nice. McDonald's, Starbucks, they all leave together, right? And so what happens is these politicians, you know, come up with this grandiose marketing, largely to get the votes, which is exactly what Sohaib was saying, right? If you look at what Donald Trump did to get the votes in 2016, you know, he didn't go after the Harvard graduate. He went after the person in bottom of America who feels like he's getting fucked by the swamp, as so they say, right? Drain the swamp. Well, the number one cohort in all of North America today is the millennial, right? And the millennial can't afford a house. The millennial is worried about its future. The millennial is reading so much online, spending time on Twitter, Pornhub, you name it, right? And so not only do these people have to be clever with how do you engage these people, they have to find something that has actually a systemic, long-term sort of what you call grasp of the attention span of this group. And climate change is a perfect example of it. And guess the best part is it's not really that quantifiable, right? It's a KPI that can't actually be determined without the benefit of hindsight, right? It's like the broker who tells your parents, oh, don't worry, I'm going to help you to retire, only to retire 10 years before the parents do, right? And so I find the whole thing absolutely insane. But to the point, the tide is starting to change. And I think, so hey, the question I was going to ask you, because you were listening to a politician last night, and forgive me if you had already spoken about this, but if I'm not mistaken, you had attended, I have a Sohaib tracker for those of you in the room. I will not sleep at night unless I know Sohaib is safe and well. And so I noticed that he was at this event. And Sohaib, I thought perhaps you could tell us a little bit about the energy, the message, and sort of what the other people are doing to try to sort of dethrone Trudeau and his obviously bullshit ideas.
It set a record in terms of how many attendees they've had. Kelowna, they had about 2,000 people. This is, BC, right? They've had quite a bit of people in other parts of town. But Calgary is oil country, right? So they've set a record. I believe it's 5,000 people they had. So the challenge here is not, like, to me, I went just to see, how does this individual interact with the crowd? How does individual communicate? It was very important for me to see it, because for me, I spent many, many years developing my communication skills. It's one of the most underrated skill sets in the world, I believe. And for some reason, it's not a skill set that politicians seem to have. And whenever a politician has the capability of being an effective communicator, it just really, they're able to do things that typical politicians can't do. And it was important for me that we're going through an energy crisis to be able to have an individual that can communicate, right? That's the most important thing. If you can communicate, we'll take care of the other aspects later. So I went there and I seen an individual that has been gifted with the gift of gab, was able to articulate to the audience the pain that they're currently undergoing and where the pain is coming from. And it left a huge taste of optimism. There was another guy that was there. He's campaign manager, and he's worked on 109 campaigns, and he's lost only 9. And he was there, and he was saying, he was given listen, part of being in the oil trade is listening to as many different perspectives as you can, lest you pay with your wallet. So in that spirit, I was listening to him, and he was saying that why this politician is, his best should be number 2, and why a different politician should be number 1, because that politician is number 1, because she's a woman, and because she's colored. So this means, because like he's approaching it like this is how politics. It's all optics, right? That's all it really is. And this guy, he's a professional campaign manager, right? So he's just, to him, he's not into the feelings. He's not into any of this stuff. He's just pure gamesmanship. All right, check these boxes, present this way, present that way. And I was listening to what he was saying, and it was pretty insightful. I liked the conversation. Other guys weren't happy that the man was pumping another candidate during someone else's event, but I enjoyed it, all right? Because it just gave me that much more insight. And I'll wrap this and I'll keep this short. But I think what was really remarkable is he was like, okay, well, this guy, he's getting all of this, stuff over here, but now you have to think about what the rest of Canada is going to do, all right? What is Eastern Canada going to do? This man, he ain't going to fly. He's not going to get these turnouts in Eastern Canada. And, end of the day, that's all that matters. And that's actually true. That's all that really that matters. But for me, I have an idea as to where energy is going through, where the cost of living and inflation is going through. And my thought leaving was, when that happens, when we hit numbers that all-time highs that we never thought imaginable, I want an effective communicator at the driver's seat that can communicate big ideas in a minute or less, that can pack a powerful punch. Because I believe that people can change their opinions and beliefs on a dime if their life depends on it. When people can't drive, all of a sudden, whatever. Out with the old, in with the new. What do we have to do? Guide me. But till then, people are comfortable, so you can use these old narratives and tactics and yada yada. But when it's $2.50 at the pump station, all right, you're saying smart stuff. All right, let's get you in power. Let's. The pain is too much, and I'm willing to do anything to alleviate it. That's what my personal opinion is, and that's why I left with the same opinion that I had, which is come in, find who's the most effective communicator, align with them, and once the situation happens and things start falling apart, the best communicators are going to be able to communicate to the masses what's really going on. And that was my experience. I'll pass it back to you.
Listen, so I actually want to ask you a follow-up, and I apologize. You're going to hear me go outside because I'm taking the pup for a little walk down the street. It's good boy, and so what I was going to say is that you talked about a politician that was coming to, coming in from, what you call Ottawa to rally up the troops, if you will. I also understand that there is a big politician from West Virginia in the United States also making his way to Alberta.
So he made his way. I seen him in the helicopter touring our oil sands. Instagram is just wonderful. So this guy, I seen him on the story with Kenny, and he was touring our oil sands. And you have to ask yourself, when was the last time a congressman was on a helicopter doing a site tour on quote-unquote dirty Alberta tar sands? When was the last time?
Incredible.
So I mean, also, to me, that is a narrative change. This demonstrates a shifting tide. All right, the guy's in the chopper. He's touring the place. He's having a great time. This politician recognizes where the puck is headed, and he is doing it for himself predominantly, right? He's trying to make sure that he is aligning preemptively with the way that the tide is heading. Go ahead, back to you, #oil.
No, you're absolutely right. Dave, we're going to pass it over to you just while I get into the elevator, but I just want to say I completely agree. The tide is changing, and if we have friends in the Texas Railroad Commission obviously running, saying almost every single candidate that wants to fire up Keystone conversations, reality or not, completely supports the sort of thesis about the political change. Dave,
and I'll tell you something, #oil. The Americans, when it was in their benefit to sabotage Canadian infrastructure development, they took it. Listen, it's a dog-eat-dog world out there. I don't have any illusions as to how, some of the biggest true competitors of energy producers are other energy producers when you're dealing in a commodity environment. Oil is a commodity. No one cares where they get it from as long as it works and it meets the right standards. So the guys that were funding our anti-infrastructure, they were American companies. Harold Hamm was pumping millions of dollars into these Extinction Rebellion, climate tree-hugging individuals in order to be able to ensure that his product had a competitive advantage, right? So we got to be painfully realistic here. We've had Russian propaganda, pumping. Listen, this is how it works. How does it work? How do you increase the cost of oil? All you do is you limit production. That's all you do. Limit production. Hopefully demand continues to rise, and you're going to get into an environment where you make lots of money. So it's in the benefit of an oil producer to have other oil producers go out of business. And people want to blame people just want to blame Saudi, right? Because just blame the Saudis. They're the scapegoat. Well, to me, it doesn't make any sense because everyone has their own, everything has their own little thing to add to the table. And no one is a saint in the discussion. Everyone has played their own little role along the way. It's just recognizing all the different roles that everyone has played and then thinking. So right now, the other issue that's happening is once you equip these guys and you fund these movements, these tree-hugging movements, they're people ultimately. They're not a light switch that you can turn on and turn off. You get these people, you get them to organize, you fund them, they go down there, they create a bunch of disruption, and then it's like a cancer, right? They grow, they metastasize, they go all over the place. And then, some of them went back down to the border and they started campaigning against the Dakota Access Pipeline. And a lot of these guys have been funded, right, by energy companies. This is this is the reality I think that we don't want to acknowledge. There's a very famous energy company here in Canada. Their largest shareholder is one of the largest contributors to Extinction Rebellion. Think about that. Okay? So an oil, a large share. Why? Why do you think? Well, how do I increase the value of my goods? By going to other places in the world and shutting down their production. Who suffers? The common man, right? The common woman. They suffer. So That's the perspective that I'm trying to provide to the people in the room. It's a nuance.
Sorry, may I just jump in before we pass it to Dave? I'm just going to tell the people in the room. There's a reason as well financially that lots of people new to the oil space don't understand, and this actually supports a lot of the bullish thesis today for the Canadian oil mafia and obviously lots of the investments that we target here in Canada. And it's largely because of a spread between what you were earning back in the day in what what was produced in Alberta, let's call it Western Canadian Select pricing, which is the symbol WCS, versus what would be produced in West Texas Intermediate pricing, which is WTI, which is exactly what you see when you go and look and see what the price of oil is doing on any sort of given day. And when you have people blocking, politically motivated down south, well, connect the dots. The refineries aren't in Canada. The refineries are actually down in the United States and the Gulf Coast. And so what happens is you have paid protesters who block projects, like let's call them pipelines, right? And if you block pipelines, there's less production going to come out. But if there's more production at the time, Western Canadian Select pricing drops because there's absolutely more supply and nowhere to send it, right? And so what happens is that supply goes down at an insane spread. And that spread between Western Canadian Select prices and WTI prices, which was once $50 between the two of them, right? So let's say oil was trading at $60 in West Texas. People of Alberta were getting $10 a barrel for this, for the same good, right? Obviously, it hasn't been refined and it has to go down there, right? So there's obviously some marginal increases in costs. Then the people in West Texas would produce the oil and sell it back to the world. Incredible. Sorry.
Hey guys, we
was about to say.
We appreciate everything you guys are sharing with us. And I don't want to rain on the parade, but the thing is, the main purpose of this live is trading. So when I asked you to come on, I wanted you to. I should have been more specific. I wanted you to more so touch on some stocks, like oil stocks, maybe some commodities, any energy stocks that
what kind of risks
in,
do you want?
that you've sold.
What kind of risks do you want to know for these stocks? We can definitely help you.
Yeah. So if you guys want to talk about talk about some energy plays that you're in and what your thoughts are.
Or we can take the questions, guys. Sometimes people have the questions.
Right now.
We don't have the time right now. More left on it. Sigma, remember we have another 45 minutes to go, and then we have another guest coming in, and plus I need to go through some stocks which are popping up. So we take a couple of questions and.
Yeah. So what Josh is doing right now is he's actually sharing his screen through a YouTube video. He's linked it on his page. So what we do here at the Top Trading Edge live space is that we do trades live. And we also break down the fundamentals and go through different names. So if you guys have some oil stocks, Josh can pull them up on the charts. We can look at the charts with your input, and then we can break down the fundamentals. But right now, we like to give live updates too. So Josh, if you want to go ahead and give us a live update of what's happening in the market, and then maybe we could take a look at a couple oil names.
Yeah, absolutely. So if I'm sure absolutely there was one person who was talking about JPM. I guess he had a little positions, and I was trying to redirect him that when I looked it up, that price of control line which was about to test, and he had a position probably. So the price of control line went down. So maybe if that is the case, then he probably would definitely benefit out of that because he was trying to exit his position and since morning he entered. So that price of control line was tested and it broke down, and now again went down a little bit, and maybe it popped. So maybe he might be able to get out of his position maybe around $126, which he was talking about. So he might have a little opportunity. And talking about the market ticks, right now ticks are ticking around 200 positives, but still is crawling. The market is crawling upward. So we are a little bullish today. And same thing here on the QQQ technology stocks. Also, they are covering their shorts. It's going to be a bullish today, and more likely tomorrow also, the way it sounds. So if anybody expecting to go down, any bear cycle today. I doubt on it. Why? Because it's been 11 days constant, as I tweet about yesterday. Same thing, SPY chart, that is not going to be. So if I look at the SPY right here, so give you a little update, and then make sure this is what exactly looks to me right now. If your daily chart, same thing. We broke through the 50-day moving average, and basically poked through. We are now, so it's bullish, and what I said is probably it can go to 444, 46, 446, and then if that cross, then we're gonna be at testing 200 moving average. Probably that can go to 448. So most likely it trends bullish, because all the bears are trapped underneath here around 436 last 11 days. So still looks to me bullish, because we broke the 50-day moving average. So maybe tomorrow looks to me a bullish day, guys. So plan your day accordingly. Seems like to me a bullish day for tomorrow also. So that's the update, and just a little bit intraday. Intraday ticks are still ticking, so slowly crawling, guys. Okay, slowly crawling. There might be a little cycles of 10 minutes pull back, again 10 minutes will be a bull cycle, but bottom line is crawling upwards, and slowly will grind. So if you have any positions, it should be fine for the bulls one. The bears one, just be careful on bear side right now. I don't see anything anything going downwards. And thank you very much, guys. Actually, we can take a question actually, and then if you guys have anybody has a questions about it, the stock, definitely I can go and analyze the stocks, because bottom line is where the price is going. And stock market, when we analyze the technicals, everything is price. No matter what headline people create, but bottom line is they go and trade. When they trade, that's what I can see here, what exactly happening. So let's move on, and let's move on to the next one.
Hey Josh, I was watching SPY. Right now we're up about $4, a little over $4.
Mm-hmm.
What is the best day in terms of actual price change for dollar that SPY's had this year?
Oh, I could not exactly understand. You talking about intraday, or you talking about the long term, or what exactly you talking about?
For intraday.
Oh, okay.
Price change in terms of dollar.
Oh, okay. In the dollars price change. Right now, market, the bull cycle is already ran for the day, and if you ask me, market has a room to go up also. And if I look at the price of control line, we just broke through that also. So based on that, price of dollar, maybe next stop would be 445, which I said that, and that would be the 100-day moving average on 30 minutes. That's the volume profile. We can reach somewhere around 443, 443.85. That would be the change can happen, and my session is also somewhere around that area. So we have to go slowly, one step at a time. Is market not gonna move crazy right now? Maybe at the end of the day, when power hours might move. That's what it looks to me. It definitely looks to me a bullish. Just hang in there.
Thanks for the updates, Josh.
Mm-hmm. Next, if anybody has question.
I did. Josh, can I ask the speaker what's happened with the Keystone? Anything at all?
Oh, Keystone.
Yes.
That probably saw it, or.
That was the proposed oil line down from Canada to the States.
Oh, Keystone, man. I don't know about the Keystone, man. You guys know, if anybody knows about the Keystone.
Speaker still here?
Oil God, if you want to request speaker again, we'll make you speaker. That's a question.
Yeah, I'll do that.
Yeah, guys, Keystone is dead. It's a done deal. The company that was developing it has officially said that they will not restart it. I believe even if it was re-sanctioned. So as of now, that's essentially done.
Thank you.
Thanks.
But I heard that probably they might pop back. I know I'm just it's guesswork. So if anybody has any input more further. But do you think it's done, right?
Yeah. if it was going to be picked back up, a different company would have to decide to take that project back on.
Okay.
I believe I think it was TC Energy that was developing the pipeline, and they put out an official statement maybe in January. I think it's been a while that they were officially killing the project on their books. They had kind of written it off.
Okay, gotcha. Thank you. Look at the guy, spies popping out. Okay. Yep, the ticks are positive, 900 points positive, so still going good. Yep, we can take a next question if anybody has the next questions.
Hey Josh, could you analyze GPS? It had a good move today. It's trading right around the 50-day moving average right now.
GPS.
SPY is popping up, but NVIDIA is not popping. I think it will go up.
One at a time. So let me right now finish the GPS. Yeah, GPS got rejected right here if you look at the daily chart, which is 50-day moving average. So though people, you think, oh man, what happened to GPS? It was going good, right? It was going 1532 probably. It poked through the 150-day moving average. But I think it got, market maker, they just thought probably not to give it too much room at today. So if I can analyze long term, their estimated revenue is like negative 13 cents and they reported negative 2 cents. That's fine. But their reported revenue is almost like $4 billion, 4.50 billion. That's a good revenue. But why? How come that?
Penn National breakout.
Penn National, okay. Yeah, so GPS, they expect it to be good revenue next quarter, so it's just holding the price based on the negative EPS. So if you think you expect to go fly high, let me see GPS. GPS is right. The balance sheet, I need to take a look at it. If I see here, 16 billion, they're almost 16.7 billion revenue on it. But if you look at the EBITDA is 1.3 billion, so they do make good profit, almost 8% net profit. That is good. So numbers are great. The outstanding shares are 369 million. That's fine. They have a huge debt, man. Almost 6:7:1 ratio versus cash. So, but they're profitable, so we should not be worried about it. But as the interest rate goes higher, that probably will be in play. The forward P ratio is 7 times, so still is a fair value. So if you ask me how long it can go further, I think right now the value is fair for $15 based on their EPS. If you look at the EPS is going to be positive 6 cents. So I think it's fair. It's not going crazy anywhere at this point. Just give a little time if you have positions. I think everybody's waiting for the earnings. If earning would be far better than the previous quarter, then probably might move around maybe can go to $15. But I mean $17 here, $17.44. But at this point would be wait and watch game. So if somebody has a profit, wants to take it, today is the good day to take profit. Maybe tomorrow pop back a little bit, pop up, breaking 50-day moving average. But it's just like a hope. So I do not know your entry exit today, tomorrow, intraday, or long term. But this is just the analysis of GPS today.
Sounds good.
Thanks. Somebody was asking me what was it?
NVIDIA with all the market going up, but NVIDIA is not.
NVIDIA is highly. Remember, they wanted to dilute the stock and they want to go through the approval. So NVIDIA will not have any hope on it. And I think today was the only hope. I mean, it might be tomorrow pop a little bit. It will be pop and trap, and then again. But bottom line, next week the new week starts, and NVIDIA will be back to the routine slaughterhouse. So be careful on NVIDIA. I'm not going to be long, and most of the institutions, they will not put the money into this stock. Why? Because obviously they're not going to go get slaughtered into millions of billions of dollars in this company, just like because Jim Cramer believes in this company or whatever he thinks. The bottom line is stock is not performing well. So this was all pump and dump, and now back to reality, guys. So NVIDIA is expensive, as we all know. means the earning per share ratio is 132. You got to give a little time. Let the Nvidia settle down the floor. But right now the floor is testing, and we need to give it some more time. I think everybody is waiting for FOMC meetings and see how the economy plays the role. I mean, most of the institutions are waiting for the macroeconomy roles to play. So we got to give some time. Not going anywhere. Nvidia is just a few bucks up and down for the option to cover. Remember, options are expiring tomorrow, so that's why the is little pop today. But I'm not expecting Nvidia to go crazy because of the highlighted news. Just the covering right now. Shorts are covering their position. That's what it's all about. And some of the day traders are trading. That's it on Nvidia. Okay, I'll try to add some more people. So there's a lot of requests. So I'll add some people and take the sum of this from speaker. So please.
Hey Josh.
Yeah, Del.
Check out CNQ.
Which one?
1 year chart. CNQ.
CNQ. Wow, it's flying high, man. Beautiful chart. Wow, what a beautiful Canadian Natural Resources Limited, man. Come on, Dal, man. Where did you hide this one? Did you figure it out from your? Did you find it from your back pocket? Nice.
That's the one that you mentioned.
Oh wow, 175. Okay, there's $6 billion revenue. It's a big company. Beautiful. 175, 175. Wow, this is undervalue, guys. This is undervalue. CNQ. Let me look at their outstanding CNQ. CNQ. Dale, good work, man. Let me see. Wow, this is and they have market cap $72 billion. Wow, that means they have outstanding shares are high. That's why. Yeah, 1.2 billion outstanding shares they have, but the revenue is 30 billion and EBITDA is 15. So they are making net profit 50% net profit. Love it. Love that profitability, man. And if you look at the debt is to ratio is 16:1, but they're profitable, so probably they can pay it off anytime if they want to. But I think they're using the interest, they're paying 2-3% interest rate and generating 50%, so they just prefer to have the debt continue and just make the money. So I think that should be fine. As long as you're profitable, good profitability, then debt is fine. But if it is not, but this company doesn't, so we should be fine. Only thing we need to find out, forward P ratio is 7 times, so very, very fair value, guys. So what do they do? This is a hidden treasure, I guess. Canadian Natural Resources, and this company does is produce, market, sells crude oil, natural gas and natural liquid. Do you know ratio of natural oil and gas? Because I don't want to be a super bullish on oil just now, because market, as you know, politician doesn't want oil to go up, but natural gas they want to go up. Maybe natural gas will go up. So if somebody can nail it down about how much ratio of the natural gas they have, if that is the case, then this company can be, it's good. But if it's oil, then it's just it's a pure play like Oxy, but based on a forward P ratio is good. If I look at Oxy forward P ratio is what? Let me see. Oxy forward P ratio is probably, they are 15. So yeah, see, this one is better. I think this is I like it. CNQ good. If any pullback happens, would be a great play. I'm going to add it into the list. Actually, I like it, so I'm going to add it into the list. CNQ. Okay. Yep, great CNQ. Next.
Hey guys, what do you guys think of PayPal pullback sharply today, and their earnings are on the 27th?
Yeah, I have one news for PayPal. PayPal, as one of the founders have left, and I think he's joined Facebook. I think, I'm not sure.
No, Walmart. I think the CFO is joining Walmart.
Yeah.
Okay.
But that doesn't. Obviously, the CFO leaving is never a good sign. But PayPal is not a new name. It's not like a SPAC deal that recently came to market. It is an established player with well-known products and very good adoption. So I think it could be a good opportunity heading into the earnings.
Okay.
What do you guys think?
All right, let me take a look at it. And somebody making noise on that thing. If you can mute your mic, I'd appreciate. So what happens is this chart look like a M pattern here, but I need to analyze the financial because when I look at the chart is basically trending down and we have a gap little bit up. It can go to another $107 from here. Do you have any long position, short position, or intraday, or you want to buy, or you already have position?
I'm doing some short-term scalping at the moment.
Okay.
I'm looking for.
What is your dollar cost average right now?
Something under 102. If I can get my hands on.
Okay.
For a run into the earnings.
Okay, so let me look at if I take a look at their earnings, a couple of our previous earnings, and look like they are making earning per EPS is $1.08, $1.10 around area. Same thing last quarter they did that, and $6.91, and they are expecting the revenue to go down in forecasting in the next quarter. So that's why market don't like it, and they are drastically earning per share ratio is also they're expecting to go lower. So that's why market don't like it. 88 cents. So if you want me to analyze the stock based on current price right now, based on what they are saying, if they meet the expectation, 88 cents into 4, 352, 105 divided by 3.52. So you basically paying like 30 times right now. So
it's a 22 and a half forward PE.
Based on
market cap of 121 billion. So on a forward PE basis, it's not extremely expensive, but it's not very cheap either. But for a growth name like PayPal, paying 22 times, which is somewhat of a market multiple at this moment.
No, it's not 22 right now. It's not.
Outrageous.
Yeah. But right now, you got to look at this company saying that what is forward means projection. So they are projecting now from here. It says 88 cents right here. You say company said we're gonna forecast next EPS is 88 cents. So 88, when you take a look at it, 88, and then based on this, it comes out 88 into 4 times 352. So your yearly EPS would be 352 and divided by 105. 105 divided by 3.52 comes out 29.82, almost 30 times. So you basically paying close to Apple price. Apple is asking 30 times. Google is asking 22 times, 23 times. So still this, if you ask me, you like to be bullish, you can be, and market can move around up and down here, but based on this, the way the market conditions is, when the FOMC meeting coming in and then rate goes higher, this company will have a more impact on it because of the the cash liquidity.
And Josh, I completely agree with you in the long run, but I'm not. My time horizon is not that long. FOMC meeting is not until the next 3 weeks, right? It's in May. I'm not looking to be a very long-term investor. I'm looking for. I kind of, this caught my eye because of the drop today, and I feel like I can. It could be a good opportunity given the setup into the earnings in the next week. It is the week after next, I think.
The earnings are right here. I can see when it is. I'll tell you right now. So the earning is on 27th April. Yeah, so probably not next week, next to next week.
In a week and a half, this could be,
okay,
above at least 110, I guess, because it has come down sharply.
So if they beat their earning, probably couple of dollars up and down. But remember, at that time, what would be the price? If this market maker next week, I'm expecting next week market will be bearish, because Fed wants to bring the equity down, and I think we are the highest inflated equity we have, and I'm sure market might go down next week, but it's guesswork. Okay, we have earning coming in and a lot of things are playing around, so we could be in a different story. But I would be little this flight, this you want to reach to the destination with this flight, but this flight looks little scratchy. It's like 50-50. You might have a hope that they might have a better earnings and that they might fly, but based on earning, based on the forward P ratio, probably you might be 50-50. It's up to you whether you want to take
Look, there's no doubt it is an expensive name, okay? And it is a growth name.
Right.
And I'm
Planet, if I were you, not be long tech for 2 to 3 days, not more than that. What if this?
Exactly.
What if this
Exactly.
thing falls?
I'm looking for a run into earnings. That's all.
Yeah. What if the tech stocks keep falling? It doesn't matter. Nobody cares about earnings, man. If all the tech stock falls, it will fall. What if this falls 20% and maybe they did good earnings and it might jump 20% more, right?
No, it is well. My observation is that fall has already happened. It's baked in, right? So now it's time for a bit of a ramp.
But what are you expecting? No, Gopi. My question to you, Planet. This is how you need to think. Okay, where we make mistake is you have to understand who will buy the company right now. Where you know what we're gonna have. We have the biggest credit crunch, guys. Whenever the interest rate goes higher, the people will have a more credit crunch. We have bigger mortgage issues. Well, there will be a lot of issues where the highest debt we have right now in this country, highest debt we in every sectors. So those debt will be more vulnerable. So people will not have the pricing power. Hope you understand. So less and less pricing power means people not gonna go and spend money on PayPal, and slowly will go down, and those number will come forward to you. So based on that, you need to analyze it. But again, you are only for scalping. You said before the earning, that can be a different place. I would not go into the more analysis in depth, but the price is fair right now. Whatever the price is, that's where the price will play. It's all your luck here from. If you want to exit before earning, then it's just a pure luck. If the market moves with you, then probably you benefit. If market tanks, then you might lose. That's what is also. So it's a little risky ride for me. I would pick not the risky one. I would pick another ride where I feel like 80% not positive side. So that's what I would look for it. But it's up to you. What do you like about it?
So another one I picked up yesterday was Microsoft. Got in at 181.
Mm-hmm.
So here again,
281 Microsoft.
Analyst downgrade.
Mm-hmm.
Some negative commentary came out from analyst day 4 yesterday,
mm-hmm.
and the stock pulled back close to $15, I believe.
Microsoft?
Yeah.
Microsoft. So basically, Microsoft is not about the analyst. Microsoft, what's happening is market maker. They are taking the air out of the tech stock. So this is what they are doing right now. You have to think out of the box. The box is.
No. So nobody can say for sure what market maker is doing, but
Mm-hmm.
what is known to the street is that negative commentary came out from some of the analysts saying that
Mm-hmm.
all the cloud adoption has been pulled forward, and which is why the growth in Microsoft may not be there going forward, which is why this has pulled back $15 in less than 2 days.
Mm-hmm.
So again, I'm just looking for a run into earnings. I think it's a good opportunity.
Oh yeah.
Again, this is not financial advice. This is just my thoughts.
Yeah. I mean, it found the support yesterday, and I think you had a great entry on yesterday. And this will be this is what I teach here: is whenever you see the profit, 20%, 30%, whatever profit you see, don't be greedy and take the money and run, because cycles, there's every week different cycle starts, and right now you are in a perfect play because options are expiring tomorrow. And those are monthly options as well as weekly options. So there was a bear trend started for Microsoft last week, and they've been shorting, and now they are buying back because they have to buy a little back. So perfect time to take the money out by tomorrow. But if some Monday will be new week starting, we do not know how the market will turn. At that time, we want to watch the wind, whichever direction wind goes. But at this point right now, as I posted yesterday also my SPY chart, that I am only bullish for today and tomorrow. And I said that yesterday. That's it. That's the real game. That's the real deal. Okay. Next.
Hey Josh, it's Kyle here.
What's up, man?
I had a question about SU on TSX. I have a long position.
SU Energy, Suncor Energy.
Yeah, for Suncor.
Okay.
It might not come up in TradingView, or
no, it can.
Okay, it's on there.
Yeah, yeah, it's there, $33. Beautiful chart, man. It's looking excellent. Um, 70 cents. Okay, EPS 70 cents. They missed a little bit, but wow, the revenue is great. And 9 billion and 122. What do they do, man? They are in what?
Oil and gas, man.
Oil and gas, right? Suncor Oil and Gas. So,
Oil.
man.
The,
Okay.
Sohab that was just here, he's from Calgary, and that's where Suncor is based out of.
Oh,
Calgary,
really?
in
Okay.
Canada.
Okay, so this one is high flying stock. $6. $6. 1 second. They'll hold your thoughts on it. I'm analyzing for somebody. $6.55 is forward P ratio. Revenue is the revenue is 39 billion, so that's good. EBITDA is 11 million. So comparatively, this company and they all told me I think this company making less money compared to other one. So see what was that, but this one is 39 EBITDA 10. So previously around 30%, 25% profit on 30% net profit on this company makes 33, 35% net profit. Other company was making more money, 50%. And but over here we look at outstanding shares are outrageous also, 1.4 billion more than the previous company. So I would pick the other company. I don't know you were listening here or not, but the other company also was great when compared to this one based on the forward. Forward P ratio coming out the same. This one has a high debt.
I googled that CNQ. It's the biggest producer of oil in Canada.
Uh-huh.
Large deposits of natural gas.
Oh, I'm sorry. You Google on this company SU or you Google your company?
CNQ.
Oh, okay. And how much is the ratio of the gas?
They didn't say, but they said a large part.
Oh, large portion. Okay, so then that could be a great one. So guys, over this company to that company, CNQ guys. Okay, he somebody just brought the CNQ, and I think when I compare with both this one and that, CNQ would be a better play. So if anybody wants to be comparatively, this is not bad. Okay, this is definitely looking good. But when I look at the foundation, financial foundation, compared to this, that one makes more money. Net profit is that company makes 50% more, 50% net profit compared to this one.
And Suncor is bigger than CNQ.
Oh, Suncor is bigger. Yeah, gotcha. Yeah. So, but again, the float is higher too on this one compared to other one. So CNQ is better than this one.
I've already kind of made over 150% on this one, so I was kind of just trying to figure out if it was time to take the profit on it and switch out.
Oh, I see what you mean. Yeah, so if it is oil industry, guys, it's just now look what happened here. If you take a look at it, last 1 month he's been trying here. So I would put a trigger here at 34.19 whenever market pop, and people think, oh, it's gonna fly high, and then you just exit at that time right here around $34. Whenever $34 happens, and I would take the money, and then I look for a better opportunity where something is bottom out. Always try to exit at the top and look for another opportunity. There's a tons of flight you can catch, which would reach to your destination. Your destination should be making green dollars. Doesn't mean, you think the oil gonna go to 150, it can go, but the risky ride. So I would ride with the anything with the gas I like. So for example, BOIL ETF, I always follow that, and look at that, every day is going up. It used to be here 59, 55, and look at that now. So it's going high. So keep eyes on something like that. Whenever you pull back, this one, look at parabolic move. So yeah, something like that.
Thank you.
No problem. Thank you, man. I think time to take a lunch, man, before we have the or unless somebody has a questions, I'll take the question.
What are you having for lunch, Josh?
Josh, you can take a look at Mosaic.
I didn't started the lunch yet because I got to go upstairs and check.
I'm a long time bull on that, man.
Yeah, this one is a great one, long run. This one has this is great. This Mosaic and NTR both, they are great. You just need to if you want to enter, you have the positions. I don't know what your thoughts are, but we've been doing this. We've been trading since here. Right here, it's been going like from this area. and now it's here.
So you're holding it and
No,
you're gonna write it
I
tomorrow?
don't hold. I take profit. I move on. I pull back and something like that. But right now I'm not holding. But many people in the community they are.
I'm holding. I have long leads on that.
Mhm. Yeah. So what was your question? Do you have the position, or you looking for position? What was your question?
Um, I did some call spreads
Okay.
few days back, and now it has kind of um, ran up, and it's above my short strike. So I'm waiting for a pullback to get back in.
I would not go on covered call. I mean, if I don't know what you have a stocks right now with you. You said you have a stock and you do covered call, or just trying to short the stock.
No, I had call spreads.
Call spread. Okay. So in the call spread, I would go with the but you have the debit credit. Call spread debit or credit. I mean bulls or
Long
bearish.
call spread, debit credits.
No, you can have both ways. That's why I'm asking you. You can have you can have the bull call spread and you have the bear call spread.
No, I'm talking when I say call spread mean bull call spread.
Bullish. Okay, so then it should be fine. So if you want to get rid of the other portion which is negative one, that you can see get rid of it because today was opportunity probably it went down and then probably can pull back can go up next time. But yeah, this stock is good and there is no competition. It's only NTR these two companies, and they are the biggest gainers. Less competition, and you know what happened to Russia and Ukraine. So these they will benefit the most. Yeah.
Yeah, thanks.
No problem, man. Okay, guys. You guys can continue. I'll take a lunch. Okay. You guys can continue. Meantime, I'm gonna just put this screen here. And if you want to continue, if you think you're getting bored, I'll put some music. And if you want to talk, you can continue talk.
Spy is falling.
Spy is falling right here. Let's see.
Sky is falling.
Sky is falling. Spy is falling. All right, guys. Put some music if you want to.
Sigma, are you doing anything?
No, man, I made my 10K this morning and I'm done.
Nice.
I'm just watching and talking with you guys, and hopefully I have some questions for Tommy when he comes. I mean, I want to see what he thinks about the current state of the market and where we're headed. How about you, Gopi?
Man, there's a news. Let me exactly pick. This is pretty bullish for the cybersecurity sector. Let me pull the news. And this it's pretty big news. Let me see. Okay, so what?
Send it to me and I'll pin it.
I'll just read it. I'll just read it. U.S. says advanced hackers have demonstrated ability to hijack multiple industrial control systems. This is pretty big. All the natural gas investments that we have, right? Pipelines and stuff like that, they have a lot of control system, and that's a major risk. Power grids, natural gas pipelines. Man,
can you send it to me?
Yeah, sure.
Is this related to cybersecurity?
Yeah, cybersecurity. Look at the ticker S. Crowd, everything running up. Look at S. S is up. Sentinel-1 is up 10%.
Yeah, I was gonna say Palantir.
Sorry, which one?
Oh my gosh, yeah, and Palantir, CrowdStrike, they would all benefit from this. Just look at Palantir and CrowdStrike.
Palantir
not so much.
Yeah, but all the cybersecurity ones will benefit.
Oh yeah.
So you have.
This is in the U.S.
Yeah, it's in the U.S. You have a ticker called HACK. HACK it's an ETF, and there's another one called CIBR. Then you see Zscaler, Crowd, FVBR, Net, Palo Alto Networks. So all of them are like
about 2% now.
Yeah. When did this news come out today?
Just few minutes back, man. 26 minutes back. You have to be bullish on cybersecurity, guys. Whatever it is, you've got to be bullish. That's why I've been buying Crowd. I sold it. I entered back again. I'm riding Crowd. Whichever you guys like it, just get it.
Hey Gopi, are you entered to hack ETF or the individual ones?
Individual, man. I don't like 2%. I like 10%.
Got it. And what strike and what date?
Let me give you. Hold on.
Are you in any Palantir, Gopi?
No, man. Palantir is a very good company, but not right now.
The balance sheet. Yeah.
Yeah, not right now. Not in a. You don't want to be long in any tech, man. You don't want to be long in any tech. You just play it.
No, just even for the swing.
Yeah, that's it. 235 for next week, Crowd.
All right, thanks. I do want to do PanW, but it's extremely highly priced, so I don't know. At some point, it's going to get pulled back, and I'm afraid of getting it at the top.
Yeah, the thing is, when the news comes out, right, doesn't matter. Everything will go. Because you see, we have a long weekend coming, So the more the market is closed, it is better for cybersecurity is what I'm thinking, because there will be more news coming out.
That makes sense.
Josh, what are you eating? Sounds good.
Whatever I'm eating smells good.
No, it sounds good. What are you eating?
No, I heard this smells good.
Nuts or fruit? Nuts or fruit today?
No, today Indian curry,
Traditional food.
Indian curry and Indian bread and and some lentil soup. That's it.
I need to go get some food
His wife makes it for him while he trades. His wife makes him do food while he trades. He's living the life.
That's perfect. She doesn't work.
Guys, while I'm eating, if you guys can do retweet this, I post that we have a special guest today at 2 p.m. hedge fund manager. If you can retweet or re-quote right here, you can say re-quote tweet. Yeah, if you click on profile, you can find this on a second or third one. So if you can do this, everybody can do that. Would appreciate. Spread the word, share whatever you can do.
I was reading a news in LA, right? One of the Walgreens, they locked up everything, man. All the stuff that in the store is behind a lock.
Yeah, I saw that article. Imagine living in that society where you literally have to go get body wash and you have to ask the front desk person to come and get the lock and key for you. It's some bullshit right there.
Man.
I was visiting the U.S. I was in a Walgreens in Las Vegas, and all the mouthwash, it's locked up behind a glass case, like at a gun store.
Man, that's really scary.
Not the way we should be living.
I think this inflation is going to make it more worse, man, in the coming months.
You think it's inflation? I think it's people stealing it to get drunk.
No, it's inflation too, right? Because their money buying power is now no longer as before, right? So you need more money to buy stuff. Week before, my wife's car, they stole the catalytic converter, man. They just cut it off. And then, now I'm like, I put the car, it's been like 3 weeks, and then they have no clue that when the parts are going to come in. So it's like, it's so crazy out here, man. It's like every single, and when we call the cops, and the cops say that, last week his got stolen. So it's like, okay, I'm like, okay, thank you. It's like, it's a kind of relief, not me, even the cops do.
What town is that in?
This is in Houston.
I'm jumping off for now. Thanks for the knowledge, everybody. Happy trading.
Guys, take a look at the QQQ. He's taking the 200-day moving average out on intraday. Okay, just a little bit careful.
Hey guys, sorry about the guest. I should have specified to them that like we want to talk about energy names and stocks, and that we're focused on trading. I know they kind of went on a rant there.
Yeah.
We can't hear you. Gopi, you can hear me?
Yes.
Yeah, I was listening to you about how they lock everything up. By my area in the Walgreens, and they put that clear they put it in basically a lock case, and they locked everything up.
Yeah, man, that's really scary,
And then for the catalytic converter, there's a lot of people. What they're doing is that they're going around cutting in the cat because they need the material from inside the cat. It's precious metal.
Yeah,
precious material.
Platinum in that.
Yep.
So is it that the law and order situation in Houston slightly worse off than the neighboring towns like Dallas and Austin?
Oh, it's all the same everywhere, man. You think about it. This is the beginning, man. It's going to get worse everywhere because inflation. They are saying, we have seen the peak in inflation. I think they are just, they just want to calm everybody down. The more it goes further, it is going to go up. It is going to go more up. Food inflation is the one that's going to kill everybody. They are going to steal. The more crimes, the more the gap between the rich and the poor, the crimes will increase a lot. And I think we are seeing this is the beginning, guys. This is the beginning.
Well, the midterms are gone, so the Dems are gonna not coming back in the midterms, right?
Yeah, God knows.
National level, we're talking about we're talking about the fact that I live in San Francisco, and so the issue here isn't inflation; it's basically not locking up criminals. What we have on the West Coast, and you also have a number of blue cities, are judges and district attorneys who believe it's immoral to lock up criminals and put them in jails. And that's why you basically have rampant crime. Now, regarding the idea of basically catalytic converters being cut off, I know here you basically can get your car a cage, so it's really hard for them to remove the catalytic converters. You get an extra thing, you pay an extra $100 to make sure you have it basically secured so it can't be easily taken out. Yeah. But it's not inflation, it's basically criminals not being prosecuted and kept in jails.
Hey, real quick.
I think Joseph, sorry, somebody wants
Does anybody...
Why is it immoral to put people behind bars who do bad stuff?
Because that's what the Dems think.
So somebody got on their back, was like one of those little, got on their back, crawled under your car while you were sleeping, and took it out.
Yeah.
That is crazy.
No, like, yeah, there's a park and ride.
Hey, Sigma and Gopi, you guys know about this company PBR?
Yeah, Petro Brazil, yeah?
Yo, there's a lot of block calls coming in for this company. Where's Josh?
I own a position there. I like that company.
Dude, they're coming in millions.
Yeah, I have a nice little block of shares in PBR.
Tell me more about
it.
What is it?
When are the results?
PBR.
No, when are the results? Are the results
PBR.
I'm sorry, what is that?
It's a government-owned Brazilian company, Brazilian oil and gas.
Yeah, what do they do?
It's oil and gas production, man. It's one of the worst companies that I've ever seen because everybody is corrupt in that. Every single person. They take money out of the company like anything. And once the regime changes, all the executives change. Next set of executives come, they just eat that company, man. So if you are holding for the long term, good luck. But this is riding because oil is riding up.
Okay,
well, I'm holding because oil is riding up.
Yeah, I don't know nothing about this company, and there's so big blocks coming in. That's why I asked.
Yeah. That's.
While the wind is at the back of this company, it may do well from a stock perspective, but like somebody was saying, it's the entire management of this company is they have questionable practices, to put it mildly. The widespread belief is that they are highly corrupt, and it is like any other nationalized. This is a state-owned enterprise of the Brazilian government, right? So, like any other state-owned enterprise of any of the emerging market countries, this is no different.
What about Brazilian? Sorry, I missed that. I was not here. What was you talking about, Brazil?
Are you saying a lot of calls coming in for PBR?
Mhm.
So I was just talking about the company. That's one of the worstly managed company, and it's riding just on the oil prices. And the results are on May 5th. So I don't know what is coming next. Maybe there's a deal between US and Brazil to get oil. I don't know.
Mm-hmm. Possible. That's true. Well, guys, I'm reshuffling about speakers and listener. Okay, so just people are requesting. I try to add somebody if somebody has any questions. So don't feel bad if I try to take you off of the speakers because I had to also add other people.
I mean, you can bring me down if you want.
Oh, plan. Okay. Right now I don't have any requests. So you good? Yeah, I have got a request. So hold on. Let me add somebody as a Brendan, and then remove from speakers. Okay. All right, guys. So if anybody has a questions, I'll take the questions till we are waiting for the market.
Does anybody else have the problem with when you get moved down? I don't know if it's just space in general, but when you get moved down from speaker to listener, you can't actually hear any of the speakers anymore. So you have to like leave and rejoin.
Oh wow! Yeah.
It's a bug sometimes.
Yeah, space has a little. Sometimes it create like issues. Sometimes it couple of times I had to bring down the whole space down. 2 times it happened, and then rejoin it because it was echoing. My sound. If 2 speakers opens up, this 2 mic opens up at the same time, it echo to the one another whole group, and then I had to bring down the whole space and then rejoin everybody, and then everything was fine. And I thought maybe I had some problem in my computer system, but it was not. It was just the space.
Can you check Airbnb? It's flying today.
Airbnb flying today. Airbnb is heavily oversold now. It's going back, but the fundamentals are not great on this company. So I mean, right now the summer is coming, so probably look at the 4 EPS. It's horrible. So yeah, but it broke through the things. The gap is been filled. Be careful now because there was a gap, and that is been filled today. So it was a great run up today. It was a great run today. But now I would not be long. I would short. Actually, you know what? It's a good short. But
Actually, the earnings are coming in and expected to be good earnings.
Earning is way far, man. Earning is May 12th. May 12th after FOMC. May 12th. So it's way far. Today just this been shorting it last for 6 days. So probably it buy back. Tomorrow we'll see. But what are you trying to be a long on this one?
Yes, till earnings.
Until the earnings. I mean, I would wait. I would not go right now anything on this one. But it's up to you. I mean, today it bounced, so it's looking great. But it was gap fill. Remember gap fill. So maximum you can run to here. Last bull run it got rejected. 178. Got rejected.
I got cut out. I don't know if you covered it. It like kicked me out last time. But I'm starting to get a little. I don't know. Maybe it's just me being impatient. But JPM, I'm getting theta burned so bad. It's at the price point right now, actually, where I entered, and I'm down 25% of my position.
So you're still holding from this morning?
Yeah, but okay, it's theta burn. But remember, in today, I don't know when we were talking, and I made a circle here. You look at this circle. I don't know you were listening or watching or not, but it was testing here, and I made a circle. Say, hey, he want to get out of or not? But that was right here. It was $126.82. So if you would have entered, if you would have exit something at this price, it did break the price of control line. You see that? And
I see.
yeah.
I was.
Why didn't you enter at?
No, forget about why, because he's
puts.
I'm in puts. I entered in at 127.96. And then I don't understand how I'm just getting burned so bad. But I'm down 25%. So.
Yeah, the market sentiment today looks bullish, man.
Yeah. like even when SPY pulls back, this thing's just not like when SPY pulled back from 442.80 down to 441.70. This thing it just continued to.
Yeah, it continued to chop around there. Yeah.
Yeah.
It's a tough call, man. We have bank earnings tomorrow. It's a real tough call. I would not go with a massive position, man.
Yeah, I'm waiting. I'm thinking I'm gonna wait for the next pullback and then scale out some of my position, and then maybe swing some of them for bank earnings tomorrow, and then.
The stock has a weakness, man. It has a weakness, and it doesn't have a crazy theta. Stock has a weakness. If you ask me, it looks to me a weakness on it. So if you look at this trend, you see this trend, lower low, lower low, right? So the trend is lowering low. So did not have the power based on earning today. So you just today nothing gonna happen to your expectation, but there is a weakness. So if tomorrow market again have a weakness in financial sector, then you have it's just a hope, okay? But then if that happens, then you'll be lucky. Because I see a weakness on it, and they have a loss for almost $580 million loss something we mentioned. Yeah, the more you watch, the more pain you're gonna go through, man. Just leave it alone on the side and just go for a dog walk.
Gotcha.
I learned from Dave. If you make money, you go and take your dog, go for a dog walk. If you lose, you think you're losing also, do the same thing.
I agree. Stay away from the computer.
That's the best thing to do.
Yeah, in either case, don't overtrade afterwards.
Yeah.
Yeah, this thing has been going down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 12 days of chop, man. JP Morgan has been going down.
The huge crack, JP Morgan, and now look at in Europe. I don't know you guys know or not, but there's a big problem going on in Deutsche Bank and in USB and all in Europe.
I think right now, 127.45 is a resistance for it. So wait for it. If that it's still trying to cross that, but I don't think it's going anywhere.
You know what I heard in a space or a podcast? I heard in Europe they give when the kids go to school they get fingerprinted for the attendance. Is this true?
I don't know if anybody here in Europe.
Students in Europe, but he's not in
off.
Here. We have to ask student this question.
You are always curious, man, huh, Dave? You always need to know different country what are the rule sets are. Huh?
No, I want to know as kids, right?
Yeah.
Before when we used to take attendance in school, we go and we raise our hand up. Now they're taking your fingerprints if you're in school to see if you're in school or not.
Maybe somebody must have something. There must be some reason. I don't know, man.
Yeah, well, I want to know.
Man, like market is trading like a water. Eh? Nothing is doing anything. It's just going ping pong little bit. That's it. Burning people theta.
Josh, and you said I'm curious, right?
Yeah.
Look, listen. I'm only in this world for. We're all in this world for a certain amount of time, right?
Yeah.
I want to know as much as I can, because when you die. You don't know where you're going. We don't know where we're going. So I want to learn as much as I can while I'm alive.
No,
that's a great strategy, man.
Okay.
I love that mindset, Dave.
Thank you. Because look, there's one thing we cannot go back in, right? And I'm pretty sure everyone can agree with me. Time.
Yeah.
It's like a river. It flows one way. It doesn't go one way back. It always goes forward, right? So take advantage of it.
Agree.
Good attitude, Dave.
Yeah, I would recommend you, if you get a chance, visit India, man. You will love the opportunity.
I did. I went there.
You did?
I went right before the pandemic.
Okay, how was it?
It was nice. I learned.
Did you appreciate the life more now?
I learned to appreciate life, simple things we have. Let's be real. Majority of people are spoiled.
Exactly.
Little things.
You might have visited. Have you visited Georgetown, Mumbai? Have you visited that?
Yeah, I went there. I went Delhi. I went Agra. I went Jaipur. I went all over.
Good.
And one time, at one point, I was just walking around. We was just walking around and stuff. But in life, you gotta, when you see certain things in life, you learn to cherish things, like simple little things.
Exactly. You expand your mind.
That's right. I agree.
Guys, I don't know if anybody's watching right now, but it looks like the VIX is actually approaching support at 22.
Yep.
With SPX kind of moving up as well. So moving into power hour, that might be something to keep an eye on.
Yeah, right now VIX is taking top off, and probably it.
Yeah, I bought small calls on QQQ.
Hey guys, Thomas has joined.
Oh, okay. Let me add him up. Okay. Let me actually, I had to take somebody off maybe, and then I can add more maybe.
Can we go to speaker, Josh? Can you put some?
Yeah, I'm gonna right now.
PM just broke you off.
Oh yeah, he's in. Okay, yeah, welcome Thomas. Good to be.
If anybody's unaware of who Thomas is, he's a hedge fund manager and he's a veteran investor, and he's here to speak with us and maybe give us some insights on the market.
Hey gang, how are you?
Thanks for joining us.
Hey, how are you?
Good.
Good.
We're doing great.
Well, I'm right now in the middle of trying to finish my daily note that I publish. I publish 3 notes a day, an early note, and which will eventually become free. So stay tuned. And then two that are behind a paywall. My background is I was the head trader of a $5 billion hedge fund, and I was the technician, the sentiment person who was responsible for basically looking at all the different sentiment polls around the street. And I had a great time for 11 years until it closed. That's a whole nother story. But I put out my research in a very similar way, maybe a little better, I'd say, now to the public on Hedge Fund Telemetry. It's a site that, again, I put out a bunch of notes, and I focus on sentiment. I am a demarcator specialist. I also track short interest keenly with using Phil Erlanger's technical work, and I also look at put-call data on individual stocks and ETFs. So I'm busy. I love what I'm doing. I trade my own accounts. I do not trade for other people. I give trade ideas. I am not a day trader. I'm more of a position trader. I'm mostly long and short U.S. equities. I'm making a call today on the U.S. dollar versus euro and sterling, and I'm shorting the dollar at this point. It's been in a very strong position for the last, I think, 8 months now, and market sentiment on the dollar for the last 2 days, it has been 93% bulls, and it goes between 0 and 100. And one thing about market sentiment, and I know a lot of people will find market sentiment polls out there, and it's something that's really, really important is market sentiment can stay overbought or oversold for quite a period of time. And again, we've had the US dollar in a range, a very high range, and has stayed there for a long time, and market sentiment has remained very high. So I like to look for triggers that could cause a reversal in that type of trend. And I like trading a lot of the markets, and I look at stocks, bonds, currency, and commodities when sentiment gets to extremes and then makes a turn. And I think we're at a place right now where the U.S. dollar could come down. It may not go down dramatically. It may not be a wire-to-wire and goes to 10% bulls, where the euro and sterling are right now. But we could see a reversal of some sort here, and it's an exploitable type of trade that I'm looking at right now. Now, how it'll have other implications for other assets in the market, obviously, and we'll see, again, how far that'll go. But I have a lot of DeMark exhaustion signals in currencies, notably. I have some that are pending, some that haven't necessarily hit. They're a few days away, and that's in euro and sterling. And with a few different dollar indexes, DXY and the Bloomberg Daily or dollar index, which is a bit of a different blend, I'm getting those signals. So I'm a person that I don't need 100% of everything to line up perfectly. I tend to get started when I have about 70% of all the different indicators lining up. And remember, when it becomes 100% of every indicator, it's already probably started. And to be quite honest, I'm always a little early on some of the ideas that I have. And it's not like I'm early to where it could cause severe problems on my P&L, but it's early for me because when I worked at the hedge fund, it wasn't like we could just put on a position quickly. Sometimes it would take weeks or days or weeks to get a position on and take it off as well. And liquidity is not great right now, so that was actually a very good. It worked for us the way I would start to position a trade. I'm set up net long currently in my equity trade ideas sheet, and by quite a bit as well. And I have I think a couple tech stocks on the long side. I'm short Apple. I'm short hedged out with I'm short Qs and SPYs as a hedge versus some of the other stuff, and I'm long financials. I started buying financials last Friday, and they're not huge positions, but it's enough that I'm comfortable with if I'm wrong, and it's enough if I'm right to make some money. And I'm long JP Morgan, and it's down 3% today, not doing well. I'm not too distraught about it because I didn't think JP Morgan, and that was the least favorite of all of the positions that I was putting on. I'm long Goldman, Morgan Stanley, Citi, PNC. No, I'm also long KBE. Now KBE is it's the S&P Bank Index, and a lot of people will look at the XLF. Now XLF, it's also. Sorry, somebody was calling me. You need to know what you're trading as well. And a lot of people will just, financial exposure, I'm going to buy XLF. Now, 15% of XLF is Berkshire Hathaway. And Berkshire Hathaway, in my opinion, is a short. And I did have a bunch of exhaustion signals recently, and the stock's starting to fade here, which is good. I guess you're short, and a lot of people say, "Well, why would you short such a great company?" Well, first of all, it's exhausted. It's not necessarily just a financials company. They've got a conglomerate, and I think that they will have to deal with inflation, just as every other company will. So it's also you have the Warren Buffett, Charlie Munger premium in this, and they have their annual meeting the first time in 2 years, coming up at the end of the month, and I would not be surprised if one or both announce retirement. And if Charlie Munger retires, I don't think the market's going to, slam the stock that much. But if Warren Buffett goes, I think the stock would get hit. Now, it also happens to be one of my favorite companies, and if it does get slammed, I'll cover it and go long. I'm long a little on the A shares, I'm talking about the B shares that I'm short, but I'm long the A shares in my retirement account that I bought in 2000 because I wanted a mutual fund and I didn't want to pay the fees, fees for it. So I thought, okay, I'll buy a couple shares of Berkshire Hathaway, the A shares, and just leave it. And it's worked out incredibly well over a few periods of underperformance, but regardless. So I'm long banks. I've been long airlines, and the airline, I mean, they're up a lot today on Delta's good numbers. Their numbers were good, and for the last few weeks, the CEOs of almost every airline has stated that demand is coming back in a big, ferocious way. And I've been traveling, and that's why I couldn't be on this Spaces for a while. But I've been on planes, and they're full, and the airports are full, and fuel prices, the airlines got killed like 30%, and that's kind of when I started buying because of the Ukraine situation, which is awful, and jet fuel went up because of it, as crude did. And I had a DeMark sell countdown on jet fuel, and I thought, okay, jet fuel's gone up a lot, and the airlines have gone down 30%. I like the risk reward because I didn't see jet fuel staying at these elevated levels. And my view was if I was going to short energy or crude products, I'd buy the airlines because you have a double whammy of demand coming back and prices that I anticipated would go down. So those are definitely generating a lot of alpha today in the portfolio. The few tech stocks that I'm long right now, I'm long Palantir, and I bought it lower, and I think I was buying it when Cathie Wood was puking it out, and she jammed it down dramatically down, in the tens. So I was buying it there. I'm still holding it. I bought some Autodesk because I also think the housing stocks, ITB, Home Depot, Pulte Home, what do I have? Hovanian, and D.R. Horton. I'm long those. I just started buying those last week. So I think those are overdone on the downside. I've got a lot of exhaustion signals on those, and so they're starting to work, and so that's kind of like some of the themes I'm working on right now. I was long some cannabis. I still am, but I took some losses yesterday, and I've had just an absolutely crushing good year, luckily. I mean, I don't always have these types of years, but I made definitely 2 years worth of performance in the first quarter, and I feel very, very lucky about that. But those are themes that I'm looking at. I'm short Apple. I think Apple's a very crowded stock still. I would be more concerned if I was a holder of Apple that you would see maybe Berkshire Hathaway try and sell some. They have 30+% of their portfolio in Apple alone. It's a little bit piggish and bad risk management to have that size. But the other thing about Berkshire Hathaway, why I want to buy them, if we do get Warren Buffett or Charlie Munger to leave, they have $150 billion plus in cash to deploy, and the new people are going to certainly, if you replaced Michael Jordan, you're going to want to prove yourself, and you've got a lot of capital to do that. So I think that's going to be a real big positive catalyst for Berkshire Hathaway down the road. So that's one that I would strongly recommend. As far as the market goes right now, I've had this theme, and I think when I was on the Spaces last time, that we would see a series of lower highs and lower lows, and that's been happening for the most part. And the DeMark indicators have been really good spotting some of the inflection points on the upside and downside. And we had one yesterday and today, one called the Setup 9, and the last two saw bounces start, and also buy or sell setup nines. They've been pretty good places to sell. The last bounce had one, and it worked out. We saw a pretty good move down. Now we haven't made a new low, so here I'm in this quandary of coming into big earnings for the meat of the market, and when I say that, it's the mega cap. Will we continue lower, or is this going to be a place here that we bounce? Now I've played it as a place that we're going to bounce. I'm not sure how far we're going to get, but I think there's a little bit more positioning off sides to where we could go a little bit higher in this. And I'm I guess I'm giving both sides of the picture here, where I can't say that I know that for sure, and I'm very flexible. If things change, I will change my positioning, and I'm not afraid to go super long, which I've done a couple times this year at lows, and super bearish on the other side when basically I came into the year very, very bearish. So that's kind of like my big picture. Oh, rates. I think rates and the bond market rates could drop. Not a lot. My view, and I'll tell you this, my view has been longer term rates would go higher, and they have. This last spike has kind of caught me because I've been long bonds and have taken on a little bit of a loss on that position. But the bond market sentiment on the 30-year the other day hit 5% bulls, and that's about as low as I've ever seen it. And I've tracked this data. I use the daily sentiment index from Jake Bernstein, and I have charts on my site that show market sentiment live, and which is updated daily, and it works. I'm really very pleased, and I've used it for 20 plus years. So I don't know, there's a lot of different moving parts right now in the market on the macro side, and most people are expecting, I was just at the Real Vision macro experience, which was a really good event, but the thought I have is everybody is expecting higher and higher inflation. I think that inflation is not going to go down. It's not going to be this deflationary stage, but I think inflation could moderate, and maybe not enough to necessarily be some relief, but it's probably in some form, in some places, trying to peak. But the problem, you're starting to see companies, restaurants, and even Amazon and Etsy, they've raised prices on their sellers by 5%, and it's causing everybody to freak out. My daughter works for Etsy, and she's in the office next to me, and so I'm well aware of what's going on over there. People were upset, and the sellers were trying to strike, and I don't think that's going to go that far. So right now, I think the market is absolutely the best environment for a long-short manager, because there are places in the market that I can short, and there are places in the market that I can go long, and I seemingly have been able to find ways of making money on both sides, and that to me is I'm loving this market. So I will stop rambling, and you guys can ask me some questions. Hopefully I have some answers that are coherent. So thanks again for having me.
Yeah, welcome you, Thomas. Actually, we really appreciate being here. The most important question what I have right now is about the market FOMC meeting coming in. What do you look at what is your outlook of that FOMC meeting, and how the economy will react based on those, where look like it's going to be 0.5%, maybe 50 handles, and they're going to shrink the balance sheets. Probably they said that, sorry, I had an incoming call. Yeah, they're supposed to shrink the balance sheet, and they said $95 billion. Probably they said $95 billion. Out of that would be a $35 billion would be a mortgage-backed security, and they will continue every month. Though they said it's called rapid pace, but if you compare with the quantitative easing was $120 billion a month, and that was higher than the shrinking. So if your input would be how the market will react on those. Thank you.
Well, I'm friends with Julian Brigden, who I think is one of the better macro people out there, and he works with Raoul Paul a lot, and he used to work for Medley Advisors, and he's been spot on in the sense, and he has a lot of contacts at central banks and really gets it better than anybody. But the bottom line is the Fed has a mandate to control inflation, and they don't really care about the market right now. This is not their priority. It's also a Democrat in power, and they're more concerned about inflation. And to control inflation, they have to put the hurt into the markets. It's going to hit margins. It's going to be it should be very, very hard on the market. I think the Fed, I'm actually a little surprised the Fed, well, maybe it's still too early. I wouldn't be shocked to see the Fed do a surprise hike. Maybe, I'd put 25% odds on that one. Before the May meeting, they had a 6-week window between meetings, and
oh, really? Wow.
yeah, from March to May, it's early May that they're going to do it. So I thought, the thought was, if you can knock 2 out and be at 100, 1.25%, which in the grand scheme of things is not that much, but it would give them a real head start on what they need to do. And they want to tighten financial conditions. And financial conditions, if you look at some of the, like Bloomberg has one, Goldman Sachs has one, the financial conditions today are still completely way too loose. And therefore, I think that the Fed is going to...
You said financial condition is way too loose. Could you elaborate? I'm sorry, if you can elaborate.
Well, there's, it's kind of a longer story, but there
if you could summarize it.
There's financial conditions indices, and one of the inputs is the stock market. And the stock market is not that far off from all-time highs. A lot of stocks within the indices are well off all-time highs. But they're going to raise rates 50 basis points for the next 2 meetings, barring any real escalation with Ukraine. That's the only thing. And I think even if companies... I think this is going to be an interesting quarter with earnings, because you're going to start to hear a lot... Well, you're going to hear a lot more. We've already started to hear companies complain about margins and wage pressures and input cost pressures and supply chain problems. And, we'll probably hear some new... we'll hear more on Ukraine and Russia exposure and all that. But the bottom line is the Fed is going to raise 50 basis points for the next 2 meetings. And if the equity market stays up, I think they could continue for, maybe through the entire summer at each meeting and 50 basis points. And they probably will take a pause if the market, the S&P, is trading somewhere under 4,000, maybe 3,800. That's, for the most part, a lot of the economists or strategists I've read, that's where the Fed would feel more comfortable. And, certainly having the ability to, they don't need, here's the other thing. In the past, they used to say, the Fed needs to tap the brakes. They need to slam on the brakes hard to rein in inflation. That's it. And remember, in January, it was clear when Biden had his first big, first of the year press conference, the first thing he said is the Fed has to handle, Joe Biden, first of all, I hate all politicians, both sides, and they just, the lack of confidence in the U.S. with politicians is in a long bear market, in my opinion. So Biden's main thing is passing the buck and saying the Fed has to do this, and they have to halt inflation. So that's going to be the big push. And they don't care about the stock market. You know, their voters are not stock market investors. The voters are everyday people that are just trying to feed their family, trying to, put fuel in their car, and they want to keep a job. I mean, those are the things that, of course, maybe lower healthcare problems or payments, but that's still going out of control as well. But the bottom line is, this is a really bad, inflation is a very bad situation, and it doesn't, Julian has basically alluded with me, and I'm lucky to talk to him every week. I basically want to, get a strong drink after the calls because he's very sobering with his outlook. But inflation takes a lot longer to control, and it takes a lot of hard work, in other words, damage. And the Fed may be fine, and it may sound crazy, they may be fine sending the economy into a recession to control all the inflation. Now, the balance sheet, look, $95 billion. Some people thought it would be a little higher. They could raise it, they could lower it. It's sort of an odd lot considering the $5 trillion that they've just thrown into the world or into the markets in the last couple years. So it's hopeful for them to say we're going to pare the balance sheet down. It's going to roll off. Yeah, we'll see. I'm still watching that. I think they're going to be really just across the board hawkish for quite a long time. And again, if Ukraine, a lot of stuff I've talked about, if Ukraine heats up and we become more into a global conflict or war, then all bets are off. I mean, then we don't know what I can't make any,
Tommy, I have a couple of questions.
Okay, sorry. I'm sorry. Yeah.
And I have a question after Gopi.
One at a time, guys. Yeah, Gopi, you can go for it.
Okay, my first question is, you said you were short the dollar, right? So do you think gold will be a good play? And my second question is, since you said the 30-year mortgage rate is at 5% and you were long the home builders, so how long do you tend to want to play the home builders? Are you just bottom fishing, or do you want to play that for long? Thank you.
Yeah, good questions. As far as the dollar, this is an idea that I'm initiating today. I've been, fairly constructive on the dollar for quite a while. Nothing's really changed my opinion. And I was buying the dollar, the DXY, when it was at 90 because I had DeMark buy signals, and you couldn't find a dollar bull out there. Now it's pretty understood that everybody's bullish on the U.S. dollar. Now, as far as gold, I was long gold, and on the Ukraine, and I wasn't long a lot. And I'm not really crazy about gold. I think you in this world today, gold, if Bitcoin and crypto didn't exist, gold would be trading at $3,000. That's a fact, because there's other, quote, inflation hedges out there that people have gone to. And I think that's part of the problem in the market is if something starts moving, whether it's a meme stock, gold, Bitcoin, Apple, Tesla, people will blindly gravitate and buy the crap out of it, just like everybody else is, and buy calls and do everything.
But how do you hedge the recession? We understand about the inflation. How do you hedge the recession?
Well, in many respects, I don't buy things. I'm a long short manager, so I can find ideas that go down, and I make money that way. I don't like the idea of fighting inflation with buying gold. and I'm out of sync with a lot of other people. But again, I just feel like if gold becomes in favor and there are more people wanting to buy it, then it's going to go up. I don't think it's what it used to be, in other words. And if, let's say, the shit hits the fan with everything, gold will go down as well. And in really bad bear markets where there's supposed to be some sort of hedge, the best hedge is cash, all the way. And because I ran our fund we were multi-asset, and if we were long stocks and bonds and everything's going down, or let's just say you're a fund and multi-asset manager and you have a lot of stuff that you're long, and you're going to sell stocks and you're going to sell your exposure down, and that means selling basically everything. So if it's not nailed down, people will look for liquidity, and gold will be a source of liquidity for people. I get the whole argument of, buy gold to fight inflation. I get it. It's been a lot of, sad reversals that have happened with gold and over the years, and maybe this is the time that'll truly work. I don't know, but I'm skeptical. I have ways of making money on the downside, and that's being short indices or stocks or currencies, anything. I'm very flexible finding things. So buying something to hedge against inflation is a very tough thing, because everything's going to get whacked if the inflation genie can't get put back in the bottle. That's what I've found over the years, and that's counterintuitive to many people, and people can disagree with me, and I could be right, I could be wrong. That's just my own opinion, and I respect everybody else's opinion.
All right. Can I ask a question now?
Yeah, go ahead, Dave.
Hey, Dave.
My question to you, Thomas, is, as a hedge fund, what tools do you use to get into a long-term trade or short-term? And I noticed on your profile you said you collect data and you're an analyst. Can you elaborate more about that? Now, I understand when we get into trade, we have to look into a company, right? We do. So now let's say you're in front of a chart. What time period do you use? What studies do you use to get into a trade and get out of a trade? And also, what does the market maker use against retail traders?
So everyone has their own process of how they and their time frames and risk tolerances. And one of the things for me that I've done over the years, and it works real well for me, is that I size my positions appropriately. So if I'm like these financials, I bought all these financials with a 2% weighting of my portfolio, each size, and my max size that I can put on is 5%. I just limit myself to that level. I don't need to, I may buy 5 financials and have a 10% position basically in financials, but I spread it out a little bit because a couple of them won't work, and I'll move out of them as soon as I want. But here's like an example of how I look at things. First of all, it depends if the market is extremely oversold or extremely overbought. I kind of suck when the market is in the middle point, which we were kind of there just a week and a half ago or 2 weeks ago. I think it was just sort of, are we going to keep going or are we going to stall? And I had signals that were saying a little of both, but my inkling and just through experience said this is going to fade and we're going to drop again. And that's how I position. So let's just say on the home builders that I'm looking at right now, and I've bought, they've been destroyed. I was short some of them at the highs. I had upside exhaustion signals, and I think
I heard that, but you said they're exhausted on your signals, right? What signals? What tools?
I use the DeMark, Tom DeMark signals. sequential and the combo. It's a bit of a they're complex, and to try and explain them on this would be impossible. It took me 20 years, and I still have questions, but I ask Tom every once in a while. But the point is, these are just signals that I can tell when they trigger, and I like to see signals trigger with multiple, whether it's stocks in sectors or indices all together. When I see them line up together and I get multiple signals, not one-offs, then it gives me some more confidence. So home builders were giving me buy signals last week, and I started to do my work on them, and I looked at the short interest on home builders, and short interest has gone up, and even more so, there's been heavy put buying in home builders. Now, one of the things that, if you watch CNBC, which I don't, and the Nigerian brothers come on, they like to tell you that the smart money is buying big calls. They never tell you about big put buying. They never ever tell you about that. But that's actually the wrong approach, because I used Phil Erlanger's data, and I put some charts on my notes, and I did a webinar this morning that I'll post on my YouTube channel as soon as it downloads. And we go over it. My friend Jeff Garbaz, who's a real smart dude. If there's heavy call buying, guess what's happened? The stock's already moved. It's already moved up, and you have the hopeful call buyers coming in, and that almost is like it's like a squeeze on the downside. It just runs out of steam. And the other thing is, when I see heavy put buying, you can see a put squeeze. So all the people that are buying puts after the big move has happened, thinking they're very smart and they're going to make more money on the downside, find out that if the stock reverses, it's like a short squeeze, but we call it a put squeeze. And all those puts have to be unwound, and the dealers have to unwind them, and thus you can take the other side of that. Now, it's not always 100% certain, which nothing is, but it tends to work when I see a lot of those things happening together. So you get the exhaustion signals on the downside that are buy signals, and then you get heavy put buying, and then perhaps there's heavy short selling seen. And another thing is, if you tell somebody that you're buying this on Twitter, there's a couple times whenever someone says good luck, okay, I like that. I like getting pushback like that. And then I've had people do the remind me in 1 week tweets, and those are always pretty comical. But those are anecdotal things to watch. And another thing is, everybody has market sentiment stuff at their fingertips. And if you realize, like, if you watch the Drudge Report, okay, this is one of the better contrary indicators. If you see the market has gone down, and then he puts on there the market's down, and there's a picture of a trader who don't exist anymore on the NYSE with his hands in his face, that's usually a pretty good sign to buy. I mean, he was putting on, yield inversion stuff as his headline, and that to me was saying the market isn't the curves are not going to invert. They're going to steepen. It's just like what you hear on CNBC is usually what's already happened. And as much as I try to look at it like I'm planting seeds in the ground rather than talking about the trees that have already grown, and that's the difference. So those are a few little things. And yes, this is Spaces, so I can't
All right, thank you. I have two more questions, and then Gopi can go. Okay, my next question. Okay, so if I was to say, all right, I'm just going to give you a ticker, right?
Mm-hmm.
I'm just going to give you any ticker. Let's say you're looking at AMD. What are your thoughts? How would you get into that trade for long or short? If you was to look at AMD right now,
okay, I'm looking. Hold on.
What tools would you use to get in as a long or short?
Okay.
And also,
what I'll do is I'll put it on I'll put it on. I'll snapshot these and put it on my Twitter right now. Yeah, I got one bad thing on this. Hold on. AMD.
While Thomas is doing, guys, just sorry jumping in. So if you guys can follow him, he has a Twitter handle. You can also follow everybody, whomsoever you see here, all the speakers. We really appreciate.
And for anybody that
go ahead.
For anybody that's new to the group, what we do here is we start the live stream just before market open, and then we trade live every day, and we analyze the market, and we discuss what's happening in the market as a group. So that's what's going on here every day.
Cool. Okay, so here's I was long AMD. Oh no, hold on, that's not the right chart. Yeah, type in the right chart. I was long AMD at the lows, and I made a very small little gain. I was more long NVIDIA, and I traded that well, which I was very pleased. It went up after. And another thing is, I always like when I sell something a little early, and the person who bought it from me has the opportunity to make money. I never, ever think, like, I've got to get the absolute perfect top tick in something, or bottom tick. It just makes no sense. It's more important to be happy with what you make, not what you could have made. But okay, here's a couple things on AMD. Now, it has. I'm gonna put this on Twitter. Hold on. So I'm added AMD with new DeMark buy setup 9. So there's a DeMark buy setup 9. That's positive. Okay. And 9s and 13s are the key numbers. Just focus on that. However, there is a potential.
Why 9 and 13? Why are those key?
Because there's two parts of Tom DeMark's sequential countdown, and the first is a setup, and the way that works. Hold on a second. Let me just. A setup is, for example, for it to go higher, you get each number through 9. It has to be 9 consecutive closes higher than the close of 4 price bars earlier. Okay, and it's the opposite on the downside. Now, if that pattern interrupts, and it will just go away. But if you do get that 9, and it happens, and it's happened on AMD on the downside, you can get a price reversal. And the 9s are pretty common. And I look at different time frames. I'm just talking about daily right now. But what happens is after the 9, and if it completes, if it doesn't complete, it disappears off the screen, and then it has to reset with 1, and then move on. But if it gets to the 9, you have the possibility for what's known as the countdown, and the countdown are the red numbers, and it goes red through 1 through 13, and those don't have to go in sequential order. They can skip, because basically it's calculated by comparing the close, not the open or the high or the close. It's not calculated like the setup where you have to be close higher than 4 bars previous. It's calculated by comparing the close of the current bar to the high or low of 2 bars earlier. So it's more on the highs, and it's a lot. Trust me.
So does it always use odds number or odds and even? Because you said 9 and 13, right?
Yeah, those are the key numbers that Tom DeMark, he created these in his garage.
That's the Fibonacci number.
Yeah. The bottom line is when you get to the 9, once that happens, then you have the potential for a continuation of the trend, which is the sequential. Those are the 1 through 13 numbers. So right now on AMD, it has a buy setup 9, and it's on day 2 of the sequential. Now, sometimes I will say, okay, well, the 9 is going to take more precedent. So I think there's a potential for it to bounce at this point, at this level. and it reached also a wave target at this level here. So those are some positives. Here's the real negative. Nobody is short AMD. The short interest is exceptionally low. That is a super big negative. I mean, there's the days to cover are 0.41 days to cover. So there's really zero chance of a short squeeze happening here. And the one positive is that there's starting to be heavy put buying at these levels down here. So that's positive. Again, when you see a heavy call buying, it can work for a little bit, but then people get caught out. And usually when you see, and I'll put this chart on the Erlanger chart, that you can see how it works and how you can see the potential for, these types of moves. I like the put and call buying, the heavy put and call buying a little more than short interest. That's just my personal opinion, and I think it's more prevalent now that options are being traded like common equity, and more, with new participants just using options. So I think that's been a better tool for me over the years. So I'll put that on Twitter in a couple minutes, and you can kind of take a look at it. I'll try and explain it on Twitter as well.
Thank you, and I'll let Gopi go, but let me ask one more question. Does the market maker use those numbers you just said? What strategy, or if not, what strategy does the market maker use?
I personally don't think market makers exist anymore. I think it's just become an algorithmic mess, and there are very few true market makers left that are truly making a market, and I think it's just more algos, and so I don't think I think they have lots of their own. Each broker dealer probably has very extreme ways that they.
I think his point of market maker means money makers basically, and that's what he meant to say. But everybody nowadays use all algorithmic systems, and the money power goes with it.
Yeah, I think that's, and the other thing is, the market makers. I think I'm stuttering here. I think that you had more market makers way back 10 years ago and beyond that didn't have to contend with the heavy option trading. So there's that element as well. So if Goldman Sachs has a lot of action or something happening in the derivative trading of Apple or something, it's going to affect the way they trade. So yeah, I think that I don't think they, I think market makers or the algos rip people off, but you're never going to notice. I mean, I don't really pay much attention. Like it's not something I'm staying up overnight over. I'd rather just try and get the right trend, and I don't really worry about the small sense of execution. I'll tell you, when I had to trade, I made 100 trades a day and traded 1 billion shares a year on my ECN. I wasn't really that particular about getting the exact perfect execution. I was just looking for more liquidity. So that's it. It's a different.
Thank you, Tom.
Sure.
Thank you,
Cool.
Thomas.
I hope that helped. I don't know.
It did. Thank you, and I'll let Gopi speak now.
Before Gopi speak, Gopi, I really appreciate, Thomas, the way the input you are giving, man. Believe me, you are the best speaker I have on this page, man. Really appreciate giving so insider inputs. Really knowledgeable.
And after Gopi's done, I'll ask another question.
Sigma, go.
Okay, so I'll let you go first, Gopi. Then I wanna bring up something that you mentioned prior, Thomas.
Okay, Tommy, my question, I had this in the first time. So the DMARC indicator, right? Because you depend on those signal 9 and 13, and you make your buys. So do you really focus on the macro right now, right? Because now you say the home builders are oversold. That's why you got that signal and you bought into it without looking at the macro picture, right? Because, with the interest rate at 5% and going up, do you think there will be more buyers of those newly constructed homes? Or is it just because your signal came up, that's why you bought it, and then you would quickly exit after like 10-15% move or something like that?
Right. I'm very aware of the macro environment. I have a daughter that's trying to buy a house, and we live in the. Hold on a second. I'm just getting water. Talk about water cooler talk right now. So it's hard to buy a house right now, and I think people are scrambling to buy houses, and house prices. I mean, companies, these home builders, they have a couple headwinds and tailwinds, and the headwinds are higher input costs. Things cost more to build, but I think they're able to, with the demand right now so strong, is they're able to pass on some of the price increases through their customer. And people are, I see it all the time where people are paying well over the ask for these homes. And, the other thing is these stocks have been hit down so hard that I just feel like it's almost like holding a ball underwater. And I think it just could bounce here. And I do think, again, bringing the macro together, I do think that rates are a little too high for now, and I think that if rates go down, there'll be implications. You can see that equity markets in some certain places lift. I think the home builders will lift a little, and maybe people are going to get a little too, as far as lending money or borrowing money. I think they may get a little panicky and try and buy as fast as they can because they think rates are going to keep going higher. And, there's FOMO in the housing market right now.
So what's the horizon there?
I mean, everything can change tomorrow, obviously. But okay. I think that if I can hold on to these, I try to hold on to things for weeks. If I get a great return in something immediately, I may take some profits. I also will trim. So if I'm 5% long in something, I may trim half and take some gains and, ring the register and then have the ability to, be more patient. So that's something I would do. Go on.
I have a second question.
What percentage gain? At what percentage gain would you trim half?
There's no. I mean, the other thing is there's no hard and fast rule to that at all. It's sometimes if I'm up 5% on something, I may get I may say, hey, I'm going to take some off. If it's a little too fast, I may take some off. There may be some other variable, but I'm very I've been trading. I told you I traded the airlines. I got long, 6 different ways of trading airlines, and I had 5% positions in all of them. I took 2% off. I took another 2% off, and I was at the lows. I was with 1%, and I just kept that 1% on because I wanted to just make sure that they were in my focus. And then as they dropped, last week I added 2 more %, so I'm long 3% on all the airline positions, and I can't say that I'm unhappy with the way that they've turned out. I just sometimes I get it really right, and sometimes I'm a complete idiot. So and trust me, making sure that you go on.
So it sounds like you're mainly trading equities and not options, or are you trading leaps as well, investing in leaps?
No, I don't trade leaps. I have in the past in my life. I just don't. I usually will the recommendations that I make tend to be more hedge-like trades in indices. I have people that will try and trade options on my stuff, and again, my stuff sometimes takes a few days or a week or two to really start to pay off. And I find people, and everybody's got their own strategy, but I find people waste a lot of time and money trying to buy too close to expiration, partly because they don't want to pay higher premium. But if I was trading options, I would trade 2 months out. That's it. If that was like all I could do, the weekly options and all of those stuff.
My question is specific to Palant. Go ahead if you want. My question is specific to Palantir. I'll just go and you go, Pete. My question is specific to Palantir. It's very, the future is cybersecurity, and I'm sure the industry is going to continue to thrive and grow with, for example, with what's going on between Russia and Ukraine, the cyber attacks. But looking at Palantir as a company, it's not profitable yet, and it has a tremendous amount of shares outstanding. Does any of that bother you? And would you wait for some sort of confirmation, like a profitable quarter, before really increasing your position size in it?
Yeah, those are all really valid points, and I tend to, I don't like to buy a lot of unprofitable companies. That's not really something I do. I just felt like the trend of cybersecurity and cyber espionage and cyber monitoring of whether it's civilians or within companies, I think that's in a bull market. And that, sadly, that is the truth. I hate it, but it's sadly the truth. And, I don't have like a time frame on this. I bought it pretty low, so I have a nice return already. And, we'll see how their earnings are. If their earnings don't really improve, I may just say thanks and I'm out. So it's not like I have the highest conviction on this. I just feel like my conviction of surveillance and the other stuff is higher than the stock market right now. So the way the market changes. Hold on a second. One of my derivative traders said, he watches Tesla. He's a Goldman Sachs derivative trader. He's pretty smart. And he thinks that he's seeing in the Tesla that the call buying, the gamma squeeze stuff that happened today is starting to unwind a little bit. Maybe it's a little early, he said, but so I'm a bear on Tesla. I'm long other automakers, and I trade around those, but I'm a bear on Tesla. I think there's a lot more risk than reward, especially at these levels.
You must be bullish for tomorrow's bank earnings, and can you talk about tomorrow's bank earnings, what your expectations are for that? And commodities again. Are you gonna need commodities?
I'm not crazy about gold and silver just because I have some DeMark exhaustion signals. I think crude is still too high. But that bounced the other day with the DeMark setup 9, and I don't want to necessarily short commodities at this point, or really try and buy them. I think they're all a bit extended, especially in like softs and grains, cotton. Some of these are just gotten a little wacky right now. But as far as the bank earnings, I have low expectations. Okay, I have very low expectations of how they are going to do. I actually, after today, I got a little bit more optimistic because JP Morgan's numbers we're not that bad as far as expectations, and everyone that I know that trades and is dedicated financials trader, everybody was expecting and has been expecting awful numbers, terrible. And JP Morgan was my least favorite of my longs, and I think that like the trading revenues were a little better at JP Morgan. Their underwriting was okay, not terrible. I mean, we knew it was going to be bad. I mean, there's a lot of year-over-year stuff and Ukraine and the market going down and rates and all sorts of other stuff. But I think that just got priced in. And a few months ago, Bank of America does a Bank of America's fund manager survey, and it's actually really pretty good because these fund managers, and there's I think 400 of them, give their true belief of how they're set up, and they were all super bullish on banks and positioned. It was like one of the most crowded positioned trades, and every quarter for the last couple of years, the banks went into numbers on highs, came out with pretty good numbers, and sold off. Frustrating the living daylights out of all those people long banks, and there were no shorts. And now the Bank of America Fund Manager Survey has shown the complete polar opposite of positioning. So people are short banks. They're not JP Morgan, but others. And they are expecting very little. Longs are not there like they were. So I think the bar is lower. And that's part of the whole process. You find out where the bodies are buried and how people are positioned, and you shoot against it if you can. So that's why banks went down after all their good numbers. I mean, they blew away numbers for the last year and had a lot of tailwinds with the reopening, but they traded like crap. So now I think it's the opposite, and and it's a contrary trade, but it's not like I just have one little data point. I think there's definitely several things that could end up being positive, and I think expectations is one thing.
Thomas, sorry to jump in real quick since you're talking about the bank. So today JPM had an earning, right? And I'm sharing my screen if anybody wants to take a look at it. Today has the highest bearish flow on JPM today based on the earnings, like $2 million puts been bought. So 80% versus 20%, I would say puts are right now heavier today on JPM. If you take a look at the whole ratio to today's action at this while we are talking, I'm sharing the screen. If you can see on my profile, click and there is a link there where you can see this what I'm sharing the screens, and you can see highest put ratio on JPM today. And based on this, I think their exposure to probably Europe, and that's why probably the number you said is looking good. But based on here where people are throwing the arrows towards the put side more today. And the pressure is downward. If I look at even chart today, I looked it up since morning. So I mean, this is what I see right now here. The chart also telling me the pressure is downward. The volume profiles and all, and looking at the trend where the people are putting money, where the puts are 80%. Right here, all the flows you can see puts are heavy flow. So this is just what I see. And
I'm looking at. I see what you're saying. I mean, the April 14th puts are the most active, and the 125 puts are very active. There's calls active as well. I mean, September 125 puts are very active. Yeah, I see what you're saying. It's and again, this is this dumb money. I mean, and I'm looking on my Bloomberg screen. Where's this? This is big. Yeah, the 125 puts are huge today, and so are the 120 puts. I mean, it's just
somebody put like almost like more than $500,000 right here, 125
but
puts.
Why are they buying for September?
Yep.
Good question. Sometimes
Safety.
They could do a spread or something like that somewhere else. But I think that the big, it's like they're buying puts after, after the news is out. I just think that that's more of a risk to me than anything that they're hoping it goes down more. And again, the last couple years of earnings with financials, they went down after their numbers because they were up and elevated. So now they've been down. They've been they've been terrible. And that. Hold on a second. Let me just. Hold on. Let me just tell you.
Joseph, if you want to ask next once Thomas is done talking.
Sigma, I have one last question.
Man, Gopi is never done.
The year-to-date is down 5% on the XLF, but.
Guy.
One last question. This is regarding the DMARC indicator.
Yeah.
Do you think the DMARC indicator performs better when it's in the choppy market than in a bull or a bear market? And I'm done for the day.
Well, I'll tell you that I think it works better in more choppy markets because one of the problems that people have with when they see the DMARC indicators is that they don't understand how to use them. They don't have them on their screens. They're not experienced, and they can cherry pick times when they're wrong, and that's fine. One of the things, like last year, everybody said they don't work on the S&P, and they're an exhaustion indicator, and an exhaustion indicator could mean that the equity or ETF could stall. So if it's going up, it could stall. And last year we had, I think 3 pullbacks of 3% and one of 4%, and each time you had the indicators giving you a little bit of a signal that was going to happen. And a lot of people look at the indicators and that don't know them, think that the next day 1987 is going to occur. That's just being unrealistic. It's an exhaustion, and it's not that it's if it's going up, if something's going up and you get a sell countdown 13, it's not that you have smart sellers coming into the market. It's just the last buyer has bought, and that's more of it's the other thing on the downside. It's not that you have smart buyers coming in at the downside. It's just the last seller is sold, and it's an exhaustion. So that's how it works. And I like these because it's trained me to be able to buy something when it looks like the world's ending and going to drop further. And if it's wrong, I basically know when I can get out. I can say, okay, the signal's not working, and they don't all work. I've had people ask me can you program them for some sort of quant strategy? No, you can't. It's more subjective, and I combine them with other indicators that are not all DMARC related, and or not at all. And it just seems to have worked okay for my own liking. So anyway, listen, guys, I gotta jump because I have to finish my note. And if anybody wants to reach out to me, you can reach out. I'm Tommy Thornton on Twitter. Watch out for the imposters. I have a new one every day. I do not offer mentoring as the imposters are asking people to sign up for, but I also can be reached at hedgefundtelemetry.com. There's an email on there, and if anybody wants a book on DMARC indicators, I have one that I can send you on email, which is kind of cool.
Oh, that would be a great.
Hey, Tommy, I just want to say thank you.
Cool. I'm sorry it's been such a no problem.
Yeah,
okay,
no, okay. I understand you're a busy guy.
Let me run. All right, gang.
Thank you, Thomas. Thank you very much.
Profitably.
Absolutely. Thank you. Bye. Sorry, guys, we had a limited time, man. Man.
I didn't get a chance to talk to you, man.
I see like 15 hands. I keep adding people as a speakers, but believe me, man, it was limited time. Look like.
I'll get him back. I promise.
We will have a Gopi as a speaker. So guys, okay, because he had like 15 loaded questions right after another Gopi, yeah. But it was the
This is the Gopi show today.
Extremely sorry for taking all your time. I'm really
No.
very sorry, guys.
No, that's fine, man. It's everybody learn. That's fine. We can have somebody again. But guys, one important thing: Amazon broke upwards the resistance, which was 50-day moving average. Amazon looks amazing because it's an engulfing bullish candle. Amazon, just to give you an idea. That mean what does that mean? That means overnight it looks bullish.
Anybody who's new to the group, if you click the link in the pin, in the live chat, you'll see a link to Josh's live screen where you can see his charts. So we're going over live trades and what's happening in the market.
Yep, absolutely. So look like that's the bullish engulfing, guys. Okay. So but again, if you want to be overnight any calls or something, be careful because theta can kill you crazy. So it's just a pure play. Intraday I recommend on Amazon, not the overnight, because overnight can be anything, But market looks bullish, guys. Super bullish to me. And
I hope you had a multi-million-dollar question, man. You've done me.
These guys.
What was your question, Joseph?
It's too cheap, multi-million man.
I'm only joking, man.
No, Jupiter, that's too cheap. We need $1 billion here because we had a billion guy. Yeah, let's
My
get.
question, actually, I was wondering if it was correct or not correct
Uh-huh.
that insurance plays like Aflacs, Prudentials, MetLife's,
Mhm.
if they are effective hedges against like inflation and interest rates. That was going to be my question.
That's a very good question,
Yep.
Joseph. I think we should bring back him.
Well, I'm going to send him a message and ask him in a message.
Well, Sigma was chasing him almost about a week. Sigma was chasing him about a week. He showed me the tweet. He's been chasing him, but eventually we got him. Yeah, we are very thankful to you.
It's taken me 2 weeks to get in here.
Yeah.
But hey, Josh, if you look at your DMs from this morning, I said today we're gonna hit 200, and guess what? We just about did
Yeah.
200 in the group.
Oh, nice, man. Yeah, a lot of followers today. I mean, a lot of people.
Almost 200 people here
Oh, wow.
Yeah, I saw 250 actually at some point.
at the peak.
Yeah.
Yeah, I saw 200.
Great. So yeah, more and more people getting come to know about us. Okay, so QQQ guys, there is a still has a room to go around 250. Okay, 250 just 50-day moving average resistance 249. So look like
I'm
it's
back in, guys.
QQQ. Okay, it's looking great. All these bears are trapped and bulls are right now boom 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 boom. Looking great, everything. Now, Sigma, imagine you're all the calls in the same early morning 9 o'clock calls, 9:30 calls would be right now 300% up
On what?
on QQQ.
Oh yeah.
I don't want to remind you. I'm just trying to. No, that's not. But great, looking great
Hey,
right
Sigma, thanks for bringing up Thomas, man. I've long the index and I'm in green.
now.
Nice. One thing I didn't quite understand is that he's really bullish banks and he has 2% portfolio size in each bank, but yet he says he's bearish on tomorrow's earnings.
You know what, Sigma, the DMARC indicator, right? He thrives on the exhaustion signals.
Yes,
Like
I noticed that.
They're badly beaten down. You buy them at the bottom, like 3 to 4% ride.
He looks for diversion. He's looking for diversion, but not this diversion. Yeah. He is looking for the exhaustion and then looking for diversion, and he think that could be a diversion. But when I see here, when I showed him here about the JPM, and JPM is like flush to the toilet, based on the bearish flow, and probably we'll see. I'm gonna actually keep eyes on it because look at 90% ratio is puts, and that could be a trap for those puts. Probably those are putting, and these are like heavy puts. $150,000. Somebody put 360.
So Josh, I'm just surprised. Why are they buying for September? I would just wait for the market to recover a little bit, then buy for September. That means he's expecting from now onwards till September.
Yeah,
JP Morgan
FOMC
will
meeting.
keep going
FOMC. This is FOMC play.
But the September, man, I don't know.
Yeah. Because
Anyway.
these banks will be suffering probably the long run. That's why. Yeah. Right.
Yeah, and he buys his calls out in like 2 months.
Mm-hmm.
All his orders, when he does his calls and puts, he does it out in like 2 months.
Mm-hmm.
2 months out.
Yeah, but you know what he does is Dave. He does exactly what you like. He likes to look for sniper calls or puts and look around things and see what exactly sentiments are, and then he wants to grab that opportunity if they exhausted or not, and then grab that golden rabbit in his hand and shoot it, use it.
Yeah, and then he's in and out. He don't hold it. You heard what he said, right?
Yeah. I was listening, man. He's a billionaire. He know exactly what it is. So it's not. He said. Remember what he said? He's profitable in 2021, 2022. Very hard to find. Most of the hedge fund men, they lose money. So when he said about the bullish about the banks, I'm gonna keep eyes on it and watch, because he said he's bullish. But I don't know. We don't know about his exit and entry. Because if I look at here on unusual option activity also, I look at JPM and look at that IV also going down. That means the power of bullishness is also down. So this data is correct. Yeah, data could be correct, but there could be a trap, right? This could be a bear trap.
You know what he was saying about the 9 and 13? I want to find a book about it. Anyone has any good PDF or know where I can get it?
Yeah, man, we can.
Do you know where the Tom DeMark indicator is? Do you know where to get it? Because this one doesn't have it.
No, this would not. Those are Bloomberg.
Bloomberg, yeah. He uses Bloomberg.
I mean, right? This one has this one. Tom DeMark the sequential. He says sequential. Which one it is? Count the indicator. There are different indicator it has. So I have it out here on.
Because that's like, yeah, because that's what gives like 1, 2, 3 till 9.
So right here, this one. I have wrote. If you can see my screen, look at, and you can see 1, 2, 3, 7, 8, 9.
Oh, that's where it is. Yeah, there you go.
Yeah.
So 9 is almost kind of exhausted. So that's why it's a buy. That's why he bought it.
Yeah. Yeah, right now that's what look like. Look, 9 is the exhausted because QQQ got exhausted and now heading to.
I think, Josh, I think this is a good indicator for an up and down.
I'm gonna do research on it more. On it more, and we will use it every candles and see what happens, because the higher the number is, 9 number is the highest. That means exhausted, and we all know QQ.
13.
Oh yeah, okay, 13. 13. I don't see 13 number here anywhere.
No, it might have come there somewhere. You check.
I'm checking in the whole.
11 there. There is 11 there.
No, that's not 11. It's second candle. That's the one.
You see here at the bottom, right at the bottom.
Josh, that's a nice indicator. That's why I want to know what time frame he uses it.
Oh, okay.
Josh, do you ever use Thinkorswim?
Yes, I do. I used to using, but I like when I compare with the Thinkorswim and compare with the trading charting. Oh boy, I love this one. Though Thinkorswim is not like 21st century use. I like more graphical interface.
Just FYI, I did a quick search for the DeMark indicator. I just put DeMark indicator and then I put TOS. I'm not familiar with the indicator, but what's popping up is this thing called sequence counter, and there's a YouTube video on it. Just curious if anybody in the room uses it, or if it's anything like the DeMark indicator.
I will definitely do more deep diving into, because there are thousands and thousands indicator, but he's using it, and I'm sure we can since he came across and he said could be a good one. So I'll deep dive into it and I'll come up with something.
Choppy markets, it's really good. That's what I think, because you see, he's made more money this year. That means this year was a really good choppy market. I think that indicator is pretty good for this market.
He is playing.
The thing about Tommy and all these people, and I've been in a lot of rooms with them, is that they all realized very early on that the parity between stocks and bonds would break during periods of high inflation. So, I don't know how much money he made, but a lot of people that knew that were shorting bonds. So just imagine how much people made. And so as they watched it go down, now they can say, well, I'm ready to see what's going to happen from that point forward. All the people who relied on the risk parity between bonds and stocks and just kept adding the bonds because they were like, oh, it's down, I'm going to dollar average down, lost a ton of money because of it. So just FYI. I mean, and then so he kind of understood early on, along with a lot of the people that I was in rooms with, that was the case, like even as early as January, I want to say. And you see how much bonds have gone down just in the last few weeks even. So just based on that. I mean, really honestly, like, sometimes it just takes getting one thing right to make a lot of money.
So what do you think you think the bond will still continue going down and the yield continue keep going up and up and up, and any numbers, any ideas about that?
Let me do this and just refer you to a video that I recently watched. They put up a lot of good charts. There's a YouTube channel called Blockworks, and Jack Farley, he left Real Vision and he started interviewing a bunch of people. And most recently, the last video I think with Jack Farley had Joseph Wayne, who was a trader at the FOMC desk for like the past 7 years or so, very insightful about what's going on with the Fed. And then they interviewed this other bond guy. I forget his name, but he put up a bunch of charts. Mm-hmm. And what I'll say is, from the takeaway of the chart, is like if you look at the 10-year rate and you go back, I don't know, like decades, okay?
I have it right here. I'm going to show you right now. If you're on a computer, yeah. I'm going to bring that one right here, and 10-year right here. And I think I did tweet about this one. Let me take this off. Let me go to weekly. I'm going to make it weekly chart because this is too long, 35-year. So that way you can see. Hold on right here.
How it broke trend. And they put up another chart that said it was getting close to like 3 standard deviation from the mean. There's also a group of guys in Japan who are really good and nobody listens to them. But if you've noticed, the Japanese yen has been just going down. It's losing value relative to the dollar. And I guess it's a big dirty secret that Japan keeps their bond market intact. So as their currency weakens, it takes more of their currency to buy our treasuries. And the problem is that, Monday there was a 3-year auction. Yesterday there was a 10-year auction. Mm-hmm. And today, 30-year auction. I assume it already happened. But the funny thing was when SPY started going wonky yesterday around like 1 o'clock Central Time.
Yep.
When was during the bond auction, and it wasn't looking too good. So, to your point, Josh, do I think that bonds are going to bounce? Well, I have another subscription where the guy had me put on a leap on TLT out to January 2024. It didn't move. Like it's been going down. So my personal opinion on this is I would rather wait to know which direction it's going before I jump in, because honestly, people are just guessing right now and they don't know. And people have lost a lot of money in bonds. They keep calling bottoms and then oops, So I haven't looked to see how the 30-year auction went today. But like, if there's no foreign buyers and people are thinking that Apple is a substitute for U.S. Treasury, foreign buyers, then we've got problems, right?
You're right. Yeah, even that's the reason Thomas said I'm shorting Apple, and I'm sure there must be many listeners. They must be thinking, what? Apple short? But yeah, because there's a lot of air in the balloon, and probably that could be the one of the case. But I have this chart in front of me. If you can look at on a thing, what exactly happened in 10-year yield, Treasury yield. If you look at it, 1989 market crash, and I draw this chart and I tweet about it. This one too. Same thing, whenever we try to touch the resistance, every time we try to touch the resistance, we have gone through market crash. In 1994, then again in 2000 dot-com bubble, we went through the big turmoil crash. Then same thing in 2007, 2008 market crash when we tried to touch the resistance. Then in 2018 when we had all 20% correction at that time also, 2008 when we touched the resistance, and now we poke through the resistance of this chart. And remember, this is downward channel. This is the yield. This is 10-year yield, Treasury yield. And we poke through that, and I think this Treasury yield is going to fly high. It's going to go fly high. Maybe it's going to be a real high. So
I heard this statistic. I have personally not validated it. It's just been thrown around, but I don't disagree with it. I just don't know exactly. But someone was saying that when inflation is above 5%, the risk parity, that we have traditionally seen in the last however many years between bonds and equities break. So you really watch inflation, and who knows if that BLS number was even real. So
guys, this news. Fed's Valor thinks we are at peak of inflation.
Yeah, but market not gonna tank right now. Today, tomorrow, market not gonna tank, guys. It's looking bullish.
Yeah, they against
this is all
people again.
Market is right now.
Tomorrow is options expiration, and so all those puts that the market makers sold, they're now buying back the shares, so they're creating sort of support until tomorrow, and not really because the technicals have changed.
Yep. There's been 11 days. They've been shorting. Now they have to recover.
Oh, and can I just mention something to you guys, because you guys are so smart, and I know you'd be interested in this. So I saw something, because it was last night or the night before, that really scared the bejeebies out of me, and I don't get scared very easily. There's this guy Zoltan, I'm sure you guys are all familiar with him, at Credit Suisse, who puts out all this stuff. And, he's always doom and gloom, blah, 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 blah. But the last thing that he put out about maybe foreign countries, decoupling their link to the dollar because of this crap that's going on with the yield curve, has me scared to death. Because I bet you there's a lot of people in this room who are hiding out in cash, which is U.S. dollars. And I would hate to see that happen. And also, with Russia, all those Russian bonds, I mean, who knows, if they don't make payment, who knows what's going to happen in the fixed income market. I mean, you just don't know, right? So There's a lot of bad news out there.
Yeah, Zoltan is a very widely followed analyst, and he's more or less correct all the time.
Can you pin it in the space for us, whoever needs it? Thank you.
Yeah, I'll try. Can I just direct message it to you, and then you can put it up, because I got to find it.
Sure, just message it to Josh or Sigma, and they can pin it on the space.
Yeah,
Thank you.
Whoever said that Zoltan is very widely followed, I've been reading his stuff, and I'm extremely impressed. But, I don't want to believe what he is saying in his latest note. He may be right, but I don't want to believe it, because it's really, really bad.
All right, guys, QQQ is trying to hit the previous day high, and that's the resistance, guys, okay? So just if anybody have any positions today, it's perfect time to take the profit and then get a little on side, because we are pretty much in the power hours, and market is looking super duper bullish. They want to go to the finish line probably.
So Josh, you don't think QQQs today with Vixen so low, you think we should wait?
I didn't get your question. You mean short or bearish or bullish?
Oh, well, you're saying it hit the top of the range. I'm just wondering, is it a good time to put on a short? I heard you guys earlier.
No. I would not, because remember options. We have to be. Sometimes we have to. What I teach here is we have to learn not to trade. Sometimes if you short, but if you long, then yeah, you need to just scalp it. But we already in the morning, everybody made money. Whomsoever were trading here, and we were long. We were long today in the morning, but now remember tomorrow is a Friday, and then the market maker can wishy-washy. Probably tomorrow can go both way and swing it, and probably lose the theta, because overnight if you hold in, theta will kill you. And then I would rather play fresh morning with the cash. If somebody wants to be a long or bull or bear, let the market maker decide tomorrow. But today, going overnight is the dangerous process for playing on a swing, playing swings. Any particular stock which are already flying high today. Everything is high. Amazon, Tesla, everything is high, and keeping them on overnight is like losing all the wealth you made today.
Yeah, thank you, Josh. You're very wise.
No problem. Thank you. I appreciate being here too. You are very, very helpful to this community. Every time you come here, you always give a good words.
Hey, Trend Trader. So you were talking about decoupling, and here's the thing. There was actually an article that came out last night regarding one of the Chinese oil companies, CNOOC, now they're withdrawing or looking at withdrawing from basically Western activities, like in North America, like in the British Isles, and anywhere where their assets could potentially be seized if there's ever a dust-up between China and the West. So it's not really that far-fetched. You can see a decoupling of liquidity between the markets. Not at all.
Oh, I'm talking about the currency.
I know, but that actually lies in, it's all part of the greater conversation, really. Basically, different parts of the world which are having challenges to the United States or the Western nations are moving away from dollars, moving away from a chance of any assets or the liquidities that they have being locked up.
And I agree with you about that, but I guess in my mind, I was thinking it would take a little longer and that it wouldn't happen like, I don't know, in the next month or two, right? It's really like, when is it going to happen? I was just a little surprised. But I will send the, if I can find it, wait, I'm a speaker. I should be able to put it up there. Let me go find the Zoltan piece, and so you guys can look at it.
Mm-hmm. I don't think you're surprised, actually, friend. I mean, anyone who might not have been nervous before, given how the West has interacted with Russia and seizing assets, it shouldn't be a surprise in the least. It should be a wake-up call to them at this point now.
Mm-hmm.
I don't disagree with you, Joseph. I'm just very surprised that he's making the call now. That would be like the Europeans saying, okay, well, or the Chinese saying, hey, this is how much we've said, how many, yuans to dollars. But you know what? We don't think the dollar is worth X, Y, or Z, so we're going to change our linking. And so, I mean, that's immediate. I was not expecting to hear something like that.
I totally understand that. I mean, I think it was also basically compounded in the idea now that, like the U.S., the West isn't even doing disbursements on basically equity, like disbursements of dividends or equity payouts to anyone who they believe is now unfriendly.
VIX is bottoming out.
Yeah, you see why Amazon shot up today? It's because they are charging that 5% surcharge on the sellers. That's right.
Amazon already charging like 20%, and now she said that we're gonna charge 6-7%. So Amazon is coming up on that one too, and probably everybody wants to pass on to consumer. And you know what, I tweet today also about it. Look, consumer, the wages gone up 5%, but then the inflation is gone up 8.5%, right? So basically, we got a big.
Not everybody got 5% gas.
Not everybody. Somebody got like 1%, maybe not.
Yeah.
But normally low wages, we're talking about labor, right? So if they got it like 5% average wage, that's what its numbers are, and the inflation is 8.5%. So basically, we got a pay cut. I mean, if you look at it, it's called pay cut because you only got 5%, but the inflation is 8.5% due to printing or due to whatever reason it happens. So basically, it's called pay cut. It's not a raise. It's not a raise. Yeah. So Amazon looking good right now. Look at that engulfing candle, man. Look at that candles. Looks super duper bullish. But tomorrow we don't know, man. It's looking bullish. It can go here too. They're gonna flush all the bears tomorrow also. But I don't want to trade.
Let's go one day at it. Tomorrow I'm not carrying anything for tomorrow except for crowd.
I'm waiting for tomorrow to enter actually, but maybe I will see. I want market to go fly high tomorrow. Then I will. Then I'll
jump on the shots. Yeah.
Then I will find some short.
Yeah. Today I'm holding on the silver. I got Coeur Mining CDE, and I bought crowd that I'm carrying.
I'm 95% cash right now. 95% cash.
Oh, mine is all commodities, man. I am riding the commodity train.
Yeah, I did not. I don't want to do. I don't want to do anything today. Waiting. Tomorrow we'll see. I would have gone long, but I don't. I did not. I thought let me go and just be pause. Wait.
Check out Bitcoin's flying because the industrials are flying. What do you think, Josh? Why's Bitcoin gone up?
Bitcoin, because market maker right now recovering their shorts, so Bitcoin is also gaining the ground. You just wait for next week. Bitcoin not going anywhere. I mean, if you ask me, I already checked before. I'll look at it. Chart
It's
is
going to flush all new buyers.
yeah, because most of the traders they don't have a experience, so they just believe in green candle and they think, oh wow, look at that, Bitcoin gonna go back, and then the social media goes, oh, Bitcoin is back and it's gonna go back to moon, right? And that's what all the headline creates, and then those people have 3 million followers, and they don't even, they said I'm in, I just put my $1 million look right here, and then people get happy because if somebody is backing by him billions of dollars, so he wouldn't mind putting 1 million and then take the money out, right? So yeah, right here it's looking good. I mean, it has a resistance right here, major resistance too. So you just remember, Bitcoin cannot keep going down all time, right? It also need to recover. People need to short and then buy. And
This is where DMARC indicator comes.
DMARC indicator comes.
I mean, Gopi and Josh, crypto's now acting not like a hedge. It's acting now more just like a normal investment.
No, but Joseph, you got to remember, we had a...
It's just overflow now, basically for growth cash.
No, Joseph, where did this all start? When Fed started printing, right? That is when Bitcoin started picking up.
Yep.
Fed
Now that game is over, guys. Now that thing is over. We are now heading into the compression mode, right? When compression mode happens, Bitcoin will compress. Remember that Bitcoin only people will, the last resources people would put money into is Bitcoin, because they are not security, they are not derivative, and bank institution cannot go there. Only retailer can go there, right? So that's why we put money. If anybody has a hope and thinks like, hey, this will fly tomorrow, but it's gonna take time. Everything is a money power, man. Look at that. We want to do gun control. Can we control the guns anywhere right now in this country? We cannot, right? Even though so many death goes around every state, and we cannot even do anything, right? Same thing apply here also. Bitcoin, politics, everywhere politics. There is nothing about politics.
A message. I hope it came. I'm having trouble posting it, so I sent it to you.
Send it to whom? Me?
Sigma.
Oh, Sigma.
Yeah.
Okay.
Man, Tesla took the roof. 1020.
Yeah.
Just to let you know, if anybody.
No, I'm out, man.
Okay. Now Nvidia is going little bit. But Nvidia does not have much gas, guys, so be careful. Is a 10 minutes power hours, market gonna go to finish line, or market gonna get rejected? Let's analyze it.
It'll go to the finish line.
Go to the finish line. I mean, daily chart, yeah, it can, man. This looks like it can go to 445. It can go to 445 and look like
minutes, yeah.
it's gonna go, because they wants to
Hey Josh, did you know Shopify announced plans to do a stock split?
Yeah.
Yeah,
Okay.
that was old news.
Yeah.
Mm-hmm.
You see how much that stock has fallen now?
It will split right now.
Tomorrow market will open negative, probably, and then they take it positive. So all the bulls will be flushed in the morning a little bit, and then they take it up.
Hey, Trend Trader, when you sent me that link, you went to go copy and paste the URL, right?
Yeah. Is it not coming in?
Can you? No. What you can do though is if you go to that same article on your phone, and instead of copy and pasting the link, if you're on an iPhone, go like to the bottom of your screen and do like a little up, like up arrow, or it's kind of like upload.
Yeah, there's something
and then
wrong
copy it
with the phone because it won't let me upload it to Twitter. Like my Twitter thing doesn't like come up. I'll try again. Let me try again. I don't know why I'm having trouble with this thing. I usually don't.
Do you have an iPhone?
I do.
Okay, can you access the article on your iPhone?
Yes.
Okay, go to the article.
Okay. Good. I have to find it because
And at the bottom, okay.
Hold on, I gotta pull it up because I gotta find it in this guy's tweet. And it won't let me. Here we go. Okay, so the
or
name.
just tag me in a tweet.
Yeah. Okay, I'll do that. That's probably the best thing to do. Okay. Duh. Okay. There we go. All right. And just so I don't have to go back and forth, can you tell me what your @ symbol is? Or what is is it just Sigma? I can't see both.
Yeah, at Sigma Investor 1.
Investor. I just tagged you. That was a smarter way to do it. Okay. You see it?
Yeah, it's pinned now, guys.
Okay.
So here, I'll read the article for the group. Lombard Street and Commodities, late last Friday afternoon. The following Bloomberg headline caught my eye.
The wrong
EC.
That's not the right one. Sorry. Okay, let me do it again. It should say like The Big Short. Sorry.
Oh, somebody's asking what's the indicator?
Oh, the DMARC one.
Yeah, DMARC one. The one which I put it in, I guess this one is, let me see which one it is. I gotta go to here. Tom DMARC count. Tom, TOM space D as in David, E as an elephant, space MARK, space count, COUNT. Somebody was asking on YouTube. That's the name. So if you wanted to have the right here, Tom DMARC count. Okay, that's the one.
Josh, I'm gonna tell you something.
Okay.
Okay, so that is the right one.
I had.
It says. Oh wait, sorry. Let me try again.
Josh, this morning I had $1,005 Tesla calls, $1,005 strike Tesla calls from Open.
You had Open? Oh wow.
I had 1,005 strike.
Oh, you had Open. I thought you closed it.
Or are you holding it?
Yeah, I sold it.
Oh, you're saying you're thinking about what?
Yeah, like that's what. Yeah, what I could.
Oh, the profit that you lost. Oh man, that's okay.
Yes, a would have, could have. It's like this.
That would have been a good one, eh?
No, what if market would have turned?
Yeah, that's what I said. Would have, could have, it could be one of them, and that could be disaster.
VIX now cranking up a little bit, cooking his head up.
Yeah, people gonna take profit now in the end of the day. 5-10 minutes, 5 minutes, last 1 minute people take profit. But market is looking good. Finish line QQQ right here at 347.65.
You guys want me to go through this article with you?
Yes, please.
All right, just tag you some. A lot of Zoltan articles.
The latest Zoltan, the Big Shorts will include the U.S. price level, shorting inflation expectations, shorting policy rates, shorting the curve inversion, and shorting some U.S. dollar FX pegs and the U.S. dollar versus the renminbi. Was that the Russian? What's that, ren?
Chinese.
What's the renminbi? Chinese. Okay, yeah. The Big Short, the rise of Bretton Woods 3, the new monetary world order that we've been busy imagining since the outbreak of the war, and the corresponding rise of the renminbi. 2, commodities. 3, monetary gold as reserve assets to upend the dominance of the U.S. dollar, and the exorbitant privilege mean a relative decline of the ancient regiment monetaire and its instrument, the euro dollar. Not a demise of the euro dollar, a relative decline of it, which should naturally give rise to a set of big shorts. The big shorts will include the U.S. price level, shorting inflation expectations, shorting policy rates, shorting the curve inversion, the yield curve has gone mad, the short and shorting some U.S. dollar FX pegs, and the U.S. dollar versus the renminbi, i.e., 3 of the 4 prices of the U.S. dollar, everything but par, see here. Wars and shifts in the global balance of power bring about shifting alliances, shifting trade relations, shifting priorities, and shifts in the monetary pillars that have been anchoring everything around us. It is times like these when revolutions and an abandonment of FX pegs happen, never telegraphed, always by stealth. As we move away from Bretton Woods to the Bretton Woods 2nd to Bretton Woods 3, it's rational to ponder whether China will revalue the renminbi versus the dollar, and whether Saudi Arabia and Hong Kong will abandon their peg to the dollar or shift weights to other currencies in the context of the basket. After all, if Larry Summers is right, and the Fed will be forced to hike to close to 5%, and we are right about the relative decline of the FX value of the U.S. dollar, why would anyone shadow the U.S. hiking cycle and crush domestic housing and suffer a spike in living costs due to a peg that no longer makes any sense? It's our currency, but why should anyone internalize the U.S. dollar's problems? If the bull market in rates is over, why should Bernanke's savings glut countries anchor themselves to a reserve asset that is now falling in value, rising rates, and hoard a currency, the dollar, that's set to fall in terms of purchasing power? Some things money just can't buy. The most valuable commodity is time, and that's something money definitely cannot buy. Money also can buy commodities in times of shortages, but countries can choose to revalue their currencies if they've been suppressing their value, or rethink their FX pegs with an eye to maximize the commodities they can buy in a world of shortages. Now, that's page 1. Okay, 5 minutes to close. I'll try to finish it by then. The current circumstances are somewhat reminiscent of the UK's struggles with the ERM back in 1992, when George Soros broke the Bank of England. The Preamble to the BOE's problems in 1992 was the birth of globalization. The fall of the Berlin Wall is widely understood to be the point in time that marks the start of the modern era of globalization that began in the 1990s. The German unification that followed the fall of the Berlin Wall was paired with massive fiscal stimulus and monetary restraint, which the UK and the BOE were meant to shadow as the pound sterling was linked to the Deutschmark under ERM. But the BOE could not follow the Bundesbank policies for domestic reasons. But the BOE and was ultimately forced to abandon the ERM. The pound sterling collapsed on Wednesday, September 16th, 1992, and the rest became financial history. If Larry Fink is right, and we are indeed witnessing the end of a globalization, I think he is right. Then the war in Ukraine marks the end of globalization, and the weaponizing of the dollar and the inflation that sanctions against Russia will cause mean that some FX pegs could come under pressure again. If the birth of globalization can mess with pegs, the end of globalization can mess with pegs too. But this time, in the other direction. In 1992, the issue was the BOE's inability to shadow the BUBA, and so it devalued relative to the ERM. Today, the issue is peggers' potential unwillingness to shadow the Fed's hiking cycle, to shoulder the risks, to being pegged to a reserve asset that's now falling in value, and a currency that will have less purchasing power. The risk today is revaluation, not devaluation, and a rethink of the core that peggers decide to peg themselves to. Peggers need to be careful, for under Bretton Woods III, beggar thy pegger is the risk, not beggar thy neighbor. Revaluations and the abandonment of the pegs that results in revaluations happen not from a position of weakness, but a position of strength, and are matters of statecraft. Statecraft is conducted by the very top, at the very top, not by central banks. In comments about Saudi Arabia potentially reversing the flow regarding U.S. investments, in the same way that we have the possibility of boosting our interests, we have the possibility of reducing them. As per the SPA citing, the Saudi Crown Prince suggests some potential disturbance to the status quo. Similarly, in city-states aiming for zero COVID, the last thing one needs is accelerating inflation and falling house prices due to imported problems that come from the wrong peg. Our currency, your problem, is about the rest of the world's struggle to procure funding and commodities in a currency that at times got very strong. Our commodity, your problem, is about the rest of the world's decision to rethink what the right value of their own currency is and what they're pegged to. Our commodity, your problem, is not about the rest of the world's struggle, but rather the U.S.'s struggle with price stability and with other prices of money. When FX reserves come to two tranches, liquidity and investment tranches, and when U.S. dollars are available on tap through the U.S. dollar market close, through the U.S. dollar swap lines, do you want to cover anything, Josh?
No, I'm good. You're just fine. Later on, continue.
Okay. Through the U.S. dollar swap lines and the FEMA repo facility. It's not very important to run with excessive hordes of FX reserves to begin with. When a wave of inflation and interest rate hikes are about to erode the market value of those FX reserves and the U.S. dollar's purchasing power, it makes sense to trim at least the investment tranches, which means selling longer dated treasury notes in a de-globalizing world. One moment. We're restocking, resource nationalism, re-aiming, reshoring, and rewiring of the goals. What you accumulate as reserves, U.S. dollars and commodities, and who you partner with geostrategically and also monetarily matter a lot. Revaluations are a risk, and some FX pegs are at risk too. To forecast the future, we need to review the past. For that, we'll use the four crises of shadow banking to frame our discussion. The pattern is bleak. The future does not look bright. Allow me to explain. The term shadow banking became part of our lexicon when the legendary Paul McCulley, the former chief economist at PIMCO, coined the term yours truly, then turned the term into cartographic graffiti. See here. But it was the framework that Perry Merling built around the concept of shadow banking that gave direction to my thinking about it and helped all of us to understand shadow banking simply as money market funding of capital market lending. Shadow banking is not a new phenomenon. Carry trading and money changing is something Jesus himself had to deal with when he drove the merchants and money changers from the temple. Shadow banking had three crises. During the post-Nixon, post-Volcker fiat money era, which are best demonstrated using Perry Merling's four prices of money framework. See here. As a reminder, the four prices of money are par interest and basis, foreign exchange, and the price level, or the price of commodities in terms of money. Since 1997, the shadow banking system has been steadily barraged by series of crises. In 1997, shadow banking was money market funding of capital market lending to Southeast Asia. And under the aegis of fixed exchange rates, Southeast Asia funded everything with U.S. dollars borrowed in money markets, which funded capital market projects underwritten by banks and finance companies until the money flows came to sudden stop. Then came a crisis, a funding crisis, and the crisis of the notion of par. That is a crisis of FX pegs to the U.S. dollar. There were no dollar swap lines to deal with dollar funding issues back then. An emergency liquidity assistance came in exchange for a pound of flesh. Emergency loans from the IMF for implementing the Washington Consensus. The legacy of 1997 was the global rise of FX reserves. Secretary Githner's money in the window concept to keep speculators at bay, which also seeded the Bretton Woods second system when China joined the WTO in 2000. When China joined the WTO in 2000, the global rise of FX reserves went into overdrive. Greenspan's conundrum got a new label of Bernanke's savings glut and got a new set of problems. According to an ancient Chinese proverb, to have enough is good luck. To have more than enough is harmful. As Paul McCulley reminded all of us about Minsky's teachings back in 2007, stability begets instability, and excess stability of long-term interest rates, thanks to China's FX reserve accumulation, has led to a house price boom and excessive accumulation of leverage in the system. In 2008, shadow banking was money market funding of capital market lending again, but this time the Imperial borrower within the borders of the U.S. The emerging market in play was the emerging class of subprime borrowers. The system that funded some subprime mortgages was built not around the notion of FX peg, but the notion that private AAA is the same as public AAA. As a journalist remarked back then, the supply of private AAA paper was growing like kudzu, and at the peak of the subprime boom, the outstanding amount of private AAA paper far exceeded the amount of public AAA paper. That should have made people think, but it didn't, and markets gorged on the private AAA stuff, minting trillions of short-term AAA paper to buy them, until it didn't. When the steep decline in house prices brought a sudden stop of principal and interest rates on Ninja and other types of subprime loans, private AAA became junk, and the funding markets evaporated. No income to pay mortgages was the same as no FX reserves to make good FX pegs. And the notion of par between bank deposits, between bank deposits and repo, and between bank deposits and money fund shares came crashing down. The cleanup to that episode gave rise to QE, and the lessons from that episode were enshrined in Basel III. QE was done to inflate asset prices to fight the threat of deflation, but it left a bad taste in the mouth of the FX reserve accumulators. China stopped adding to their FX reserves. Demand for their reserves, the Fed created via QE, was underwritten by liquidity coverage ratio of Basel III, number 3. In a humbling reversal of fortune, it was banks that had to load up on reserves. It was on reserves, not FX reserves, and they had to implement a consensus to Basel III, not the Washington consensus. The great financial crisis was then followed by European debt crisis, which was the genesis of the European version of QE. Then nothing for a while until September 2019. In 2019, shadow banking was money market funding of capital market lending. Yet again, but this time in the most unimaginable way. The emerging market was the U.S., which could only fund itself on the margin through the goodwill of the relative value RV hedge funds harvesting the bond basis. RV hedge funds bought treasuries, shorted the future, and funded the par in the repo market. Then the ON repo market, because that was the only place where balance sheet was unlimited due to the rise of sponsored repo as an arbitrage around the SLR chapter of Basel III. The Fed was trying hard to get out of QE as it conducted QT. It drained all excess reserves from the U.S. banking system, which was the marginal lender to the repo market, and hence to RV funds, and through the RV funds to the U.S. government itself. When money ran out, par broke again. The Fed lost control of the ON interest rate complex, and for a moment, the U.S. government had a little bit of a funding problem. We say the following, for it may be lost on the market participants and policymakers. Since 1997, we've been dealing with a series of money market crises that had either the euro dollar or the U.S. dollar at their epicenter, and where a different price of money broke at each time. Importantly, in each of these crises, the problem got worse and worse. The crisis was coming closer to home. 1997 was our currency, your problem. 2008 was our currency, our problem. Bank deposits, money fund shares, mortgages. the American dream. While 2019 was our currency, our federal government funding problem, which was the very last time we saw cracked to the notion of the exorbitant privilege, a crisis of U.S. dollar peg, a crisis of domestic dollars, a crisis of the bedrock government finance, the ON Treasury repo market, a series of worsening crises burning up the hierarchy of the dollar system, the Fed's liquidity injection into the repo market in September 2019 saved the RV hedge fund community of the Treasury's ability to fund itself. But the onset COVID-19 pandemic stressed the system again a few months later, and RV funds had to be bailed out through a gigantic QE program to be clear. Holy shit, it keeps going. You guys still with me? Everyone's awake?
Man, yeah.
We're here. Keep going, baby. Central banks ended up doing QE too, but to fund new fiscal programs, no other central bank had to step in to backstop to fragile funding structure to its own government. The leveraged bond basis trades that funded the Treasury, the pattern of three big crises since 1997 are similar. First, liquidity event, then a backstop at a steep price, and then lasting impact in financial markets. In 1997, a sudden stop, the sale of national assets, the FX reserve accumulation in 2008, a sudden stop, a fire sale of mortgages, and reserve printing, QE, in 2020. A sudden stop, a fire sale of treasuries, and then reserve printing again. Today, we have a dollar shortage in the commodity trading world, driven by shortages in physical commodities. In Lombard Street and Commodities, we explained the nonsense of not giving liquidity assistance to commodity traders. Today, shadow banking is money market funding of commodity trading. Commodity traders guarantee price stability, not central banks. And without the risk transfer provided by futures markets, and without a liquidity backstop to that risk transfer process, spot prices are at an extreme risk of spiking. Not to mention the risk of price spikes due to a sudden stop of physical commodity flows, or the risk of price spikes due to logistical balance sheet bottlenecks in the world of shipping. In an upcoming dispatch, we will take readers through the plumbing of the commodity derivatives complex. So for now, it suffices to say that unless central banks provide a liquidity backstop to the commodity traders, they will soon have to underwrite fiscally funded price control measures via QE. That wouldn't be good for the U.S. dollar, nor would it be a durable or credible way to underwrite the notion of price stability. The fourth price of money, and the most important pillar of the post-gold fiat money world order. If you lose price stability, then two of the three prices of money become a mess. The level of interest rates and the FX value of the U.S. dollar will suffer. And yes, you're seeing a lot of that. Look at OIS curve repricing and EM currencies, positive commodity terms of trade, rallying versus the dollar. In the context of the four prices of money, see here, which to remind include par, interest, foreign exchange, and price level. It's important to emphasize that since 1990s, we've been dealing with crises that had to do with par, interest, and FX spikes, which are all nominal variables that central banks can fix easily. You just pour money at the problem, QE, and the problem goes away quickly. The price level is a different ball game. You cannot print oil to heat or wheat to eat, or print VLCC or other things that will soon give central banks a headache and test the notion of credibility. The credibility of central banks as all-powerful protectors of price stability. Credibility about central banks' ability to police the price level supports a central bank's ability to adjust interest rates and the FX value of currency to serve the cyclical needs of the economy. In other words, structural stability in terms of price level enables tactical flexibility to deal with business cycles.
Are you done, Sigma?
Credibility in the context of Bretton Woods. This is an even broader topic. For Bretton Woods will emerge not only in search of new price stability anchor, but also in search of a new reserve currency. To shun a weaponized U.S. dollar, the credibility of the U.S. dollar has been damaged before. So once again, we are dealing with a pattern. President Nixon deciding to take the U.S. dollar off gold in 1971 was one episode of credibility loss. That episode, too, was driven by statecraft. See the Saudi Crown Prince's comments above, where President Nixon and Secretary Connolly, not the comments above, where President Nixon and Secretary Connolly, not the Fed chair, drove the decisions. The fiat money Bretton Woods framework that emerged from there was anchored not by gold but by the very promise of price stability. The Fed's credibility to be able to always deliver price stability from in God we trust and in the Fed we trust, that trust is now at risk. Credibility is measured not only in terms of central banks' ability to deliver on its promise of price stability, but also in terms of how dominant the state upholds the rule of law and the notion of open capital accounts in this context. Weaponizing the dollar and the euro dollar has further undermined credibility. We refer to settling the right value of a nation's currency and the right peg as a strategic choice of the state, hence statecraft. President Nixon's decision to take the dollar off gold was a strategic choice of the state too, as the weaponization of the U.S. dollar. It was not the decision of the Fed. The weaponization of the dollar equals a subversion of the state's monetary interests to the state's foreign policy interests. Money is hierarchical in the absolute sense. We usually think of money in its hierarchy in terms of instruments, prices, and intermediary, gold reserves and deposits, secured, unsecured, and FX swaps, central banks, dealers, respectively, not in terms of money and state, but it's now time to bring the state in its extra layer of hierarchy of money, and to rediscover another essential book from Charles Kindleberger, Power and Money. Do you remember when we all rediscovered Kindleberger's manias, panics, and crashes during 2008? I remember it as beginning required reading from Tom Giffner down to the last trader and analyst at FRBNY. Now it's time to rediscover Power of Money, for we now see the state exercising power that will ultimately harm money. The euro dollar, as we know it. OFAC is far more powerful than either the FOMC or FSOC at the moment. The state does what the state does, and the FOMC will have to clean up the inflation that comes next. The state power is destabilizing the pillar of the Bretton Woods system, the U.S. dollar, by trading risks to the price level. Once again, the White House and the Deputy National Security Advisor wield far more power over interest rates and foreign exchange rates than the FOMC. What would Charles Kindleberger say to all this? I do not know, but I eagerly buy the book, but perhaps short the concept. The legacy of the unfolding commodity crisis will be long-lasting. This crisis is another crisis of shadow banking, the fourth crisis of shadow banking, and the crisis of the fourth price of money. Recall that it is easy to deal with crisis of the first three prices. It is easy to deal with the crises of the first three prices, but central banks cannot do anything about the fourth. And without price stability, there is no exorbitant privilege or dollar supremacy. If Francis Fukuyama was strong about the end of history, so will be anyone who thinks the U.S. dollar will come out unscathed from all this. If control over the price level is lost, interest rates and the value of the U.S. dollar will suffer too. It's inevitable. The pattern of the crisis since 1990s is obvious. So the list of prices that these crises have tested so far, there remains one last price, the fourth price of money, the price level, to test which will be the main test of the dollar's post-World War II supremacy. The current crisis will test the Fed's credibility to deliver price stability. And as the theme of our commodity, your problem, suggests, there is a risk that the Fed won't be able to deliver on its price stability mandate successfully. Paraphrasing Herodotus, circumstances rule central banks. Central banks do not rule circumstances. Inflation is a complex phenomenon, and it has nothing to do with DSGE models. Free-flowing commodities and commodity traders guarantee price stability, not central banks. And deflationary impulses coming from globalization shouldn't be mistaken for central banks. Central banks' communication skills as anchors or price stability. Luck is luck. Luck isn't structural. Luck is running out. Central banks were lucky to have price stability as a tailwind. And when they had to fight crisis of FX peg, par, repo, and the cash futures basis, those were the easy crises. The ones you can't print your way out of with QE. But this time around, inflation-born shortages, commodities due to Russian sanctions, goods due to COVID policies, and labor due to excessive positive wealth effects, and a whole different ballgame. You can't QT or hike your way out of it easily. And if you can't, credibility gets damaged. A decline of the U.S. dollar is inevitable, and shorting U.S. rates. The U.S. dollar and some FX pegs make logical sense.
Mm-hmm.
The end.
Wow, that's a big one, man.
Man, you have a great patience.
You will become a good breeder for your kids.
Yeah.
Thank you.
Thanks, Sigma.
I look at half the listeners are gone.
All right, everybody, we can say good morning.
Good morning.
This is for Sigma. As your friend, today we all appreciate what you did. Two great guests. Your reading. I think it's something very personal. Your father will be very proud of you today. As I am.
Thank you very much, Bill. It means a lot.
Yeah, thank you. Actually, you did a good job. All right, you want me to analyze the chart? What exactly happening on SPY today? What happened?
Love you, Bill.
Guys, are you ready for today analysis? For the for tomorrow. So let's go to the daily chart real quick on a SPY. So if I will go back to the SPY right here. Okay, let's go to our bear wing. If you take a look at it, bear wing, we had this little resistance which I draw the line right from top to bottom, and we got rejected today right here at this price around 444 445, right here 445. Okay, but still we are bullish. If you look at it, this is engulfing candle. The red candle fits inside the green candle. That means we are into the bullish, not in the bull trend. Trend is still bearish, but we are engulfing right now, so we are actually bullish. We have little resistance. Tomorrow can break or not. Let's figure it out in 30-minute chart. So if we go to 30-minute chart, this is 30 minutes, and 30 minutes, if we take a look at it, I draw the resistance from 1 2 3 4 5 6 7 days, right? If you look at the 7 days line, is touched here, we bounced here, third touch here, we rejected, and then again we touched here, we got rejected right here. Okay, but again, now I need to analyze by 3 days. If you take a look at here, what exactly happened here, and then again we happen here, and now we happen here. So this is the scenario for tomorrow. Okay, tomorrow, let me get rid of this. So tomorrow's scenario would be this. We have the price of control line was third day was here, then we opened up, gap up here. Remember, we gap up and go because we did not, normally whenever the day is open, you have to make sure the day open with the price of control area, otherwise you can go back the market and test. That's what happened yesterday. The price of control line was here, and yesterday it gap up and go, basically S&P 500, right? And then we took a swing and went back to all the way to the floor, right? Now, but today market opened up right where we were here. We did not go anywhere. It just right there. So that's perfectly, there was no gap left here, and it perfectly flying constantly high. But remember, look at the price of control line, means we closed here. So price of control line started from all the way to the bottom, slowly grinding higher. That means the bulls and bear both agree to have this price accepted at 443 price of control line. Now tomorrow we have this resistance. If we break this resistance, what I think is this: if tomorrow we gap down, right, gap down, then market gonna go up. But if tomorrow gap up like this somewhere here, then market gonna go down. You follow? So I'm gonna keep eyes on that, because we don't want to have a gap up and gap down, either one of them. So that way we'll decide which direction market can go. These are just the technical analysis I'm doing. That doesn't mean that it can go, but I'm guessing because what market maker gonna play tomorrow. So based on the price of control line, right now we have little situation which is we have the resistance here and right here, and we have 200 moving average. So I will see tomorrow. Again, I repeat, I hope you got it. If the gap up, we open up. If the gap up, open up, then market will pull back some point of time to test this area. If we gap down, okay, if we gap down, same thing, it will go up. But if you open at the same place, at this place, then most likely it's gonna slowly keep grinding until this 200 moving average, I guess, which is 447. Okay, this is what I can think, but this is all invisible indicator I'm using based on this the market maker games, are right, because tomorrow option expiry, and most likely they're gonna do that. And as you all know, this is daily chart, S&P 500. I'll be tweet back, but those people who are live, they always know the earlier than the one who are tweet. So last 11 days market heading down as month end, and weekend option expires. This weekend option expires. This is the yesterday I tweet that this Thursday. So watch out the bear trap. So this what happened, exactly what we type. This is the invisible indicator. Okay, though is we are in bad trend, but I said it's going to be a bull because of that. And engulfing candle telling me that tomorrow will be a bullish day. We have the resistance, which is telling me might not be, but I don't, this is not important, this is important, engulfing, because that's the real pricing power. Price action telling me that it has a power. Okay, so just like that last time when this candle broke this 50-day moving average, and I said my market is super duper bullish, right? Same thing, and then next day, super duper bearish, and then market open up and gap up and go, and everybody thought, oh, market gonna fly high. Everybody was call bullish, and look what happened, right? So we want to be a little bit and we can need to analyze the market, how it goes, so that way morning when opens up, Sigma can print. All right, so that's the day of the market. I can take a look at the QQQ. I hope everybody is not sleeping, guys. I'm not getting you bored, right? Right? No sound coming out of anybody.
Not at all, Josh.
Oh, not at all, Josh.
I'm listening to you.
Yeah.
You're doing a great job.
We're here. Thank you.
We are here. I thought everybody fall asleep because Sigma was talking. Everybody fall asleep.
I read the whole thing for Trend Trader and she's gone.
Yeah, man.
No, that was so deep, Sigma. I have to rewind and re-listen. But thank you for reading that out.
Well, normally you can do in the night time, 12 o'clock, when you go to bed. That's the perfect time you can get. No, just kidding.
I have been thinking of reading it for like 3 to 4 days now. I think it came like 3 to 4 days back. I wanted to read it, but thank you, Sigma.
Yep.
Yes, it was so nice to read it. I got kicked out, so I came back in. I just got kicked out.
No, it's just Twitter. Nobody kicks out anybody. Just Twitter handle.
No, because of my phone, not you guys. My phone was not behaving.
Thanks, guys. We ain't falling asleep, man. We're listening.
Yeah. No, just joking around. Think though. Yep. So now let me analyze the QQQ, guys. Okay. So you at least we'll have a little idea about the QQQ. So as we know, all these W pattern went through, and then we have the bearish cycle going on this one QQQ, and we found the support here at this, and we have the resistance of which is 50-day moving average right here around 350. Just consider 350 tomorrow. Okay. So let's see tomorrow. I think market will play ping pong in between bear and bull to wash out all the bulls today, because today, remember, a lot of people try to be bullish also. So if they try to be bullish tomorrow, they're gonna wipe out them to also. Most likely, I don't know, we'll see. But this is all bear trap, and then tomorrow they might little wash out, but we will see if this 100-day moving average breaks and how far it goes to it. So if I go to 30-minute charts and look at the price of control line, I mean we properly bounce. If you take a look at bear, and we bounce with the proper steps on it, and we did break the. I mean, the price of control line is right here around 345. So looks to me bullish QQQ also, and we are our oscillator telling me we're pointing upward also. So most likely we are bullish tomorrow. Both S&P 500 as well as QQQ looks to me bullish for tomorrow. That's the analysis of the market for tomorrow, guys. Anybody has any questions? I can take the questions. Or we can.
Josh, not for the market, but there's another ticker when you're done with the market.
Yeah, anything, just fine.
CRK. It's another oil and gas play. Comstock Resources. It's an independent energy company. They engage in acquisition, exploration. So just going off of what Thomas was talking about, this one I had on my watch list. Just wanted to get your thoughts and analysis on it. Thank you.
Yeah, these are parabolic move. Whenever company has a parabolic move, I do not like to chase it because it's really quite a bit move. So understand their balance sheet, if I take a look at it, is 30-40 cents right here. So the price is fair at this based on this 50 cents. So let me go to CRK here. CRK, and if I look at him. Yeah, 6.7 time forward P ratio. And if you take a look at EBITDA, man, this company is minting money like 80% net, 90% net profit. So that's good. They're minting money, and their outstanding shares are 232 million. So that is little bit okay. That's fine.
How are they doing 80% profit? Oil and gas company, they don't have any investments?
Well, look at that. That's what he shows up here.
Man, something
they have
there, man.
reserve.
Like 80% profit is, what are they doing? Buying from you and selling to somebody else?
Somehow.
It's Gopi, that's a really good question, and that's really what I'm trying to analyze for a long time. But it's gone up so much, to Josh's point, that I'm scared to enter. But every day I look at it, it's going up another 5%.
Yeah. So
it's a very old company, like over like. I think it was early 1900s when this was incorporated in Texas. but essentially it has a lot of interest in oil and natural gas wells. So it's sort of
gas or
so,
oil or look, guys, okay, one thing remember, guys, if this company is into gas more or oil more, that's what you need to find out more. If it is in a gas, then parabolic move will accept it. But if it is oil, government does not want oil to go higher, guys. Okay, so there might be there might be any time where it can pull back and then you can wash out and you're gonna feel the pain. So if it is a gas, I'm okay with that. But if it's oil, then we gotta be a little careful because you are fighting against the big guns, and I do not want that. We can't go against them. So.
Man, I'm doubtful about that 80% profit, man.
No, yeah, these are all. Remember, we have seen that several times when parabolic move happens, and one day market maker decide, man, boom, 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 everything come down to here probably. So that's why I'm worried about people who want to jump in the bandwagon and they think they're gonna missing, and this is what happens. So I don't want to go. I don't recommend if somebody want to jump in. Yeah, it's your call, but I don't teach people to jump on a bandwagon like this parabolic move. That does not mean that they cannot go to $18. It can, but it's risk versus reward. When parabolic move, you do not want to risk it. There is another flight you can catch. Just look for a good flight. So.
And insiders are holding 65%.
Yeah, I mean, what was another one the gentleman told me about that Dell told me about it was the CRK. What was it?
That was CNQ, I think. Canadian Natural Resources.
Yeah, that is good. Natural resources is good when safe and sound, at least. CNQ was. He said there's a lot of gas they gave in CNQ. So that one is Canadian Natural Resources, right? Yeah, right here. So this one is looking good, reasonably good. Also balance sheet also good. 175 is reasonable price also. And they're making money also, and their forecasting is better too. So I would prefer this one over that one, because he said that is you can dive in due diligence before how much is gas. You need to find out how much gas, natural gas.
Yeah, it says the company has 6.1 trillion cubic feet of natural gas.
But man, you're telling somebody that doesn't know about the cubic feet what percentage of their growth is in their whole company. Right, we would not know. So yeah, what's your AJ, right? AJ, right? Yeah, AJ. So
yes, my speaker was muted and you were still able to listen. I don't know,
man. I got a magic wand.
Josh is reading our minds now.
Yeah.
No, we could hear, man. No, so AJ, you just analyze it before you jump in and they can. But
exactly. While we were discussing earlier, this ticker was on the watch list, and every day I've been seeing it. It's going on and I'm wondering. So, Gopi, perhaps you're absolutely right. It's that large reserves of natural gas. It's just propping up the stock price. But I'll do more research, Josh, and I'll bring it back.
What I think is this. What I think is another thing, guys, keep in mind. Okay, this is just my. I had to think from the market maker point of view. Remember, the guy was also telling he's a trend and he also like to follow those indicators and all. So based on same thing here, I think all these oil earnings are coming, right? And market maker that day, everybody who is bullish right now, a lot of retailers are right now loaded up in oil stocks, right? That particular day when the earning comes, and earning will be excellent, right? And they will dump that market maker. They will wishy-washy on that day. Keep in mind this can happen. I'm telling you, because they are all parabolic move. So before the earning, we should take the money and run. If anybody is holding, this is my analysis, but you can try with the one company, see what one company does on oil on earning. First earning, watch of any and see market maker are tanking or not. This is just to be a safer side, to be watchful, because you see parabolic great profit and then earning comes, and next day you wake up in the morning and carpet there is a rug pulled out and there is no floor. You can.
Yeah, no, that's a good point, Josh. Josh, if no one else has another question, I was going in and out when Thomas was talking about the indicator that he uses. Any thoughts on that? If you've ever used it, what does it really mean?
Right here.
Pretty darn good. I think it's a lot to worry about right now. the Delta variant I talked about at the top of the show.
Oh,
It's
your
gonna be across
friend
the
is
country.
here.
We had 85,000 new cases yesterday, and the sold-out debt ceiling negotiations, and the fact that the Chinese government keeps finding new industries to destroy. I think we've got plenty of reasons to be concerned. All right, as well as with you. For months, though, he's been watching.
I'm gonna bring the indicator. He is showing indicator here.
We kind of get in the NASDAQ 100, somewhat similar to what Larry Williams was saying. I want you to start here. This is a daily chart of the S&P. You can see that when the S&P approaches DeMarc's price targets, it tends to sell off. Pretty obvious, right? And that's exactly what's happened in early September and mid-February. However, he also has a thing called a 13-session countdown pattern that tells him when a rally is likely to run out of steam. We never got to 13 in September, okay? We never got to 13 in February. As a result, the declines were muted. Hey, by the way, same thing happened in June. DeMarc warned us that a major sell-off could be on the way. Market mellowed down hard a week later, but then it came right back because we didn't have the makings of a real peak. DeMarc thinks this time is indeed different. The S&P 500 blew through his price target at 4426, and his 13-day sell countdown is currently on day 12. This pattern says it's time to sell when it gets to 13, so what we're doing, obviously I'm trying to give this ahead of time, I'm not trying to give you after. So where do we go from here? Simple. The S&P needs to make one more higher high, meaning it needs to go above 4430 in this case, up only 7 points from here. That could be done. It needs to open above today's close. It needs to make a higher low than last Thursday. I know these are very complicated series of circumstances, but Thursday's closing high of 4419. That could easily happen tomorrow if the S&P rallies so slightly in the morning, as it has lately. If you notice, at 9:30, 9:45, 10, and then it hangs in there for the rest of the day. So that is a very threatening pattern, and I want you to notice it. Tomorrow's day 13. It's pretty much of a pivotal session. We're not done. It's not just the S&P 500. Now I'm going to have you take a look at the QQQ, the ETF that mirrors the NASDAQ 100, which contains the 100 largest non-financial stocks in the NASDAQ composite. This tech-heavy index blew through DeMarc's price target last week, and it's also on day 12 of his 13-day sell countdown. That countdown will go to 13 and fire off a sell signal the moment. Here we go. The QQQ closes above 369, up only a few points from here. So we're really close. If the S&P and the NASDAQ 100 both give you these sell signals at roughly the same time, DeMarc thinks it could get real ugly. I don't know anyone's thinking this. It's the first time this has been a real possibility since the bottom in March of last year. Of course, if he's wrong, there's a chance the S&P and NASDAQ could both give you a quick 2 or 3 day rally in a good news environment. Right now, DeMarc thinks a meaningful top is far more likely. Remember, these are percentage games. All right, how about the Dow? This one's really intriguing.
Okay, I think he's basically you understood, right? What he's trying to explain is same thing. So we're gonna do here S&P 500. Let's take a look at this parabolic move also. We can compare this parabolic one. It's been grinding higher and higher, man. Let's look. Oh boy, look at that. And this still has a room to go, look like, huh?
There still has room to go, according to the indicator. Is that the right indicator? There are many people who have developed,
Yeah, it is right. That there are different indicators, but Tom DeMarc, that's the Tom DeMarc count.
Yeah, that's correct. But you took it from community script. The indicators, right?
Yeah. Could probably.
Those scripts are developed by people.
So number 8, people do that, and it's available. But there's a bunch of different one too. I'll go and analyze it. But look at this is number 8 here, right here. So it still has a little room to go. What is the top line number and bottom 8 number?
Normally, I think one number is what. Maybe it was 8 and then it went to 2. I don't know.
Oh, okay. I'll do more research later on. But
and are these numbers the number of days?
No. It's some kind of. I think it takes into account so many things. Pressure, volume, and everything, and creates that.
Okay, I see. So it doesn't necessarily mean that if 8 consecutive days were green, 9th means something if it isn't.
After 9th, it's time to sell. 9 or 13 is time to
sell. So look here.
9 or 13 is time to buy.
Look at this was 13 here, right? Here was 13. This was 13, and then next day was, then there was a red, and then now is a reversal. So if you look at the 13, 12 and 11 right here, and then so why is 11 here? How this 11 come here? 11, 13 and 12, and then we got a reversal. Oh, okay. Today we got
the start of the day. I don't know.
1, 2, 3, 4 is a red day. They counting the red day, but they did count this green day also 6. Then this one 7. I'll do when I'm offline. I will do my research and we will come up with some better answer. But yeah, I will keep on mind.
Some back test perhaps.
Yep, absolutely, guys. So, we have the Syed, man. He's a champion. Syed, go ahead. Syed, you have something to say?
Hi guys, I've been listening and in and out. Could not speak throughout the day, but I found basic material ticker. I want your analysis on that. The ticker is FSM.
Oh, SFM.
F Frank Sam Marshall.
Okay, silver mine.
Yes.
Silver miner. Okay. Okay. I mean that it's looking great. It's looking really great. Chart is looking curling. You see the curling? So whenever curling something is good, and we are heading the resistance little bit here. But recently we broke the 200-day moving average. I like that way, and we might go to here, and somebody will take profit here at 466. Only thing, their balance sheet. This is teeny mini company. It look like a 9 cent. What happened, man? They are not making money. Even last quarter also.
This is silver, man. Silver mining company. Silver just started. They were beaten down, right?
Yeah.
They just started. So I also got into something called CDE, Coeur Mining. It's today. So so our silver play is good. Silver is good. Josh, can you look at if you're done with this? Can you look at CDA?
One second. Let me see how far we going here. Yeah, we had a breakout actually. If you look at it, this is the breakout today. So looking bullish. But 181. But I need to analyze the financial, right? FSM.
Yeah, all of them are losing money, man.
All of them are losing money. I like that, Gopi.
Yeah, man. It's a silver play.
Oh boy, nothing is available. No data. Oh, I hear you, Avani. No, they are not losing money. They're minting. They're profitable. They are making a easy 50% net profit. So they are making money. At least here, 50% net profit, good. And outstanding share 291. Yeah, financial is great. On just you need to verify all this other information anywhere on your any platform you use. Just look one more time, verification, do your due diligence. But yeah, overall it's look like it's bottom out, and this is how I look. If you look at it, bottom out, and this is the breakout. You see this? This is the wedge.
A gap on the upward. So at least this would fill 5.2.
I like it. This is exactly what happened to the Nugget when Nugget was $47, and I posted on Twitter a few months ago, January. And look at that now. Same thing in silver. Yeah, looking good. Long run is good. Long run, you need your stomach. You always have buy a longer time. Silver doesn't go fly high.
After this, just look at CDE, man.
What is it?
CDE.
T as in Tom.
C as in Charlie. D as in Delta. E as in Elephant. C as in Charlie.
CDE, right?
Yeah.
Mining, yep. Same thing is on. Yeah, right here, breakout resistance at $6, $5.29. This looking good too. And if you look at this, okay, same thing. Okay, this earning would be negative 193, negative 3. Okay.
Everything is negative, man.
Yeah, no, this one 194. They're expecting 194. They're going your revenue down. CDE.
I think if silver prices keep going up, they will beat it.
Possible. Let's take a look at it. Yeah, the other company is better than this because this company is making around 22%, 25% net profit, but other one making 50%. So that company would be a better off than this one.
Yeah.
Okay. 56 million. Okay, yeah, that's fine. Is good. That's why other one was like nice ascending curve, and this one is like this is look.
Yeah, because that CD is, I think it's a Canada based. This one is Argentina, Mexico, Peru.
Oh, okay.
This location also matters, right? This is North America. That's why they commands a premium.
Yeah, it's breaking out, but this will also go. It's looking good so far. Slowly will go. This one is good too.
What I thought, Josh, regarding this or the other one is that because basic materials are, grinding up nowadays, so it may be a good dip buy and hold it for a couple
These are
of
long.
months.
These are not couple of months, man. This is longer time. The silver doesn't move like that. Okay, guys, remember whenever it moves little bit, and then again it go. Look at this last 2 months. Where are we? Right? It's like that. So just if you are option player and you think I'm gonna go and mint money on silver, then just you are dreaming in a daytime. Okay. But if you have patience, you have portfolio. You can grow your portfolio in a different ways. There are different speeds, right? You can do covered calls. Same thing on here. You can buy silver. You can have hedge around different ways. So this is one of them. This is like a long term. It's something you can hold it long, and then you wake up after 2023 and you will see, okay, yeah, I got a 40% profit, 50% profit, like that. You follow?
That's why I bought the January 23rd on whatever I bought. So I have till January of this next year.
These are safe bet, long term bet. You don't have to keep looking every day. If you're gonna keep looking every day, it's pointless.
Yep, I agree. I added my GLD yesterday. I added VWEAT yesterday.
Look at IT. Okay, sorry, sir. Go ahead.
And yep, looking to add some more silver. But let's see. Maybe
look at the nugget breakout today. Look at the nugget. Still in the place. Yeah, I'm waiting for the pullback whenever market maker.
One thing is you shouldn't panic on gold and silver because they will come down at some point, but it is going to go. The trend will go up, so you have to have the stomach to hold it, and not worry about it. I know you had Oxy calls and you were really worried, but see Oxy. If you look at it at the end of the day today, you could have sold it.
Nope.
And made good money out of it.
Today, no. Today, look at down. He sold it on the top.
Today morning.
No, man, you're expiring tomorrow. He would have already wishy-washy all options today. If you would have hold it.
I closed mine. I made money.
Come on, man.
Oh, right.
Syed knows. Syed, you made money or you lost the money?
No, I was at break even.
Break even, right here. He sold it right here. Look. At 62 right when I was there to ask him to close the position. I mean, he was asking me.
You see that big green candle? I sold that day.
Right here on the top.
And lose any money.
Yep, right here. Yeah.
I think I bought at a higher price than Gopi. That's why I had to make that decision on that day. Otherwise, today that value is 50% down. So
yeah.
So today you see it again. It was at the top again today. I mean, close to the top, but yeah.
Yeah, I mean, it passed 2-3 more days, and it will hit 61.
That's why at least I'm glad you didn't lose money.
Yeah. No, I know that you got big opinion on that, but I just don't want to lose money. It's fine if I'm not making money, but I'll.
Good call, man. I'm glad you didn't lose money.
But I'm holding your calls regarding gold, silver, and it's green.
It is going to. I'm telling you, man. I'm telling you, come summer, China is going to invade Taiwan. that is what I am betting all my, metals.
Metal, yeah, something will happen probably. We just that's to China, but I doubt China will invade. Okay, Gopi. I doubt.
Josh, let's bet, man.
No, I'm not a bet guy. I don't bet, but I'm just telling you. I feel like that, but guys, you don't need to raise your hands if you want. If you have something to say, just go ahead because.
Hey, Josh, question. Can you take a look at Silvergate Capital? SI is the ticker.
That's the financing for all cryptocurrencies.
Financing. Right. Oh boy, it has a bear flag. Can you believe it, man? In a daily bear flag.
What about long term?
Hold on. Let me see.
It will go with Bitcoin.
I mean, this can be okay. I mean, this is not going anywhere actually. I mean, if you look at right here, we have the resistance at this price, and Silver Capital Corporation. What do they do, man?
Bitcoin financing, man. They finance all the Bitcoin companies, all the companies that are into crypto.
Okay, hold on. Let me see. SE, they don't come even SE. SI Silver Capital. Wow, this is expensive, man. 39 time forward P ratio. That's super expensive, and EBITDA is not there. That's why I gotta be careful, guys. Okay, on this one. Is this the one I'm looking at the right, man? Because they're earning.
It's SI Silvergate Capital.
Yeah. No, I got it. Silvergate Capital.
It's a newcomer. I think it's fairly new, I guess.
Yeah, 54 million is super duper expensive, guys. Be careful on this. This is scam. Be careful on. I mean, based on this earning per share 46 cents, and they are asking $127. Fundamental of the financial is super duper weak. Be careful. And bear flag is set up. Get out of it or whatever. But it looks. Stay away from this. Is risky flight.
Okay. The reason I brought this up is I was listening to Tom Lee, who's a regular guest on CNBC, and he's the one that brought this up and said it could be good for long term.
Exactly. So then perfect time to exit on this one.
When Fed start printing, that's when you can jump in all of it.
Yep. Right now, Fed gonna will be tightening for 10 years. Fed will be busy right now in terms of tightening. Right now, they got to unload. I mean, believe me, man, this whatever I see here, I like foundation. If foundation is weak, I don't want to go on any stock. I have learned the lesson. I don't want to stay in that. I would catch another flight.
Josh, what was the sector rotation for the past week or 2 weeks and so on? Feels like it was all over the place. So
yeah. So what happened is here today. Let's take a look at it. Sector spider right here. And today today everything is positive today, right? Only utility was little down today. But let me go to the Finviz. Finviz will give me.
I think for the last week it was dividend flex, if you ask me.
No, I will map charts group. Okay, right here. So if you take a look at the daily, today was highest player was consumer cyclicals, then technology, and then technology was the highest shorted for the 10 days, right? So that's why these are all short cover actually. Basic material is a pure play because it's huge demand. Energy was also slight okay, but these are all mercy player. Real estate, healthcare, they are all mercy players. Financial was been heavily shorted, so they are mercy players. And weekly, if you take a look at it weekly, because remember we have to also understand the part of the game, right? Market maker game. Market maker, when they try to take a toll on SPY, for example, right? When they short, they have to buy because option expiry month end over tomorrow. Options for the options, okay? Same thing, weekly options get over tomorrow. So what does that mean? Market maker, they issue options, right? When they are the one who issue an option, we are buying. We go to the market to buy to make money. They go to the market to sell to make money. It's up to them. It's up to us who makes the money based on their power. So you think you are making money or they are making money? That's the game. So you have to understand there is no free lunch anywhere, right? You are battling to make money, and they are also battling to make money, but they are seller, you are buyer. So that's what exactly doing. So they will set up a trap, which I discussed yesterday, and that's what is happening actually right here today, engulfing candle. So that's the invisible indicator I told you, and it's happening. So right now sector rotation is like, I would not go in any route right now. Tomorrow I'm thinking that this might be a bullish day, and I want this 200-day moving tested and everybody become bullish, and then I want to short from here, because I feel like in a couple of weeks, in a 2 or 3 weeks before FOMC, I think market gonna tank, and we'll see.
Hey Josh, I'm looking at PBR.
Hold on. Let me finish something little bit add on top, because normally all the FANG stock, right? FANG stock earning coming, every time the FANG stock they fly high, right? This time they're gonna take a tolls on those FANG stock, and that is a perfect opportunity for market maker when their earning comes, and they're gonna take the little air out of this balloon also. So for example, I have seen that in history, that when they want to take the air out of the balloon of FANG, the Apple, this is Apple, right? So you look at the Apple, where pre-pandemic where it was right here around $56 with the split, before split 78 like this, right? And look at the air in the balloon, right? So that time they will take the air out of the balloon, and all these bulls, they will be washed also on earning. This is my thesis of thinking. There is no fundamental behind, okay? So I'm thinking now, before FOMC, they're gonna wash. Why I think like that? Because last 10 days they were taking the air out of the Apple, they were taking the air out of Google and Microsoft. Look at that, all these Microsoft, and then look at this Google, right? Google, look at the drop like a waterfall right here. So they know that this is, look, pre-pandemic price was here. So they think this is a highly inflated stock. So they will take some air out of this here also. So most likely on those kind of earning, this is all guesswork, guys. When it is guess, you have to be very, very careful with your positions and all. But I like to always remember, the guy just came by, the hedge fund manager. He always what he was saying, he's playing with the market sentiment. He doesn't even want to look at the fundamentals. He just want to play with the market sentiment. So same thing, market sentiment telling me the market maker wants to take this one out. So that can be a play, but we have to, these are our indicators. We're gonna use as it goes, So that's what I think of the sector rotation, probably because this earning coming. Look, earnings are when 26th, right? So where are we right now? So next week, right? Next to next week, earnings are coming. So if you look at here, we are 13. Next week will be, next to next week, and then FOMC meeting start next week. So 26th, imagine these 25th, 26th, 27th, probably slaughter week. I think this will be a slaughterhouse, or maybe something. All these earnings will be like a bad market, and they're gonna take the air out of the balloon on these, and then FOMC meeting comes also after that. This is just the guesswork, okay? We will see. We'll see as the market goes by. We analyze by the chart. We're gonna see what another market is, how the winds are blowing, and we'll go like that. I don't know how anybody has any thought before I jump onto the question. Anybody has to say anything about that? What I think and what you guys think?
I agree, man. I think there is more downside. Enjoy the ride upside, but there is more downside coming.
Sigma master, or he's on the gym.
Yes, master. I've been here. I've been on my computer for 12 hours.
I got it, but
12-hour shift today. But no, I don't have any opinion. I'm taking it day by day.
Okay. Okay. I mean, anybody wants to say something, or I'll take the question.
Hey Josh, can you go ahead and I went and swung my JPM puts. Could you look over the financial and banking sector? And I saw that most of it was up in the after hours, but a lot of banks are going to have earning reports coming up this week.
Okay. So you want to what exactly you want to do now? You want me to look what?
Honestly, I was just wondering what your opinion was on the financial and banking sector.
Oh, financial and banking. Okay.
In terms of the other banking stocks having earnings.
Okay, let's do this. Let's take a look at it.
Real quick before you start, Josh, everyone have a good afternoon. I'll see y'all tomorrow.
I see, my man. Thank you very much, Dave. I appreciate, man.
See you there. Bye.
So if you take a look at 5 days sector rotation, 5 days where the money is moving, 5 days, look, real estate was down 0.67%, last week, total week. So they think this, but energy was up, consumer staple was up, so real estate was up. So maybe, the real estate is, the bank is holding, but bank, if you ask me, look at these banks, they are vulnerable, man, because right now institution, they're not gonna put any money. That's my analysis. Okay, this is what I think is nobody wants to put money right now in the bank. Only consumer think, oh, interest rate goes up.
Hey, Josh.
Yeah.
This just in, JP Morgan has come out and said that average deposits are up 13% and 2% quarter over quarter.
They're gonna always speak good about the deposit, but how about other things? We got to look many other things. We're gonna look. I'm sure people, if somebody can put a little deep dive into the bank and check, see what and all sector they have. You got to put, look, everything cannot Josh do, but you guys also put some brain behind and come up with some help. Would appreciate. And see where and all their weakness is, because banks, they are very smart. What are the headline to create? And
they don't expose anything, man.
Yeah, they don't. But
Can I play you guys a clip?
No. We understood that. You already said that. That's fine.
Also, the share buyback they've cut down lesser than 2021. So look at that too.
They will play a little card here and there to make the retailer not to lose the faith on their stock, because particularly their stock is highlighted today because of the earning, and then earning is over, the whole game over, and then they change their whatever they said, that they will just go back to the whatever they want to do, right? Anybody can change their games. So I don't trust, man. Their foundation is a big weak right now. Local, international, wherever they are exposed. Those who are trading in the market crazy, they can recover the money faster because they know what the dirty game to play and they make money. So, yeah. See if anybody can deep dive into their where and all, they are making money, losing money, which sector, when the banks are putting money into. So we'll see. Tomorrow we'll come to know more also.
11% increase in credit card debt.
Look, the debt is growing more.
Yeah.
That is growing more. So still we have a long way to go, guys. We have remember, with the FOMC meeting comes, they're gonna increase the interest rate 50%, and then slowly you're gonna see a market reaction. Then the quarter comes, and then the real impact would be the second quarter, because when the earnings comes and people will say, oh wow, we have a little this the credit crunch problem, that problem, risk higher. That will be big time, man. This war is gonna take a big toll. This war gonna take a big toll.
Hey Josh, I have a question regarding the 401k, or I know many people among you have experience of it, but I just started putting my money into it about an year ago. So question is, they provide me a list of funds where I can select and put my money 100%, 50% of the contribution. And the way you need to look into it, which fund you like, is their distribution of the portfolio. So some are like 60% technology, 5% material, 10% finance, something like that. So there is a mix of stock and bonds. And there are purely stocks, there are purely bonds, and there is intermediate where there is a mix of both. And I found many of those, like Fidelity 500 and like those, that they have 60-70% technology stocks in their portfolio. So I need your guidance on which one should I select based on, like, you see technology was going down, so my portfolio is now red on 401k, but it doesn't matter because it's a long-term investment. It would be green at some point later on. But my concern is, if a fund is allocated 60% to the technology. Is it good to invest in such a fund or what?
If you ask me, my opinion is technology will be the most inflated. Why? Because market maker think these are the people who have a lot of money in their pocket. So let me go and shake them out a little bit and get the air out of the balloon. And that's what they're gonna do when they want to shrink this balance sheet, when they want to hammer down this economy, and where we can create the more credit crunch and create the money crunch. That's where they're gonna go. They're gonna hit harder where the monies are. So the money people invested money into 2020, 2021, where technology. Everybody was bullish on technology. That's where the monies are parked. That's what many people say. Hey, don't even keep your money in your account. Also, when you make money, you take the money out of your account. If you keep it there, you're gonna trade and you're gonna lose. That's why. So market maker, they know exactly where the monies are. They have all the paper trail. They can exactly pull the money out. So for me, technology is everybody, every retailer technology. Every retailer is on technology, and that's where they are hitting hard. And now slowly, little bit on energy also, like oil. Some people are in oil also, but EV also, technology also. But technology was a heavily. Everybody was on technology. So now they probably go harder on those side, little bit. So I would be a little cautious, because my only what I'm thinking, and I'm very closely monitoring this economy, and this economy is worse than a previous one, right? I mean, this market is going to be, if it is the can of worm opens up, and if that happens, we could have a big problem. And I think it's just a slowly happening. It's gonna be every quarter, and now based on my analysis of this chip making company, those will have a bigger trouble, because this neon, if there is no neon, 50% Ukraine produce the neon. So then if there is no neon, then what happens is we have a bigger shortage, because Tesla cannot deliver the regular car. I'm not talking about pre-order car of Cybertruck and all. No, I'm not talking those cars. I'm talking about regular cars. They are not able to deliver for 9 months. No, not 9 months. Now 12 months. 12 months, right? So if you want to order your regular car, and Tesla cannot deliver for who already ordered before 8 months, I'm talking about 6 months already finished, and still they are not able to deliver the car. That means there is a big time trouble. And then Elon Musk comes in and say, hey, I need to go and mine. I need to go and do, I need to start mining. So that means, look at the frustration. And he said that too. This quarter was the toughest quarter of this whole time. That means the money power cannot help, because Ukraine is already washed out now in this war, and then when you want to manufacture the semiconductor, you need neon, and neon is the highest producer. Ukraine is the highest producer of this, and that's why China locking down also their factory. NIO, they're locking down Tesla. Then Ford also say we locking down. GM also locking down. Why they want to lock down? The big guy knows better than you and me. So we cannot be hopeful just because, hey, look, market it now, support found, chip conductor, all SOXL and NIO, and not NIO, NVIDIA and AMD. But if there is no production, country is a huge demand and production not going to be that much, then we will have a trouble. So that's why all these earning, second quarter and third quarter earning, those will be vulnerable, guys. And then you're gonna see all this market turmoil. Because if you cannot sell the car, the guy wants to buy the car. He has the money to pay, but if there is no car, right? That's what's happening right now. It's same thing applied to different everywhere. Everywhere is applying. It's not only car. It's many places applies to chip making. Even appliances and all.
Syed, if I were you, right? So right now, what sector you should be picking is you should be going into defensive in your 401k. So I'll tell you what I did in December, right? I have a 401k. So in December, I pulled out everything. Okay, I waited for 3 months, to get in. So by end of March, we had that tech rally, right? That's when I got into tech. I went into tech for 10 days, took it out, took everything out, went into defensive. So now I am riding the defensive sector. So instead of that, if you're not active, I would say you should don't go put anything into bonds right now, because bond yields are going up. But there will be a time when bond yields will go down. That's when you should be in bonds. But right now, I think you should split between maybe tech sector, tech sector you should be lighter, and then defensive sector and dividends, all you pick those sector and equally distribute it there. That's my take on that.
Okay, let me tell you that as I mentioned, there are purely fund allocated to bonds. So this is what you are saying not to go.
Right now, no.
There are purely fund, purely stocks, mostly domestic stocks, and there are intermediate where there is some stock, some bond. So right now, my automatic investment from the employer is going into that as a not aggressive, not defensive too much.
See, that's what right now I think the terminology has changed. When they say you're not aggressive, right? What they do is they position you into more bonds, which is more riskier right now. I think there is a big paradigm shift in the way those things work, because initially they used to say you should have a 60-40 portfolio, a 60% in stocks, 40% in bonds, and I think that is more risk as of now, and this is going to continue until bond yields don't move up. So you got to be really careful, and I know many of the companies, they have those default funds like 2045, 2035, with the year that you retire, right? And then what they do is they balance it out, because they think of longer term. Like eventually it might work out well, because at some point in time bond yields will go down. Things get bad again. Fed will start printing. Bond yields will go down, and then the bonds will take off then. But as in this environment, I would not put a single penny on bonds.
Okay, so I have at least three categories in stocks. One is large cap, mid cap, and a small cap. So each one has their distribution among technology, health, industrial, material, energy. I don't see defensive, the one you were talking about.
Really? Like the ones that play like the utilities, right? They are the defensive ones, right? They pay a good dividend, and everybody needs utilities, and they'll do good. So the ones that have more weighting on those sector, you can invest a little more heavier on them right now, and then the ones that ones that you feel not so okay, you can spread it between them.
So yeah, I see that there are some that just putting 0% on 2.5% utility, which is, I'm telling you, the one which has 28% technology and 2.5 material, 2.5 utility.
Right.
So I don't think this would you would recommend, right?
No, it's not a recommendation of any.
No, we should look for the one which has less contribution towards the technology and more contribution towards the utilities and energy, right? This is what.
So I'm an active investor, right? I keep changing. I might change within 15 days. I might change within a month. I keep moving in and out. I don't have any issues. Remember we had that COVID crash. I sat out of it. I got lucky. I pulled out, because when Donald Trump was there, I knew that stock market was not going to withstand that. I pulled my 401k completely out of it, and then I came back after the crash. So I got lucky there, and this December also, I don't know, touch wood, I got lucky there too. So I play with like that. So that's why, but if 401k, I think you should keep it for long. Do not sit out. Never sit out of 401k. You should be there eventually. If you look at S&P 10 years, it is going up, and this might correct at some point, but the destination is the sky. So do not sit out. Put something, putting it, don't, and forget it.
even I'm 10% down from my cost basis, I'm not worried about it because I'm not planning to take out this money out of it anytime soon. So I know it would be more than what I'm putting in it. But what I'm planning now to, because I learned from this group, Josh, that where is the balloons are, where the strong growth is, what really matters in the real life. So I start looking towards the energy, materials kind of a sector. And you saw I start investing in GLD, silvers, and consumer goods product. So that's what I'm trying to do on my 401k as well.
Absolutely.
Sayed, this is Gurdeep. Let me give you a little description, right? So you can do a small thing. You can so there are ticker for all those funds which you're selecting. Okay, so this is how I used to manage my 401k. So if you look at Fidelity or any other like Paychecks, so whatever the fund they offer, so there is the underneath ticker for that, just like the store ticker. So go and add to your portfolio and keep monitoring. So you'll get to know how that fund is performing. So if you see that it's going too much down, right? So that's how I used to manage very actively those funds. Okay, so maybe that will going to help you. The way we track Google, Apple, same way you can track your funds in Yahoo Finance or any other portfolio, right? So wherever you're managing your funds. So just observe anything and then put your money. It will be much easier for you. And till the time you are not sure, so there is another option where the money will not change, right? It will keep as it is. So that I think that option is money market. So there where money will not change anything, it will going to be remain as it is. So that's the safest bet if you think the market is so much volatile.
See, the other thing by keeping into cash, what you're losing is those dividends. Because 401k, like if you're like, for example, if you have heavily utilities and stuff like that, you get more dividends and you might lose out on that, And if you can't time the market properly, it's going to be a pain. So I would suggest keep putting in. And like you said, right, you are bullish on energy, you're bullish on materials, you're bullish on utilities and stuff like that. So anything that you have more weightage on that side, I would have more of my money going there because I want to reap those dividends too from those ETFs.
But Gopi, and thanks Gurdeep, I think that's a great way to keep track and switching between different funds because I just looked at based on your idea. I copied that ticker, pasted on my Think and Swing, and I saw the trend, where it is heading to. It's at the resistance, it's, whatever it is. So it's a good idea. I appreciate it. To Gopi, I try to look for those funds where these things are more in their portfolio to select the better fund. But I basically failed to do this because most of the funds that my employer or the 401k is providing me is having technology like 20, 40, 60% of technology. I don't see this much percentage on utilities, on materials. I don't know why there is no funds like this, or it's not usual to have this much portfolio on energy or utility side.
I think you can even talk to your fund manager and see if there is a way that you can invest in those.
No, they gave me a list of 20 funds.
No, but just it's a good idea to just send an email out to them or call them and say, hey, we know you can talk as though you know the market very well. I want a fund that is like to be safer. I don't want heavily weighted technology. You can talk and see, or you can talk to your company HR and see. There is risk in the market, and that's probably one of the way, and they might change it.
Sayed, let me ask you one thing. So it may be easy for you to understand. So if this is one of the company account where you're maintaining all cash, all 401k, then you don't have much option because they offer you 20 or 25 odd funds, right? But if there is any dormant account where you have left that company, so then my suggestion will be put that money in traditional IRA. So that way it will be having more option for you to manage that money actively.
I see.
But one thing, Sayed, human beings are really emotional. So what is going to happen is most of the people, right, once they invest in 401k, they normally don't look at it. And I think that is a blessing in disguise. Because what is going to happen is, remember that COVID crash, right? Imagine you're monitoring that your 401k and your stock got 30-40% hit. Many people take it out, and then they missed all that ride up.
Yeah.
You should have your 401k in such a way that it is always invested, no matter what, because eventually you are going to come out good. Because that is your retirement money, that is what you wanted, that's your nest egg. It has to be invested, and the markets are in such a way that the government is in such a way that they want everybody to retire happily. I mean, at least. So if you look at the trend, 10 years, 50 years, 100 years, decades, SPY is grinding up and up and up. There are intermittent falls, and if you fall for it, then you're screwed. So just be careful. That's one reason I don't want people to monitor it all the time.
No, when I feel that there are options to do so, and when last week we were talking about bond yields and so, so I checked my portfolio distribution. I feel like I have almost 50-50 of them stock and bonds. Then I realized that maybe I should discuss and switch my investment targets. So I would dive in it regarding the portfolio, but in a longer term, I know you guys came through a long term on these investment. Which one is good in a longer term? If I look at 30-35 years from now, large cap, mid cap, or small cap?
See, if you look at it, it's the large cap is the Apples, Microsoft, the Googles, and it. Mid cap is maybe something like $100 billion below is what considered as mid cap. So the companies that are there, so I think you might be even good by investing in technology, because over the after we get with this crisis, right? This crisis is going to end someday or the other, right?
So
it might be choppy.
Syed, just one small suggestion, right? If you look at one of the greatest investor of all time of history, Warren Buffett, right? He made money out of 2 shares, Apple and Bank of America. Keep it simple. And he gave the shareholder returns a decent amount, right? So that's the history. So you can take a look at the history, right? How people are managing the fund. So BRKB is one of the example.
Okay. No, let me tell you my recent talk with my 401k company. When I told him that this is what I see, so he advised me it's nothing 10% down, but long person after 30 years it would be like 50% up as a journalist.
I agree. And it's better not to watch it. Just put right now what you can do is you can size it accordingly. Right now the ones that are like defensives, right? You can size it. You have more on the defensives and lesser on the the heavier technology side. And as things improves, right, you can switch it back. But and still be staying there and working out as you go.
Yeah, so I think the similar advice he gave me that maybe you need to, for example, if I'm putting 5% of my salary into it, then he said its market is down, technology beaten down. So keep increasing your investment to make it break even earlier than you should be with that 5%. So he said if it is down, but you believe in it, I mean, the way they distribute it, then start making 6% contribution, start making 7%, so that you would have more shares at lower price.
Yeah, cost averaging. Yeah.
Back, you would cover up quickly.
I agree with that. Yeah.
Okay, so I would take it like this as a conclusion that technology would come back 1, 2, 3, 4, 5 years. So whatever opportunity I would have to buy it at a lower price, I would grab that opportunity, and I'll try to find maybe stock for now instead of bonds. So maybe I'll switch between, from blunt to purely stock funds. So this is I took it away from our conversation. Cool, man. Thanks everyone.
Josh.
What's up, man?
I'm looking at ticker PBR. I want to buy the put for April 29th for the strike of $15. I've been checking out their chart, but I'm having a hard time deciphering it.
You want to short this petroleum?
Yeah, we would talk.
No, man, I would not short.
We would look at that one.
Okay, thank you.
Mm-hmm.
Who else was in that one? In the group?
On this one?
Was it Jupiter?
No, somebody. I think. No. I think Joseph. Joseph or Dell. One of them. I don't know. One of them was somebody mentioned about it. Yeah. Next. Anybody has a question?
Hey, can you check COP, ConocoPhillips? How is the technicals? I mean, sorry, fundamentals.
COP, ConocoPhillips. Yep. These are. Man, look at the beautiful chart, man.
That's ConocoPhillips, right? It's a good company, man. They are into midstream transportation, pretty good. So they'll transport gas through pipeline. They're pretty good, man. Today I took at the end I took 105 call for May.
Wow, this company would have a great man earning, huh? I'm telling you, man. These people they're paying good 49 cents, but yeah, earning some COP. Let me see. COP. Okay. Forward P ratio is 9-10 times. That's fine. That's good. Revenue $46 billion and the EBITDA is 20. Man, these people are making 45% net profit. That's good. And then debt is 20 billion debt versus 7. So 1:3 is good. Not bad. If they're making profit, then debt is fine. That 1:3 ratio. The only good bad about is 1.3 billion outstanding shares. Insiders are not no insiders are holding. That's the negative point. But share outstanding is 1.3 billion.
It's a big company, very big company.
Yeah. I got to mention the negative, positive points. That's it. But overall, based on these, based on the earnings, based on their forward P ratio, and based on this, probably I would give 9 out of 10 on this company. It's really great, and they will perform well because I don't know why they are low. They deserve to be go up. They deserve to be go up at $100 because look at the P ratio. I show you garbage company. Their P ratio 20 cents. Their stock price is $300. This company are expecting. They're expecting 293. Remember $2.93. Look at here. They achieved 229, 227, and they are now say we're gonna achieve more. If they can achieve this number, these stocks deserve to be way higher. Product, what exactly the product they have? I mean, let me see exactly what product it is.
It's an oil gas.
Oh, oil, but how much is we need to, okay. Then you need to see, man.
It's a transportation, oil gas transportation company.
And Josh, it's one of the Buffett famous portfolio company.
Okay.
Yeah, he also keeps his.
Yeah, then this is good. This is transportation, right? This company will mint more money. Why? Because everybody now we need to transport more here to there to here. The gas transportation and all they need worldwide.
An example of like the MIT students. I mean, is this a game or what? I mean, these guys were able to do very well in like the Las Vegas blackjack, and how could you not? That's the greatest odds at the poker table. But I mean, what examples do you have?
I didn't get your question.
Like you're coming from the East Coast, Miami, you're coming back from, trading with your partner.
Doesn't sound like he's talking to us.
Well, let me mute him. All right, go ahead next.
Yeah.
Hey, one more thing I want to tell. So let's say somebody want to bring a 401k to people like Fidelity and all. You can still keep putting in the funds. It's not that you cannot keep. Okay, but I would not suggest to put directly into the stocks for 401k. Better to put it in funds that you think you have more options. Okay, let's say you have a dormant 401k, move it to Fidelity or something like that, and you will have more options to put into.
That's game. Yeah, I mean that works out. Right? Why wouldn't you do that, you know?
What's up, John?
Hey, Gopi.
Yes, sir.
Hey, do you have any pensions or any pension funds or anything? I had a question regarding that too.
No, I don't have.
Okay. Yeah. Let me DM. I have something I need to ask. Can you? I don't know. I'm not able to DM you. To you.
He might need to accept.
Okay. What it's invest, right?
Invest cost, yeah.
Okay. I'm driving actually, so right now.
Drive safe, man.
Okay. Next, if anybody has a question. Man, uranium is still flying high.
Oh man, that's beautiful, man. I'm up 200% on it.
Nice. Tech is Tech is flying high. HCCC is flying high today. BTU flying high. AMR flying, breaking out. Man, look at that. Woo. RRR going good. ARLP. Oh wow, that's good. Nugget today had all materials had a breakout, man. Material and energy was all breakout. Look at the EQT, man. It's like little straight line. UQ this company, man. Look at that. Look at the chart. Very rare you can find. Like, look at this breakout when we set up here. Since then it shoot up like a shooting star, straight to the moon. $26 to $48, $42, man. This stock jump. Wow, what a breakout, man.
Hey Josh, can you check MP Material?
MP is a very teeny mini company, $99 million revenue. The problem with this company is, look, $99 million. $99 million you can buy 5 cars. That's why. It's too teeny.
Okay.
So there is no much hope on it, but I can analyze it for you in detail. So $99 million.
Ticker MP is 9 billion.
9 billion there. Hold on, let me see MP Material there. Balance it actually, how big it is. So look at that,
we looked at it before. They mine rare earth minerals, and they supply a lot of minerals actually to the companies that make the chips for Apple and other EV manufacturers. And they also have a lot of rare earth minerals in stock, like in their stock holding, so that they're like a hedge against inflation as well. Remember I said I bought them at like $30 last year, or in 2021. They're a good stock.
So the forward P ratio is 43 times. So based on this, and their revenue total yearly revenue is 330 million. And if you look at their EBITDA, the profitability is high, so that's why they are good. 208 million. Their profitability is almost like a 65% profitability. So that is good side on that one. Share outstanding 177 million. The debt is not that bad. total cash in hand 1 billion, so they are good. Only thing is the forward P ratios, asking price is little high. They need to increase their revenue higher, a little bit higher. So it's $40-50 range stock is I don't think so anywhere going until unless they're gonna go and increase their productivity or increase their revenue. They need to increase it more, because in this market people cannot pay 40 times. So, but I mean, material, everything is expensive nowadays. So any other we can look, we can compare any material company, we can check. But this one is 43 times, so it's like little outrageous. So I would not enter at this price. Whenever market pulls back, just put a trigger, and whenever it pulls down here around 40, and then you can ride back to 60 and exit. 40-60 game you can play.
Josh, it went to 60 and came down to 50. That's why
I don't know what your plan. You long term, short term, holding, not holding, or
short term only. Just a swing from 50 to 60 kind of range.
50 to 60. I would not go, man. It's $45. Okay, so any other company any other company we can compare?
I need to check.
So for example, if you ask me, look this Vale, but this company, I would believe, look at this pullback is far better. Why? Look at this balance sheet. I'm gonna show you. You're gonna blow your mind.
No, I mean, if you think that way, FCX is there, copper is there.
Yeah, so FCX you want? FCX, let's take a look at it. FCX is world famous. Everybody's gonna jump in and look 14 times. How much? 14 times forward P ratio you're paying on that, and that they are asking 45 times. So it's all pure pump and dump. People, every retailer knows MP only. They don't know FCX. We create celebrity. We create brand. But if you take a look at the balance sheet, MP is only $99 million their EPS. I mean their earning, and over here they're earning. Look at that, $13 billion. How many times big billion? Look at that, right? So this is but FCX. Let me see FCX. FCX is right here. This forecasting what? 6.2 billion B as in boy, and over there 99 million. So how many times, man? Look at that number. So these are big company. I would like to go with the bigger company than small company, because outrageous price, forward P ratio. You paying 14 times on FCX, and you over there you paying 50 times. You gotta always look how much you paying. And I keep giving example. If somebody want to sell you the Nike shoes, you're gonna pay $100, $80. You're not gonna pay $10,000. That's what you're gonna happen right now, and that's why MP. Look, market has a price, guys. Everything is price. Like when you go and shop around, when you go with your family and in the mall, and somebody you want to buy a shirt or trousers or t-shirts, you're not gonna spend $500 on a t-shirt, right? Say, hey, we're fair. If it's branded, you're gonna pay $50, $60, or if it's non-branded, $15, $20, or $10, like that, something like that, right? But outrageous price is not accepted in this market. So otherwise, what would happen? There will be a rug will be pulled, and there will be no floor underneath. So I always like to. So don't look at this pullback. Look at the valuation. Is this company worth it or not? That's how I see. Otherwise, I can show you so many stock like Facebook, PayPal. Somebody wanted to buy PayPal today, and I also said no. I don't feel good about PayPal, even though it's cheap. But there is no valuation. Why would I pay 30, 40 times? Same thing here. Material we think, but why would I pay 45, 50 times value on it? I understand pullback, but these were pump. This is pump, and then people, the retailer don't have the knowledge, man. They just simply go and blindly go, and then market maker dump, and they make money. So I would stay away. I don't know, man. How did I say? Is that's the answer you wanted, or still?
No. I'm fine. Thank you.
Mm-hmm. Sometimes I feel like I'm watching people dream. Like you're putting the clothes and.
No, nothing. Play that, nothing. I was just mute. That's all.
Okay. Yes. I need to entertain people, man. Okay, otherwise they'll get bored here because I'm too serious. Everything is not, man. Okay, never mind. Well, anybody else has a question? Sounds good, man. See you. Take care. Thank you for everything today, man. It was a great pleasure with those guys.
Yes, I think today was a great day.
We need to tag those people, and we got to tell them too.
And,
Sigma, next time if anything happen, if they can put our space live onto their profile, that would be a great. If next time they can do that, like, you know what I mean, like, you know, hey, we're gonna share your and you're gonna share ours, like that. So for example,
what people do is
we'll talk offline. I can send you information what I mean to say if you're getting late.
Okay, yeah.
Okay.
But anyways, just to cut things short, today was I think today was one of the best days as far as information, and just, you know, we traded in the morning, and the information and just the community aspect was great today.
Yeah, I
loved it all.
We should all be in the green today, all of us, man.
Yeah.
I did not trade anything today, but yeah, everybody was fine. Everything was great today. It's a wonderful day.
I just seen the space overall, like everyone that came and spoke, and we all learned, and, you know,
Yep.
It was great. Everybody have a great day, and I'll see you guys all tomorrow morning, and that's good.
Hey, Josh, the reason why I was asking about MP is it broke out that level, 50 level, and went to all the way to 60, and then came and is trying to test the 50 level. That's why I was asking about the MP material.
But value is also important in the market, right?
Yeah, definitely.
That's right. So I look at the chart, I agree with you, but is the risk is there based on the chart, but based on the value is the risk there. That's what I mean. If you want to play pure play, and if you want to jump in the bandwagon, but what if doesn't bounce, right? If you want to play day trade, you can do day trade, but we got to see at that time. Right now, I don't want to go overnight. I will not go overnight on stock like that, because you're paying little expensive price. Whenever I look at it, I always look at the when I want to go to sleep with the position open, then I need to look at the financial foundation and how much am I paying for it.
Okay, got it.
Yeah. Yep. Next, if anybody has a question. So I think we went through everything today, and I guess we call it a day. If anybody has a question, I'll take it. If not, then we can call it a day. So we guys always we are always live. If somebody who's new here, we are always live morning 9:30. We open up the stream on video on YouTube, as well as Twitter video live, as well as Twitter Space live, as well as Discord live, YouTube live. Everywhere we are live. So people have questions, you can type it in on YouTube also, as well as on Twitter, Discord, and I normally try to go through and help you guys out if any questions on it. Okay. Oh, I have some questions on YouTube, so I'm gonna go through. Actually, I forgot to look any questions on it. I think this video covers what result. Okay. Like, please analyze LAC. Okay. Okay, a lithium play, right? So lithium was heavily pumped, and then the dump. So what happens is, when it comes to this stock, look at this right now, perfectly oversold, and then it bought back, and now this shorted, and market makers are covering back. So I'm not bullish because diversion is this, and the only reason is, look at their earning per share is -9. So do you know what is their how much they are making money? What is their revenue? I need to know that. There is no data. When there is no data, I'm not gonna trust anything, because this is pure pump and dump. Their EBITDA is -$50 million right here. That's what it says. That means this stock deserve to be $10, $5 probably, just a little bit based on this. I'm just telling you. But if somebody pump, yeah, continue that pump. But I will be not part of this based on the financial whatever it shows me little bit. It doesn't have any data right here. Look at this, no available, what is the revenue not available. I need to know the numbers, right? I need to know the earning per share not available. So if there is no data, it be very difficult, and I do not want to go blind. That's what I teach everybody. Stay away from going blind, because we think, oh, this is lithium play, everybody social media lithium, and then they dump, and this is all pump happens. We need to know the anything, any stock you want to buy, is bottom line is money. Bottom line is money, guys, no matter what. And that money comes into the finance. You buying because you think is worth it, right? But so that why. But we don't look at the financial. We look at what social media is speaking. Man, stop. I would not invest money into just based on one indicator. I like to use financial indicator foundation, and that tells me that, hey, financial is weak. If the financial is weak, I'm not gonna go at that. Everything is priced, right? When you go and shop around anywhere go in the mall, and somebody try to sell you something, whatever you like, would you give? You go to Home Depot and somebody try to give you a 2x4 the plank, 2x4 wood plank. Normally they go for $1, $2. Somebody say no, it's gonna be $10. Would you be? Then the house, to build a whole house will cost you about $1 million, right? Just like that. So we have to analyze that same way. So everything is price. Syed asking me about Zim. Zim is right now testing, because Zim, they don't want to go anywhere. Is $55 is testing support right here last 4 days, and I'm also watching that little bit. I'm putting my position on that based on the support. So I think I'm waiting for the earning. So right here. Yep.
Hey Josh, are you still short on Neo?
Oh yeah, Neo is a little longer time Neo short, so maybe. But I
knew you were swinging it. I just wasn't sure if you were still in it with the move made today, or whether you got stopped, or what you're looking at on Neo today.
So I want Neo to go a little bit higher so I can short it, because I know that Neo is a market maker. They have to recover right now. So there was some profit today morning when opened up. It was a great one actually. I had a 5-cent profit, but I did not take 5-cent profit. Is 5-cent profit? Something was there. I don't recall. But there are June or May month puts, which are 20 cents. It was 25 cents. But anyway, I posted that one also. So if anybody wanted, now probably would be a little cheaper, 15 cents or 10 cents. But I want this to Neo go tomorrow, because right now Thursday, Friday market makers are right now little bullish to recover all the shorts. When they shorted, now they are buying back. So I want Neo to go at 21, 24. If that happens tomorrow, so I'm 95% dry powder right now on my everything. So I am waiting for tomorrow. If market goes up higher, then I want to short. So I will take a little position on this one, but I'll wait. Let's see. FSMs, yeah, we already went to Syed, I think. Okay, check COP. We already checked the COP. Okay, COP. Hi Josh, will tomorrow be bullish? And if it is good time to buy SQQ, I am bearish, and tax next week will be FOMC. Yeah, I am. No, next week is not FOMC. FOMC is in 4th of May. Okay, but next week I think all the earnings start slowly. So those stocks probably will be vulnerable. I mean, I gave the idea. So we'll see about that. I don't want to anticipate too much, but I am bearish overall. So I'm gonna go a little longer period of time, because remember QQQ, somebody shorted $8 million. They put it in 5 minutes, shorting QQQ. So they are those $8 million. They know something. So we're gonna wait for that time.
When will we know about the interest rates?
Whoa, hold on, GT. I have to write one at a time. Hold on. 1 second. I'm going through YouTube, guys. Okay, so hold on a second. So that's why we're gonna wait. I'll wait on that FOMC. We will replan everything tomorrow. What plan should be, but I'm thinking we'll see how things, how whatever the options would be at that time. Tomorrow I'll analyze it. I'm not gonna rush. What I teach here is never rush. Do not want to rush. You can make your feet wet with the one option, and then feel like see how it goes and stuff like that. Don't go like today I bought a Zim or few calls, and then keep going little bit, and like that. Even if you have to pay a few bucks more, that's fine. But if you get your feet wet, but don't every day. Keep watching, see how it's doing. That's how it's supposed to be. And don't go all in. So yes, that's what I think. What do you think about MP? It is rare earth material. Stellar trades. It is about rare earth material MP. I understand that, but there is everything is cost. If it is a rare earth material, why their balance sheet is not that great compared to other company, right? Bottom line is financial. What is the $100 value, $200 value, 300? How much money they are making? They are making, compared to other company, they are making less money. Their profitability is less. So if their profitability is less, and I just compared with two companies, so FCX and MP Material. MP Material is $99 million, nothing. That's very teeny mini company, teeny, very tiny. Tiny is big word in this industry. So that's why it has to be billions of dollars. So I can't just go by because social media everybody talk about MP, and that's why everybody know MP, right? So, but valuation wise, MP Material is too high, and I think I've already went through. I'm sure you saw that video. I mean, or if you can roll back, you can rewind the tape, and you can see that. Has been an uptrend. Yeah, it was uptrend on it. What is uptrend? What is this stellar? What do you ask? MP Material. Yeah, so the trend can be these. These are a market maker. All the retailers pump. But bottom line is value. How much am I paying? I'm not gonna pay MP Material. I told you, right? MP Material is 50 times, 43 times. 43 times is high value, and their only revenue is 330 million. So it's a tiny company, and valuation is high, 43 times. Normally is like 14 times, 20 times. There are many companies you can find so cheap. This is just the retailer. People like that. That's why. So I don't like to, because if I see, this is what I think. Oh, if I buy here and I have a hope that hey, you're gonna go back to 60, and what if this go back to this? What happened here? Look, it went here and then dump to 30, right? Same thing here. It went to $51 and it dumped to $24, right? So that can happen here also, because I can see that stock is expensive. So I would not go long like that, because for me I need value. I need to buy something which has a proper value. I don't want to pay extra, and decent price I am willing to pay. Otherwise I'll catch another flight. Okay, I hope I'm not against any stock, guys. Whenever I explain, I just whatever my feelings are, that's what I express. Now it's up to you how you take it. Yeah, Heavy, how are you, man? You have a question? Heavy, any question? Okay, if no question, then we can let me see in a Discord. Before Discord, no question. Okay, alright guys, then I guess if people have the question, I'll take it. If not, then we. Oh, okay. You.
Hey, George.
Yellow.
George, look at ORLY.
ORLY. O'Reilly. Yeah. That stock is super great, man. But but parts, man, is
Yeah. So like remember what they was saying, right? If ethanol gets added to the car, right? They will need more parts and
look at their
more
EPS.
the car will there will be more service and maintenance required on cars.
Low float stuff. Yeah, this one has a low float, guys. Very, very low float. ORLY. So it's a great one. ORLY. It's ORLY. Look at the float. If you see, you're gonna be amazed. 22 times. Look at this price is 22 times. It's cheap, right? Why? Because look at the share outstanding. Only 66 million. That's why. So this company prints money, you just slowly keep paying. The earnings are good, the demand is there. Yeah, all these.
You see a bull flag for tomorrow?
Tomorrow bull flag?
On the daily.
Yeah, I'm checking. It's setting up. Kind of, but we need to see if anything pull back. Not tomorrow, because this kind of look like, because it's a flag setting up, it can break out tomorrow. It can break out tomorrow. Maybe
Hey,
tomorrow.
Josh.
What's up, man?
What's up?
What's cooking, man?
What's cooking, bro? Yeah, just chilling. Market's closing. Ghost Rider, what's up? If you're there, Ghost Rider, that's my friend. Ghost Rider, he's cool, man. All good.
Yep.
Yeah. So the ticker that I was looking at, obviously, my name's YOLO BTC. I've got a lot of money in miners. I'm just buying them at these levels anyway. But I'm also building other positions. At the minute, I just got a ZIM, ticker symbol ZIM. What is shipping containers? The price is it's got quite a high dividend yield, and I just buy call options against it. And I run it up. The last wave it went up, I run it up. It's dropped back down. I'm gonna probably buy back calls on that. Run it up. Buy it out of the money. But I just thought I'd. Also, I can't trade SPY or any ETFs. So all just chilling, just building positions.
Yeah, long term. SPY, be careful, because theta. So long term you buy, you good, safe on it. Same thing on a ZIM also. Just buy a little bit longer time. So just in case if market maker hold these positions a little bit longer, you try to be a little safe. So yeah.
Yeah, that's what I do. I don't increase the contracts. I always, especially when the price dips down or comes down, I always like if I spend £1,000 on contracts and the value is $250 now. Now I might buy 4 more contracts and extend the date. It's just nice, So yeah. Just that chilling.
Yeah. Sounds good, man. Sounds good.
Yeah, always I just have it in my head, I just have a visualizer. The lower the price goes, I need more money deployed there. And that and then obviously I got my long-term contracts.
Yeah.
What are always it's always more value. And then like if like say for example I have $2,000 worth of contracts, long-term ones, I always try to get like $150 premium, a month. I sell the short-term premiums out of the money. So hopefully, once the positions move in my favor, I'll be collecting higher premiums and chilling. That's all.
Yep. That's good. That's good.
The markets have come onto your phone, and everyone's here to play. The property to play these games are. Everyone's trying to snap them up. Everybody's trying to figure out what the value of something is. This is the game. So everybody's trying to position themselves.
Yep. Sounds good. What's up?
How's your day, man?
Great. What's up, Anil? How are you, man? How was your day, man? I remember you today. You were
So
busy.
busy with the calls and whatnot.
I figured. I know you must be busy, but your CCL was great today. And I thought if you want to take profit or not,
Yeah, I took yesterday as well profit.
you took yesterday profit.
Yeah, I mean I was up like a couple of hundred, so I sold yesterday.
Okay. CCL today fly good. So
Yeah, I have AMD calls and I think I'm only down 10% on the AMD calls.
oh, AMD, yeah, AMD right now good, and tomorrow probably AMD will be great. So if you want to exit tomorrow, that tomorrow you might get some opportunity.
Yeah, but I sold in the morning MRNA. I had 2 calls.
Oh, mRNA pop right today right here.
Yeah,
They,
I sold for profit though.
That's good.
Calls.
Mm-hmm.
And I have a bigger portions now Starbucks, AMD, and Nvidia.
Starbucks. Oh,
Yeah, for May 20 calls.
What is the Starbucks symbol?
SBUX. SBUX.
Mm-hmm.
I heard Starbucks always has a high PE ratio, innit?
SBX.
What's their growth? Do they have any growth though?
SBX is good company, but I don't know about the growth.
Nah.
I think it's a bit like, you know, look, Coca-Cola, yeah? Back in 2000, it had a PE ratio of 40 times earnings, and in the following 20 years, it returned 3% a year, bruv. You know, so I mean, you know, getting these high PE ratios, I don't know, man. You know what I mean? You got, I don't know about that, you know.
Yeah.
But obviously, short term, it runs up. You make your money. It's all good, isn't it?
Yeah, my calls expires on May 20th, so not for a very long time. But
yeah, he just doing cover. Basically, the SBX bottom out, right? So market maker they might cover now, and it might go a little higher. Maybe tomorrow you might have a profit.
Yeah.
It's too much oversold.
I bought it around 150.
Whoa.
My average.
Oh, 115.
$1.50 call.
Oh, call. No, I'm talking about SBX. Okay. I was talking about the price, total price looking like $80 right now. But
$80.
Okay, that's fine. You just take the money whenever an opportunity arises. That's fine. Just everything cycle.
Nurse, can you put your DMark there and see if you have a 13 or a 9 there?
Okay.
What is a DMark?
That's an indicator, man.
Oh, okay.
Okay, so it's around 8. Number 8 comes out.
Oh.
Yeah.
Guys, what do you think about, like, you know, obviously first the speculative stocks drop first, and then possibly the big ones. You know, obviously Apple's had a big run up. What do you reckon? Like, any good opportunities anywhere? What do you reckon? I know John Deere's gone up as well. John Deere. So anything that you think is like overextended?
Wait for FOMC. You will get everything for cheap.
FOMC. When is the FOMC meeting? Is 4th or 3rd? Let me check.
I think it's 2nd.
Oh, 2nd.
So May 2nd. Okay.
Yeah.
So we should probably exit a couple of positions for that meeting probably.
Hey, when will
May 3rd, 4th.
Oh, 3rd, 4th?
Yeah.
Oh, okay.
What event is that? Can you explain? I'm not sure about that.
Fed meeting.
Fed meeting where the FOMC meeting is, and in that they're going to raise the interest rate. When they're going to raise the interest rate, market goes through the credit crunch, and they're gonna announce the balance sheet.
Especially tech, right? Because it's it relies on low interest rates.
No, not relies on low interest rate. Interest rate goes up. Every sector who has a debt, they have to pay more interest rate because interest rate goes higher, right? So when you have interest rate higher mortgages, they have to pay. When somebody wants to buy a house, they're gonna pay more interest. So everything will be vulnerable.
So we need to find companies with high debt and short them.
Yeah. So the FOMC meeting begins Monday, May 3rd, and the results are out May 4th at 2 p.m. ET.
Market will market will play early. Market will react early.
I agree.
Market will react early because this time everybody has a confirmation that what's going to happen. So, but market will do at that time. Market will react opposite on that particular day or something they will do. But my feeling is this, Gopi, and I think I heard, if you heard me, they gonna all this big tech earning, they're gonna tank those because they think it's too much balloon. But and then FOMC comes and they're gonna everybody will become bearish and they're gonna take it little bit up on that time, just like how they are doing today.
Yeah, and then they'll say, oh, 50 basis points is already baked in.
Baked in.
Baked in, yeah. I think, all of the market, I think 50% of the market is all on Twitter, We all discussed, we all do it like that.
Yeah, it's all baked in, man. It just needs a reason either to go up or go down, and they'll generate a reason.
Yep. All right, guys. I think we call it a day. Anybody has any questions, I'll take. Otherwise, we just call it a day, guys. I got to go then. If no questions.
Thank you, Josh. Thank you very much.
Thank you, Gopi,
everybody in the space.
Josh. Look at the chart of ITSI.
ITSI, okay. ETSY, ITSI, okay. Man, I think.
Good man. Today, Tommy Thornton said that they are going to raise prices for ITSI too, right?
Yeah, so everything he likes is oversold. So ITSI has been oversold. So you bought a perfect, even though ITSI the EPS is fine. I mean, you look what you are doing. You're going against the odds, right? So you will be winner. Don't worry. But just take the money whenever market creates the opportunity. That's it. So you picking at the bottom. I like your research. You buying at the bottom. And market will create opportunity, but if you hang in tight long and become greedy, then they're game over. Because ITSI is expensive. ITSI, you gotta be very careful. ETSY, hold on, I'll tell you right now. ETSY, then let me take a look how many forward P ratio. 30 times, so you're paying little bit, okay. They are making money too. They're making 20% net profit, but that's the past history.
They sold a lot of masks, man, during COVID.
Yeah.
Check that out. Look, it's a $3 earnings per share. The share costs 117, and the forward PE ratio is less than this year. Like the PE ratio is going. Is it going down? Look,
no, that's fine. 30 time PE ratio is little bit. It's okay. He's gonna just play right now. So he found the support. He just bought it today. I think it'll be fine. Just whenever you get the opportunity, tomorrow, day after tomorrow.
It's the name. This ITSI is a name, innit? Everybody knows it. Sometimes it's like that as well,
Yeah. My wife used when like last year, right? She bought so much stuff in ITSI. I should have bought when she was active on ITSI for $50 or $60. I think.
Yeah. Sometimes the name runs like Spotify is a company. They don't make money because everybody knows Spotify. They buy it in their apps. They say, Spotify is the future. So they buy it all at the same time and it runs up.
Yeah,
man,
exactly.
but unfortunately, everybody is on Twitter and nobody buys it, man.
Hey, Twitter, I liked it, man. I always make a little bit money on Twitter. Always. Whenever
the thing is, it's not what you buy. It's not what you buy. It's where you buy it. If you buy Ford at $9, you're okay. If you buy it at $24, you're not okay. It's where you buy it.
Yeah, I understand. Yeah. Twitter is going down, right? So probably Cathy Wood selling all stuff.
Well, right now they're recovering their short. So Twitter is still holding. There's a gap here, but people are watching their premium right now. People were bearish on Twitter, so market maker they're holding the holding the nerves for everybody to wash out their premium for tomorrow.
Yeah, but the problem with Twitter is they don't have to way to monetize it. It's pretty hard.
Yeah, but they don't have. But we are on Twitter for hours.
But that doesn't matter, right? What matters is company's profitability.
Yeah, maybe who knows that CEO Parag.
You can't take money from the people. It's like a WhatsApp, What can you make out of it?
Yeah, who knows? Parag might turn around the boat.
Because Facebook will say, we'll give you, if Twitter are charging you for it, we'll give you the same facilities for free. Leave Twitter, come here. You know, everybody is hungry for people, you know. Even though we're free people, even though we give them no money, they're still hungry for us.
I have Facebook account, but I don't even log in. I log in only yearly once or twice.
Yeah, right. We don't log in.
Yeah, but this is us. We're in a bubble, though. We're talking in an echo chamber. Nobody uses Twitter. Only market people use.
No, not only market, but Twitter. I love it. I mean, why I will leave some other?
I love it, but none of my friends use it. They will use Snapchat and all these other stupid apps.
Yeah, I think this is mostly Finwit in Twitter.
Yep.
Yeah.
Okay.
Look at the last thing, man. SIG SIG jewelry company.
SIG. Oh yeah, it was oversold and it is now reversing, and they're earning per $5. Wow, their earning is high. EPS dividend is good. Their their revenue is going down now next quarter. That's what they say. So that's why the stock is going down. Okay.
Okay.
Yeah, they say they're forecasting low, but based on this is still is good by the number. But let me see SIG. If I look at here, has a resistance, guys. Okay, so just little be careful right now. Let me see. But the forward P ratio is 6 times is very cheap. The company mints money. Company is making almost 15% net profit. 15% net profit on it. That's also good, and the float is very low float. So, oh wow, this is good, man. Just play with this. Continue. This stock will go to $81 some point.
Yeah, I have 60% up on my 3 calls.
Okay. No, good. Looking good, man. This one is good, but there's a resistance, guys. Okay, right now is a resistance. Tomorrow is a day to take money and run. Take your money tomorrow if you see positive.
Okay.
And then come back later one, because probably it can pull back. There is not always, because last 5 days, 1 2 3 4 5 days constant. Tomorrow will be 6th day. Okay. Guys, I got to go.
Okay, me too.
All right, guys, I have to wrap up now. Okay. Thanks.
Yeah, all right, man.
Bye.
Peace.
Okay, thank you, guys. Bye everybody. Thank you very much. Thank you for being here.